a hole in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Monday to you both.
Hello.
Man,
Hola, everyone.
That's a loud one in the ear. The good morning.
I know. I feel so professional. I got my in-ear monitor. Good morning, live from Tampa. And
You guys deserve to finally look like professionals after all these years. You finally deserve it.
Ah,
both of you.
yes, of course.
why? Where are you, Mr. Bat? What is going on?
I'm at Evanston Hospital right now, waiting for my granddaughter to be born. I'm in the waiting room. I'm going to have some guests come in from the waiting room, people that have been here the
If
longest.
you could just have a line of single doctors come through.
I can do that. I can do that for you, Vanetta. I can do that for you.
Look, here's the inside scoop. Anesthesiologists, okay?
Oh, that's
Okay.
a good one.
Yeah.
They're not as busy as the doctor.
Yeah.
Yeah.
I've got a good friend who's an anesthesiologist. He did my colonoscopy. We became great friends right there on the table.
Omaha.
We've kept up a great relationship. I will have him help and assist pick out the most eligible anesthesiologist for you.
Thank you very much. So do you hand out cigars? Do they still hand out cigars when babies are born?
Oh, I didn't know that was a thing.
Impossible to find. Impossible to find. You cannot do that anymore. And if you find anything, you may be able to order, if you think ahead. I mean, I know you have 9 or 10 months to do it, but if you think ahead, you might be able to get the candy gum cigars. But real cigars anymore that says it's a boy, it's a girl kind of thing.
Yeah.
Yeah, you really got to prepare for that. You can't just go. There's no more neighborhood cigar store. Like even the one in Skokie closed, Nick.
Oh, really? The one,
The tinderbox.
Olivia or something? Olivia?
Yeah.
Something?
Yeah.
That one closed?
Yeah.
Oh, that's...
Now everyone just hands out oat milk. That's what's wrong with this country. I'm just kidding. I don't know.
So are we going to get the world reveal, a baby reveal, live on camera over there? Are they going to drop it in your basket like this?
Sure. I mean, they're inducing at 8, so I think it's going to be a little bit late. Probably be like, I don't know, afternoon-ish.
Okay.
And I'm sorry, how many times have you been induced? You're like, you don't know, dude.
Oh, he's been reading all the baby books. It's the first time he's read in 30 years. So
Yeah, how's your cervix? How's your cervix, Bat?
I'm 2 centimeters.
Do you also get cramps too? Do you get do you have pain?
The sympathy pains?
Sympathy?
I'm having a little bit of sympathy pain. Actually, last night, my wife, you would have thought she was giving birth the way she was staying up all night, pacing, not sleeping, waking me up.
But that's how moms feel for their daughters. That's because she knows what it's like to give birth, and she's just worried about her own baby.
Yeah, I was there for all the births, too. I know what it's like.
Okay. Well, I wish Mom good luck today.
Of course. Yes, absolutely. Knock on wood. You got a little baby girl coming, so it'd be
amazing.
I don't know. Haven't had a girl in a while. It's been it's 32 years for a girl.
I love that she's a Sagittarius. Got that Sag energy. Love that for her.
Yeah.
I'm just hoping we keep both those babies away from the tasty servitude. Maybe they'll do something else.
Probably not.
The rest of the Batista clan has been here for a million years, so
I'm just waiting for Vinny.
They're not made for anything else.
No, they're athletes. They're athletes.
Well, Rob, I mean, he pitched for IU, so
Yeah.
I mean, you might have something there. And the little guy Tristan, we taught him how to check, so he's good. We got him. He'll run around with a stick and he says go hockey, and then he comes over and checks you. That's all he does, which is good.
Is he excited to be a big brother?
I don't think he knows what's going to hit him.
Yeah, he's probably not going to enjoy it much. in the early
from experience, right? I mean,
in the early parts, yeah, I'm sure.
You were 16 months apart from your sister, and this is going to be about a little over 2 years.
Yeah.
So say 26 months or something like that.
I don't remember that part, but I enjoyed the torture part, the part where I tortured her from age 7 to 14. Yeah, that was fun.
7 to about 24.
7 to about 32. 7 to about 32.
I like how it just keeps expanding.
Yeah, that was fun.
I mean, whenever he needed a quick little pick-me-up, he would, torture his sister.
Yeah.
It made him feel a lot better.
Yeah.
It was good. Like a mental health
tough day at school. Let's beat up Gina for the afternoon.
I don't think that you could take Gina.
Well, it was much more even at that point in our lives.
Yeah.
She just didn't know. She didn't have like the fire, strength in her.
She didn't know. She didn't know.
Yeah.
She could have taken you back then.
Yeah.
She just thought that girls didn't do that.
Yeah.
Bad.
Too funny.
Anyway, so that's been my night. My night has continued through this morning. So I'm here on 2.5 martinis and 2.5 hours of sleep. So
that's a lot for a skinny little biatch like him. 2 martinis. That's how he goes to the bar late night. It's like 9 o'clock. He's had his 2 martinis. He's feeling loose. He's dancing around a little bit.
We had Chandler. We went out to dinner. We went to you can't bring a 2-year-old to EJ's. Like I wouldn't do that to them. And so we took
to the baby or to EJ's. I don't know who are you protecting there, the baby or EJ's?
Protecting EJ's and myself.
Okay.
To be honest.
Okay.
Future reservations. So we went to Capitol Grill, which was excellent, by the way. They did a great job. Capitol Grill, don't sleep on it.
Are they still in business? Good for them.
Yeah.
Wow.
And it's a publicly traded company.
Oh yeah.
Yeah, it's a publicly traded company. We went there. It was very nice. Had like a half booth, half table kind of thing, so the kid could run back and forth, the 2-year-old, in the booth, which was nice. And a good meal. And we were home by about before 9 o'clock, and Chandler was pretty much sleeping in the car on the way home.
Wow.
She had a little too many to drink. And then, you get happy Chandler too. You know what I mean?
Yeah, and it mixes with the edible too. So the edible has like the...
That's what I meant by
put
happy
her on
Chandler.
blast. Well, you got her business all out in the street.
Yeah, it's one thing when you take like a couple edibles and then have a couple martinis. It adds.
That's what I meant by happy Chandler. Yes.
Well, good for Chandler.
Yeah. So it was an early night, but the wife wasn't having it. She was going to be up all night. So everybody else is up all night too. Well, I mean, not them, just me, I guess. So here I am.
Amazing.
Hey, we got one first eligible doctor coming in. Would you like to see him?
Yeah, bring him down. Bring him down.
His name is Doctor. He comes. He's a little camera shy. We'll get him on in a minute.
Okay.
Beautiful.
Nikki, how was your weekend?
It was good. Are
you having a baby? Are you doing anything?
No, not that I know of. So no baby on the way. But I was out last night as well. I don't want to spoil the big surprise, but I ran into a couple of tasty people last night. So
wait, what big surprise?
It was a fun little event. Chip, I'm gonna spoil it, but I was at a Hanukkah party.
Okay.
A Hanukkah event.
First night of Hanukkah last night.
First night of Hanukkah, and I want you to guess who I ran into.
Buzil.
No, it's a tasty person.
Oh, a tasty person. Who you ran into?
Marty would be a good guess because it's age appropriate. It was mostly like mid-20-year-olds, so like Marty would have done really well there.
I have no who? Barry? Who?
Tasty person. Quentin.
I don't know. Mike from
Q.
Mike from Wakanda. Who?
I ran into Quentin.
Oh,
Our very
no way.
own Quentin. Yeah.
Our very own Q, who comes on the show.
Yes.
Wow.
I ran into Q, which was very fun.
Is this at the temple that used to be our office?
No, but that is the group that put on the event.
Oh, okay.
So that one, they still have the mural up for now. It is going to be covered at some point.
That Jade Lizard's got to freak them the F out.
Oh, they probably think it's demonic. I tried to explain, like the iron butterfly there too. Like that's another kind of demonic figure. You know,
they're gonna leave the little flying bat, right? They're gonna leave that one.
I don't think that's making the cut.
Did they leave the Dylan Radigan cutout in the men's room?
I should have gone up there and checked that out. I think that one is probably the most demonic thing that's there.
Assume the position.
Yeah. So that one might have to get taken down as well.
So was Q who was newly single, right?
Yes, he was on the prowl. Him and one of his buddies.
Oh no, he broke up with his girlfriend.
Yeah.
Oh, that's sad.
Yeah.
Before the holidays.
Mid-20s.
But it's still sad.
He's lucky.
He's south of the mid-20s. I think he's 24 or something like that.
That's okay. I have a playlist for her. It's fine. Girl, you give me a call.
You got a mixtape for Quentin too?
No, not if he was the instigator of it. No.
Funny.
Are you?
What about you?
What do you got on the sweater?
They're kitties.
There you go.
Show me your kitties.
Did you say? Wait a minute. Did you say with a T? What did you
kitties.
say?
I said kitties. Show me your kitties.
Oh, kitties.
Yes.
Oh my God. Yes, they certainly are. Family show here.
No, I know. I could have gone to the Bears game last night for $65, but I did not.
You say that as like an invite. Anybody could have gone.
I know anybody could have gone. Like the prices just kept going lower and lower and lower, and because it was colder and colder and colder.
Yeah.
But congratulations, though.
It was the coldest Bear game in history. I couldn't believe that.
I couldn't believe that either because I was like, it's been colder than that. But maybe in the modern, I don't know, whatever. But we pulled out the win. But I guess Shadur Sanders had the wrong plays on his wristband or something.
Really?
Yeah. I was like, that's not good. I don't know. I was
you had one job.
Equipment manager. You have one job. Like, make sure that I don't know. I read that and then I was like, that sucks. No, Google it. Yeah. Like he had the wrong plays on his wristband. But Caleb Williams, 2 throwing touchdown. So
first place Bears.
Oh, come on! Cleveland had no answer for anything that the Bears did. I mean,
Bears defense looked good. It was, and
we were out like a lot of people. Like Rome didn't play. Like he pulled out right before.
Yeah, almost ruined my fantasy day.
Oh no, you big Adunze.
Yeah, well, I had them and they ruled them out like 10 minutes before game time.
Yeah.
Yeah.
It was really, and then sad news.
How did we do in fantasy? Because I noticed you didn't send me anything this week. I wasn't going to bust your chops.
It was okay. I like that it's we, you know. Good.
It's we when you're winning.
How are your picks? Are they still in first place after 15 weeks? I don't know. We did okay. It's been a tough stretch, but I was plateauing at like basically unbelievably, like professional levels. Is kind of where I was at. Like, like sports books would limit my bets if they saw this.
You were being banned from many sports books.
Exactly. Like Circa had my picture up like in the casino to not let them in.
Because you're just too freaking good.
And then I had like 2 or 3 weeks where I was just bottom tier, just itching for a win, just really chasing, couldn't get there. Now I've kind of peaked up a tiny bit. I'm still kind of in the middle of my range of professional sports bettor, degenerate loser. I'm like kind of right in the middle. So it's on the upswing is what I'm trying to say. With 2 or 3 weeks left, I'm on the upswing. So I think we can hold this.
You got to start staying there.
I mean, it's really hard to stay out. You saw it with the Patriots, like their undefeated season. You know.
Oh yeah, the Bills came in and just.
It's hard to stay on top for that long. You know, I've been on top for 15 weeks. It's What
about the Boomer Special? What about the Boomer Special pick of the week? The Indianapolis Colts. I mean.
I really did want Phillip Rivers to get the dub.
He looked like he just got off the couch.
Someone said that he gave off offensive coordinator vibes.
Totally. I mean, it was amazing to watch. I mean, that was.
Did you see the press conference? The guy was like, "Phillip, how much do you weigh right now?" And he's like, I don't know, Greg. I was like, now you know what it's like to be a woman.
So good.
I don't know, Greg.
That's what though. That's what they've kind of ruined football because, like I said it earlier in the season. The kickoff now, everybody has a chance. If it's a tight game, even a 7-point game. Whoever the team that has the ball last has a chance to win the game. I mean, because you're going to get the ball with good field position. 7 out of 10 times. It's hard, and I think Indianapolis was up with only seconds to go in the game and end up, Seattle kicked a field goal for them to lose the game.
Someone said that Phillip Rivers saw what his Obamacare was going to cost, and that's why he came back. Because he's got 10 kids. So the NFL insurance.
One woman.
Yeah, all one woman.
That's incredible.
Antonio Brown could never. No.
I was going to go Tyreek Hill.
Tyreek Hill could never.
Yeah.
But then, but for 5 years, his insurance was just about to lapse. And so his time for going into the Hall of Fame, that also resets, but he needed that insurance.
Yeah, I mean, he did make something like $250 million.
I know. Same like Serena Williams, she came back, Venus Williams, because she was like, I needed the insurance. So it's wild. It's wild out here for everybody. But hey, we got a great show for you because laughter is really the only cure that you need. No, that's not true. We got a great show for you today. It's a magnificent Monday here at Tastylive. The last full week of the year. Shows.
Christmas and New Year's.
For the year, yeah. So at the top of the 8 o'clock hour, we have Research Corner. Kai coming in with his outlook and forecast for the week ahead. Always nice when the general comes in. And then the Skinny on Options Abstract Application, Dr. Jim. Ivy expansion, good or bad?
Ooh. I would say it depends.
Okay.
It's one of those things. You want Ivy expansion so you can find new positions. You don't want it if you already have positions on. So
right, when you're trying to collect some cashish. Yeah, some premium.
Cash.
Yeah. Then 9 o'clock, we have a Market Measures weekly Zero DTE breakdown. Is this part of our Zero DTE series?
Yeah, it's a new series. We're going to have Kai on for that as well. We're going to be doing this weekly, but it's basically a shorter term look at how zero-day iron condors and zero-day trades have performed. So it's really cool. He brings a bunch of interesting stats. We're actually comparing, because last week was FOMC, so we're comparing a couple weeks of FOMC zero-day data to kind of look and see, hey, maybe it might not be worth it to trade these during these very specific weeks.
Okay,
so it's kind of cool. All
right, I love our series, and if you pretty much Google anything on Zero DTE, it's our content that comes up. And then gets stolen.
Of course.
And then live from the trade desk, we have the newly single Quentin.
Yes.
I have words with you later. And then Ryan.
24, that's right up your alley.
No, I mean words with who wants to get broken up with in the middle of the holiday season?
I don't know if he is the breaky or
the instigator.
Yeah.
Oh, I see. All right, I'm gonna get to the bottom of this.
That.
Then maybe I have a playlist for him. But Quentin and Ryan are going to be talking about the top trending tickers over at Tastytrade, and Ryan giving us perspective on the crypto side of things. He's got to be excited. He's a Bills fan, so
yeah, that was.
We got a lot of Bills Mafia in the office. It's weird.
Tons.
Yeah,
but they're they're kind of incestuous. They're all like cousins and brothers. And, You know, it's like you get one, you get.
You are right about that, by the way. They are all like, incestuous.
Yeah, you get one and you get like 15 of them. You know, like they come in packs. It's like a Batista.
Right. Somebody's mother's also their aunt.
Yeah.
That kind of thing.
Yeah. It's great.
Anyway, that is the run of show for the morning show. But hey, in the meantime, in the between time, you guys want your daily dose?
Ooh.
Hit me with my theme music. Let's go.
Our leading story. Breaking news.
Across the wire. Our leading story.
Top story. Jump in.
In today's headlines.
This just in.
Breaking news.
All right, everybody. Today is a magnificent Monday. It's December the 15th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Any earnings, Mr. Bat?
Nah.
Nah.
Yeah, earnings are winding down. Today's big thing that you do have to worry about, though, or not really worry about, something good to know, is there a lot of dividends in a lot of the ETFs that you might trade, IWM, for example, and then there are some others that you might not trade as much, but they have some big dividends. Like EWZ has $1.75 dividend approximately. EWY with over a $2 dividend, all the E's, EWA, EFA, check it out. IYR has an 80-cent dividend. So if you've traded some of those or you have positions in some of those ETFs, you might want to take a look at that.
U.S. stock futures rise ahead of the year's last full week of trading. I mentioned it was our last full week of shows, but it's actually also the last full week of trading. What are you guys doing to position yourselves for the Santa Claus rally, or just end of the year, vacation, less liquidity? Like what happens now?
Yeah.
Can I speak for you, Nick?
Sure.
I think Nick will probably try to get himself in trouble again in the gold-silver pair for the last week of the year.
Love that for
I
him.
am going to be looking at that.
There you go. See? I knew it.
It's...
But do you do anything, Nick, to kind of get the end of the year juices flowing?
No, I think, for most people, it's probably a good time to start lightening up positions and tightening up risk, taking off stuff that you've had that you've battled all year long, and you're, back to a scratch or a small profit or a small loss, whatever the case may be. Just kind of resetting. I think the greatest thing is that, you start fresh on the 1st of January. So, all your P&Ls reset. Everything is, a fresh slate, especially with volatility here, like really, really low and a lot of holidays. There's probably going to be a lot of chop. It's going to be a lot of low volume.
That's what I said, the
trading.
Liquidity.
Yeah, like it's just not a time where you want to have, I'm not looking to be like on the higher end of my allocation right now. It's kind of a lighter period of time. And so,
yeah, we talked a little bit about that on Sunday night show, how you got low volatility. I thought it kind of echoing exactly what you said, a little chop around for the market. We have 150 handle expected move for the ES, and I thought we would be outside of that. That was my guess. I mean, it's always just a guesstimate, but we'll end inside that 150 point. Like we'll go above it, we'll go below it. I think we're going to chop around a little bit and end nowhere, end right where we are.
Yeah,
that's my thinking.
Okay. Not very hawkish at all. Wall Street is optimistic on a stock market rally in 2026 after a Fed rate cut. We are posting some to our Tastylive hosts what their volatility outlook is for 2026. But just real fast, are you bearish or bullish for, let's just go with like Q1 of 2026?
You want me to go first? I think you get a little bit of a sell-off after the market closes in 2025 going into 2026. I don't think it's going to be of any kind of magnitude, but I think we're going to scare the children a little bit. We haven't had a good scare the children in quite some time.
Yeah,
why would you want that?
Yeah. I was going to say,
you have to have it. It's just cyclical. You have to have it. You
got to climb the wall of worry. I mean, you can't. When there's no worry, it's concerning. You need that worry.
We've had too many one day. That's the dip kind of. I mean, it really is comical almost.
Yeah.
I mean, it really is. There's no fear there. I think people got to get wacky poo-pooed a little bit.
What are you guys doing in bonds?
Bonds have been anemic, right? Under 115 now?
114.30 right now. Yeah, we don't currently have a position. We traded them going into the FOMC. They were basically flat to down into the FOMC, and then into the end of the day, they kind of rallied. They finally caught up with the rate cut we all knew was happening. So it finally got kind of priced in there. Yeah, we don't have a position on right now.
We sold them over 116 and change, like 116 a quarter or so to get out with a nice little profit. It's covered all your puts too.
The dollar was nursing some losses on Monday while the euro and sterling held steady ahead of their respective central bank decisions this week, with focus squarely on rate outlooks across major economies. I was remiss. We're going to get our November slightly delayed jobs data tomorrow. But let's look at currencies and what they're doing this morning.
I think we got a couple other things this week too.
In terms of economic reports?
Yeah, like I think we finally get like a CPI, like a current CPI, a bunch of Fed speakers. But yeah, I think this week we finally get some stuff, some things out there. Currencies, I have an iron condor in the euro futures, so I'm kind of neutral there, but I'm shorted a little bit in my TastyFX products against the Japanese yen. My TastyFX products, I'm long dollar and long Japanese yen. They're the two things that just go down every single day. So those
big L. You're holding out an L. Big L.
Two things. Big L. I've had some success throughout the year with these currencies, so I enjoy trading them. But I am right now not.
Right now they're winning.
Right now they are winning momentarily.
Mm-hmm.
Yes. So
not for long, baby.
Not for long. I got them right where I want them.
Right where you.
I could add to it. Just keep going.
Gold edges higher amid some tailwinds. Gold edged higher in Asian trade as the metal continued to benefit from firm expectations of further monetary easing by the Fed. What are you doing? Let's talk that gold-silver ratio.
Yeah, I finally got sort of bailed out on it last week. I mean, it was still a huge position. It was a face ripper of a move. The gold-silver ratio right now is at 67. It got basically back up to 70-ish on Friday. It was as low as 60. That's 60 ounces of silver per 1 ounce of gold, up to 70. Now we're kind of back in the middle of that at 67. Still very, very low based on the recent, year or 2 years here. But you got that pair widening out today. You got silver, up 3%, a little over 3%, gold up 1% here. So it might be another. I might get sucked into this again.
Oh, no, don't do it, Nikki.
I know. It gets very big. I warn everybody out there, it's bigger than you think. When you get 4 or 5% moves, you think it's small. When you get one of those moves, you feel that. You feel that.
Yeah. Gold implied volatility. The IV rank is 47. Is pretty good.
Oh, wow.
So that's not something that we normally see in the commodities, in the commodity world of metal. Silver is 75, and you are right. I mean, it's up 3-1, silver versus gold. I thought last night that gold was kind of dead. I thought the gold was going to go sideways, maybe even lower. And I thought silver for sure was dead, but man, this silver doesn't want to die, trading over 64 just a second ago.
Yeah, it's wild.
Just that, which is $1 off its high of 65. I mean, it's back, baby.
Mm-hmm.
I was surprised when
silver's the new gold.
Well, when I saw this photo, this is what an ounce of gold looks like. I didn't know.
Oh, it's tiny.
Yeah.
Yeah. It's a heavy, dense metal.
Wild.
Kind of like Nick's head.
Okay.
Ooh.
Hey, pot stocks surged on Friday because President Trump is expected to sign an executive order to reclassify how marijuana is scheduled, and that could come as soon as today. Cannabis stocks surged in Friday's trading session. Tilray was up. Some of the weed ETFs. How do we play this?
I mean, they were up from all-time low. I mean, not all-time lows, but just a skosh off of all-time lows. I mean, Tilray, for example,
it's had like 4 splits. Tilray,
yes,
and
that's 4 splits. This is not a win, but it is a win if you just got in. I mean, of course. I mean, it went from around $6 to $12. Tilray's up another 50 cents this morning to $12.50. But that's not what's leading this market. That's for sure.
No, there's not really a great way to trade these. I mean, you have MSOS, which is one of the ETFs, MJ, which is another one of the ETFs, Tilray, but they're not very liquid. As you mentioned, these are stocks that are like, even though they were up 50%, are still down like 99.5% since since their inception. So, I think it'll be, if this goes through and it's basically legal, it'll be good to see a lot of these companies actually be listed on U.S. exchanges. A lot of these products like MJ and MSOS, they trade swaps on the U.S. based companies. So like there's a lot of drag, a lot of illiquidity. There's a lot of cost to that. So like once this is legal, it'll be good because it'll allow actual liquidity into these companies.
Right.
We can figure out where these should be traded.
Because right now, cannabis is classified as in the same tier as heroin. And then with this reclassification, it would be the same level as like Tylenol with codeine. So I was like, yeah, that seems better. And also it helps the whole financial aspect of cannabis companies because right now it's a big pain in the ass because of the federal, the way that it's scheduled. So it's just easier for businesses to operate because it's legal in a ton of states, more states than not now. So Bitcoin hoarding company Strategy is remaining in the NASDAQ 100. It clung to its place on Friday, continuing its year-long stint in the benchmark index at a time where analysts have raised questions over its business model. Let's talk about crypto and Strategy.
Looked like we were dead this weekend. I think Bitcoin got to like 87 or 88.
Yeah, under 88, like 87,000 and change.
Yeah, I mean, it looked like you were going to have, and frankly, when I was looking at the futures on Sunday, when they were down, it looked like, you were going to have a Bitcoin down like 4,000, and then, kind of a wacky poo-poo on the E-minis, but quiet reversal overnight.
Yeah, talked a little bit about that on Sunday night too on the show. How Bitcoin hasn't it hasn't helped the market to the upside, and it hasn't really hurt the market to the downside. I mean, if you remember, Bitcoin traded almost flirted with going under 80. I think it got to about 81, 82 back in November. Market kind of hung in there, so Bitcoin kind of decoupling from the overall market. But I did think last night that it would have a little bit of a effect on the overall market, which it has. And even the S&Ps are up 30.
I feel like the big moves, when you're seeing a $2,000-$3,000 move in Bitcoin, the market goes that way in either direction. The inside, like we had it on Friday, where Bitcoin was leading the S&P the entire day. I mean, Bitcoin was down, the entire session. I feel like these kind of choppy inside moves like we're having right now, it kind of doesn't give you that much of an indication. But
what's Coin doing this morning?
Coin is
COIN is trading at basically unchanged. Yeah.
Okay. Hey, AI tools could drive $263 billion in holiday sales, and Walmart and Target are racing to get in. They're overhauling their AI strategies to ensure they're meeting consumers where they're shopping. AI could represent 21% of all holiday orders. That's according to predictions from Salesforce. Not sure what Walmart and Target are doing today.
Walmart's been on a little bit of a tear.
It's in the NASDAQ now. Yeah. Surprisingly enough, Target's been rallying the last month also, but it's more in the middle of its range. Walmart's more near the higher end of its range. Haven't traded either one. Both their IV ranks are kind of middle of the road to a little bit lower. Walmart's is the lowest. Listen, if you're trading Walmart and Target in this AI universe that we have to try to get AI exposure, you really are overthinking this. Between 40 and 83% of consumers plan to use AI for shopping this holiday season. That's wild to me. But okay.
I mean, yeah, they're going to use it by default. Like I can't even, on my new phone, I can't get out of like stealth mode. I don't know why I'm in I'm in stealth mode for some reason, but I'll figure it out.
Do you mean like silent?
No, I mean like
what is
my tabs are all hidden. Like it's not Like I'm not using Safari.
You're incognito. You're using like some sort of incognito mode. You think you are.
I didn't sign up for that. I don't mind everybody seeing what perverted stuff I look at.
Okay, no, well, we're gonna keep it moving. Keep it moving. Oh my God, Nvidia is considering.
I got nothing to hide.
Nvidia is considering increasing H200 chip output due to robust demand from China. That's according to sources. What are you guys doing in Nvidia this morning?
I talked a lot about Nvidia last night. Actually, it's like the Mag 7 stocks are underperforming the overall market here, and here we are just a skosh from all-time highs. I talked about keying on some of those Mag 7s like Nvidia. If they catch a bid, then you're really not going to have smooth sailing. I think to the upside, and you got Nvidia up around I don't know about $2 this morning. So, but it's on the low end of its range. I mean, a big range that has been trading in from basically here 175, it's now 177, up to around 210, 215. So if you were looking for value, I hate to say Nvidia was a value stock.
Yeah, that's a wild sentence.
But on price, on short-term price, it seemed like it hasn't performed with the market, and the market's holding itself up. It's going to lift all ships.
I got a little bit of long delta there into the dip on Friday after AVGO earnings. I got long some AVGO too.
Okay.
Yeah.
Anything else moving in the chip stocks like a AMD or SMH?
No, the AMD really didn't. I mean, it was down. The whole chip space was down on the AVGO earnings, but not as much. I think Micron was one of the bigger movers too to the downside. But yeah, I mean,
SMH is up 3 points. I mean, it's a $350 some odd stock, so it's 3 points doesn't mean as much, but it's up 3 points.
Software company ServiceNow could announce plans to acquire startup Armis as soon as this week in a potential $7 billion deal. Armis is a cybersecurity firm that was last valued at $6.1 billion during a November funding round. So, of course, a month later, they're worth $7 billion. Okay. ServiceNow, the ticker NOW.
And they have a split coming up, too. ServiceNow, I think.
Okay.
I think. Weren't they on the list? Didn't they?
I can't keep track.
I thought so. $813 stock. It's down $50 though. I don't know. So $50 on this Armis startup potential $7 billion. I mean, now let me take a look at this real quick. Let's see what now is worth. So sorry, I should have had this. $179 billion stock, so I guess they got $7 billion to throw around. Sure.
They are doing a 5-for-1 split on December 18th, so middle of this week.
Okay.
5-for-1. That'll be a little bit of a funky one, but your options will split in the same fashion as the stock. So if you have a $10 wide spread, it's now going to be a $2 wide spread. But the options are not very tradable there.
Reddit is suing Australia, seeking to overturn the country's social media ban for children, calling it an intrusion on free political discourse, and it sets the stage for a protracted legal battle. Australia was among the biggest markets for Reddit, and they have banned social media platforms including Reddit, TikTok, Twitter, and Instagram and Facebook for its citizens who are under the age of 16. What are you doing in Reddit?
RDTT is a
DD. Double D's. Come on, Dad. You know that.
RDDT is trading at 225 or so, up pennies. Thank you, son. I do. I am. If they're in your hands, they're real. That's the way I look at it. That's true.
I don't. What?
I think it's
no matter what size they are, they're in your hands. They're real.
I think it's less aggressive because he's remote, so it doesn't have the same sticking power here.
Okay.
We haven't traded Reddit, but we should look at Reddit because it's got. I mean, Ivy rank is 7, but implied volatility at 66%. This thing moves around. Maybe it's one we take a look at.
It does move around. It doesn't have the greatest markets as you would think it had better markets for such a name that everybody knows, right?
Yeah.
Kindle is going to offer a new AI feature that could answer readers' questions about books, whether authors want it or not. It's called Ask This Book, and it allows users to highlight any passage from a book that they've bought or borrowed on their iPhone Kindle app and to ask questions about what they're reading without leaving the page. They said that the feature will roll out to users starting in 2026. They provided few details about how the feature actually works, though, in this hotly contested AI environment. And authors, of course, have concerns. Are like, how are you going to have AI explain something that I wrote, you know?
Yeah. This is the new age Cliff Notes. I mean, once upon a time, you'd go to Barnes and Noble and pray that the Cliff Notes for whatever book that you were reading were still available. Everybody else in the class hadn't bought the Cliff Notes yet. Now you got it at your fingertips.
I know. I mean, although some authors, I do have questions about how you can have sex with a dragon, but I'll leave that later. Don't judge what I read, but I have some questions about the anatomy and how that would work.
You're a smut reader, aren't you?
Yeah. Oh, I love smut.
Yeah.
Roomba, the maker of iRobot, sad to report they filed for bankruptcy. They filed Chapter 11 bankruptcy, and they're going to go private. They said basically they were getting hurt by Chinese competition and also a 46% tariff rate because they are made in Vietnam. The Massachusetts-based company says they had entered a restructuring agreement and then they're just going to go private. They said they would still continue to offer service for those who had purchased their devices.
This stock has been flying around.
Love the product. Get yours and buy an extra one so you have it for spare parts. If nobody picks up the product, get yours. Wonderful, works amazing, does a great job. Get your iRobot, your Roomba before it's too late.
The stock's been flying around. It's like a $4 stock, IRBT. It's marked at $1.30 right now. It was at $4.30, but it went from like $1 to $4 and then back down. So I don't think this is something you should be trading, but just it seems like people kind of knew about this.
Sure.
They were just like trading around this kind of news.
Well, the opposite, a stock that had a pretty good week last week, Rocket Lab, took off and surged around 25% last week. RKLB, it jumped 25.3% week on week as investors loaded portfolios amid a series of rocket launches for the week, as well as the unveiling of its Neutron rocket called Hungry Hippo.
That's amazing.
The company,
which was a good game, by the way. Hungry Hippo.
I love that game.
That was a classic.
It was a great game.
Yeah, that was one that me and Gina would fight after.
Do you want to hear something sad? I used to have to play it by myself because I was an only child, so I would try to just...
You sad.
It was sad. I didn't have anybody to play it with, and so I would just...
Would you actually do it random, or would you pick a favorite?
No, I'd try to...
Pick a favorite, though. You'd have one win.
Yeah.
Always had a favorite. I was an only child. I would play Stratomatic baseball by myself, too. So, yeah.
RKLB, have you ever traded Rocket Lab?
I traded it, but not recently.
Yeah, I haven't recently.
Okay.
Yeah.
You're right, though. It went from 40 to 60. It's sitting there at 62. It's up another $1 this morning, maybe $1.50. Rocket Labs burning down a few times ever known.
Oh, Rocket Man! I see what you did there. I didn't get it right at the beginning, but I see what you did there. All right.
That's because every voice I sound like sounds Indian.
Nope.
So that was Elton John Indian rendition.
Hey, Mackenzie Scott holding it down. She's the baddest of the baddies. She donated $7.1 billion in 2025 in charitable donations.
Oh, she probably did it for the write-off.
And she has now since given away $26.3 billion since 2019, the billionaire philanthropist.
Yeah, so her heirs don't have to pay as much taxes. Yeah, sure.
Okay, look,
That's
dude.
what the haters say about Dell.
Dude,
I will say it here.
I mean, it was a good job out of her. So just mad respect for that woman.
Yeah, so her heirs don't have to pay taxes.
Okay. Disney's Zootopia 2 hit $1 billion
This is what happens when you have a couple of martinis and not enough sleep.
at the box office.
You get to be a crotchety boomer, too.
Ooh.
You know, you get a little testy.
It is only the second Hollywood film to do so this year. Disney Animation Zootopia 2 crossed the $1 billion mark. The film has overperformed in China, a region that has restricted theatrical releases from the U.S. in recent years. What are you doing in Disney?
I'm probably going to be watching a lot of it the next day or so, babysitting a 2-year-old. I mean, that's what I think I'll be doing with Disney. Disney's hanging out at 110, down about a dollar, maybe 50 cents to $1. Even the S&Ps, NASDAQ, Russell, all higher, Dow.
Okay. Good job.
Yeah.
Good job out of Disney. Had a little rally last couple of days. Ivy rank of 8 in there. Here you go again. Everything's got a low Ivy rank.
Yeah.
Hey, congratulations to the Indiana Hoosiers. Fernando Mendoza, such a good kid. He became the first ever Heisman Trophy winner in 2025 after leading the team to a perfect 13-0 regular season and a #1 ranking. Just got so emotional about his speech. He literally spent that day doing a shopping spree with kids whose parents have MS. Like, he's just literally just such a wonderful person. But
yeah, everybody loved his interview after the game too. I mean,
and his teammates came to celebrate him. It was just, I don't know, it was just really good. But do you want to guess? Do you know which colleges have the most Heisman Trophy winners? You should know what #1 is, because even I knew what #1 was.
Like,
and I am a girl.
Ohio State, Michigan.
Yeah, but you're a single girl and you're trying to watch like TV.
Ohio State. What is wrong with you, dude? Ohio State's #2 for the most ever. But there's one school that says the most Heisman winners.
Georgia?
Alabama has had 4.
Like USC or something like that.
USC, yes. USC has had 8 Heisman Trophy winners.
And you got to throw Notre Dame in there. They always get like they get the trophy. They get like the Heisman Trophy like this kid got. It's like a sympathy Heisman trophy.
Yeah, they pay for it.
What is wrong with you? You are such a hateful person today. On the day that a baby girl is coming into this world, you are just
I mean, his numbers weren't as stellar as many other QB Heisman Trophy winners. I believe he should get it. I think it was a weak group.
Okay, I'm sorry. And you played D1 football where, sir?
Brooklyn Hurricanes.
John Jay College of Criminal Justice. He was a star left tackle.
Brooklyn Hurricanes, Marine Park.
Notre Dame has had 7 Heisman winners, tied with Ohio State and Oklahoma. Alabama has had 4, with 3 Heisman winners: LSU, Florida State, Auburn, Florida, Nebraska, Michigan, and Army, and 2 Wisconsin, Texas A&M, Texas, Miami, Florida, Georgia, Navy, and Yale.
Wow.
The Brooklyn Hurricanes have had more NFL football players make it to the big leagues than any other D4 school, and we had one guy make it to the pros.
Sir, this is a Wendy's. Finally today for my viral video of the day, what do I love more than anything? Man, that's robots. And I don't care for the slur of calling them clankers. I think it's offensive.
Clankers?
Have you not heard that?
That's just...
Yeah, it's a slur, and I don't stand for it.
I don't know. I don't like those Cocos.
No, I love the little Coco robots from Serve Robotics. But there's a robot that I follow on Instagram, and his name is Rizbot. And they taught him some fun dance moves. Check out Rizbot. He can twerk.
Oh, that's got like a little,
Best use of science.
Oh, Dad, things are gonna get so weird in the next 5 to 10 years.
So weird. So weird. I'm sorry that we're going to leave you with this. I'm not going to be around.
Oh, you're not sorry. You're not sorry for anything. Don't worry.
Bat, what's coming up next?
Wow. I don't know. I still got that picture of that robot doing it. Oddly, I liked it. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. What do we got coming up next, son? That's right.
Confirm and send. Come on.
Confirm and send. We'll be back in 90 seconds. This is Tasty Live. Bye for now.
At Tastylive, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tastylive research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Back, son, and you know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, let's take a quick look at the market. Even the S&P's up 36 handles, just right at their high for the overnight session. You can see here, after being down around 75 handles on Friday, we're right into the middle and the teeth of this mean over the last 2 weeks or so, sitting here on the ES 69.25 or so. NASDAQ up 166 on a percentage basis, basically the same as the E-mini S&Ps. And the Russell up 22 and change. They're all doing about the same thing. The Dow up 250. They're all in the middle of yesterday's Friday range. Volatility, that's doing something a little bit different. Didn't really take off volatility. I mean, like, volatility never really got underneath itself to expand. It was up around 3-4%, which is a decent sized move in volatility. But at 18 and change, where it was on Friday, after that 75 handle move to the downside, you would expect it to be up, 7, 8, 10%. It was only up about half of that, giving a little bit of worry to the downside, I thought, in the overall market, meaning that, maybe this downside move didn't have the velocity to the downside that it needed. There was no real fear in the market. Yeah. Bonds up 14 ticks. Kind of a hard pull here with bonds really not catching any two-side action. You had that one chance 2 days ago where we were able to get out of our bonds that we were long. Maybe if they sell off today after rallying, maybe we'll do something in there. 115.03, about 6 ticks off of its highs. Notes up 7. Bitcoin futures are down $750, but you can see here there's a little bit of a green candle. It's because they've been significantly lower. They were down around 87. They're closer to their highs of 90 and change for the session at 89.6. Ethereum's actually up a little bit, 1.5%, 1.75%, up $53. Oil down 43. Oil continues to be weak. It helps the consumer, but oil continues to be weak. IV rank continues to be low also. Gold, I'm surprised by the move to the upside. I thought it was over in gold for at least a couple of days or so. I thought you'd see some downside action in there. But gold, 47 IV rank, back up near its recent highs from Friday. Silver, up 2 and change. That's up a lot more. That's up 3.25% versus 1% in gold. That ratio that Nick was talking about earlier, down around, what'd you say, 67, son?
Yeah, it's even lower. It's, just under 60, 68. It's 67.84.
That would be long 2 gold, short 1 silver. That's how many ounces go into.
Yeah, it's how many ounces of silver go into gold. Just the number, but the pair is 2 to 1 when you volatility adjust it. Yeah.
That's correct. Nat gas down small, corn, wheat, and soybeans, a little bit of a mixed bag of tricks. That's all I got.
Yeah. Yeah, it should be an interesting day. I mean, to your point, on Friday, you kind of had volatility contract into the close, so it felt like it was kind of like nothing, like just your run-of-the-mill down day.
Yeah.
So,
and we opened unchanged to higher last night, and then we sold off ever so slightly, about 7-8 handles, and then we just marched higher throughout the night.
Yeah.
And here we sit near the highs.
Cool. Let's do it.
I'm ready. Confirm and send on this Monday, December 15th, right in the middle of the month. What do you got for me?
So
you ready?
Yeah, I'm planning to open an account with the holiday bonus I just received. Is there any reason to hold off until the beginning of the new year before I start trading? I worry that heading into the holidays, the market may not be busy enough to trade. Interesting question.
It is a good question. I think it's a very conservative approach to what we do here. I think if you see opportunity in the market, I don't care what day, year, or month it might be. For me, if I see something that I think has opportunity, I always say if I see a $50 bill laying on the ground, I don't mind bending my fat arse down to go pick it up. So go and do it. I wouldn't wait just because it's the end of the year. No.
Yeah.
Unless you see no opportunity, then you can wait till wherever you want. But you know what? If you wait for the perfect time, you'll never see it. I fire away.
Yeah, I think a lot of people get caught up in like, should I do this now or wait until this happens to do that? Like it's really hard to do that in practice, and you're never gonna catch the perfect time to be long, the perfect time to be short. You got to kind of just take what the market's giving you. So.
And the funny thing about waiting, like for this to happen for that, when this happens with that,
you won't want to do it.
It's a reason why it's happening, and you probably don't want to do it anymore because that happened, what you wanted to happen. So benefit from that first. That's what you do.
Yes, exactly.
How low can VIX go? Can it go to 0?
So I don't think it can go to 0. The lowest.
I didn't think oil could go to 0, and it did. So I don't know if VIX can go to 0.
Conceptually, I don't think VIX can be 0 because options have to have some sort of price. It'll never go to 0. The lowest I've seen, I think, was in the 8 handle. It was 8 or 9 in like the 2015, 16-ish time frame, maybe even into like 2017. Right before the vol blow up in 2018, which was like a move in VIX from, I want to say it was like 9 to 20, I think it was, or 9 to 18. Yeah. It was an over 100% move in vol, but it was at such a low price that it like you would laugh at it now. When we were trading a 10 handle VIX. So that was the lowest that I remember trading. What was it lower before that? I don't think it was. I think that was like the low.
Not that I remember. No, you pretty much nailed it.
Yeah.
But VIX can't go to zero because VIX is a volatility product. There'll always be some price. That's why those tails are so expensive. Volatility, or nobody's going to give you a free ride on risk.
Yeah, I see.
As long as you're taking risk, there's going to be some volatility there. It'll never go to zero.
In like July of 2017, the low was 884.
There you go. You said around 8.9. You nailed
so
it.
I remember that, and that was a wild time. And by wild, I mean nothing moved ever, and it was the biggest freaking grind of all time. It was
15 handles was a big move.
Oh, that was a huge move. That was like Nirvana.
We would have hours where we would sit in a $2 range. I mean, you think volatility might be low now and IV ranks are low now. You have no idea how it's like watching paint dry, how bad it can be.
We used to talk about the VIX being up like a nickel as like higher. You know, like that used to be the greatest thing ever. You get like 10 or 15 cent move and ball.
Yep.
Unbelievable.
Yep. It was unbelievable. It was so bad.
Oh, what is a dark pool?
Ooh, you know what? To be completely frank here, I don't know either.
It's when you don't let the 2-year-old digest for 30 minutes before he goes in the pool.
I've never been here. I mean, everybody knows well, not everybody knows, but I mean, it's basically private. It's an off exchange, mostly for institutional investors like mutual funds or hedge funds where they can anonymously trade big size. Like, you know, it's a place where they can go instead of going into the market, and, you know, it lacks transparency and all this other BS that everybody says. But I got a question for you. Let me answer to you this way. If everything I told you is true, and let's just assume that it is for a minute, Nick, who's on the other side of this big size? Like, let me give you an example. Big size trades in this dark pool and somebody tweets it out or something else like that. Who's on the other side and the market goes lower or the product goes lower that they're trading? Who's on the other side of this? Is it like a grandma in Iowa who's taking down this size? Is it you or me or some other retail investor?
It's all the grandmas. All the grandmas. It's all the grandmas.
Oh, so it's the whole, like they get their whole church group. To buy. I get it. My point that I'm trying to make here is it's another big whale, right? A big whale is doing one side, a big whale is doing the other side. It's all hedged off already. It's usually just an interest rate play or some other, somebody needs stock to buy, somebody's short stock. It's just a closing of a position. It's such a silly thing to look for direction of the market. I don't know, you know, what value it has for a retail investor.
Well said.
When trading currencies, is it better to trade futures or Forex? What are the pros and cons to consider? It's a good question for you because you are an expert in both.
I'm certainly not an expert at all, but I do like to trade both. I think
traded both, and you've traded them live on the show, which is good.
Oh yeah, I mean I think they both have their merits. I mean the futures give you a little bit more flexibility because you could get into the options. You can get they both can get very, very small. I mean, with the Forex products themselves, you get a ton of leverage. So you can get a relatively big position for a small amount of upfront capital. The volatility isn't huge in either of them. Obviously, I mean, they both trade on the same currency to the same currency. So there's the same volatility. But I think they're both great. I mean, I personally am not like a currency trader. It's not my core trading. I don't think it's yours either. So they're smaller, more engagement trades. Like I put on a Iron Condor in the Euro futures. Volatility was relatively high going into FOMC. You know, when you're looking for stuff that has a little bit of extra juice, when the market itself doesn't have a lot of volatility, you start to look at the currencies and the commodities and stuff like that. And so, you know, that's where I gravitate towards. And the FX products, it's fun to get a little bit of not really diversification, but something different in your portfolio that you can trade around, that you can watch, you can get engaged with. It's something that I'll remember, into the future that I've traded before and, puts me into another potential opportunity somewhere down the line. So I like trading the FX products just as a way to get in. I traded the South African Rand. I don't think 10 years ago I even knew what the South African Rand was. Right. And I wouldn't have known that unless I was trading these FX products.
Yeah, and you can get very small in FX too. That's another benefit to FX trading too. And you get the leverage too that FX provides.
Yeah.
Next question, please.
That's it. That's the last one. 4 questions.
Oh, beautiful.
Come on.
I didn't see that. Awesome. Well, even the S&Ps haven't moved. They're up 38. We'll take a quick 90-second break. We'll come back. We got an option jive. Then we got the opening bell after that. Going to be a good day. We'll take a quick 90-second break and come back. Got more Tasty Live after this. Ooh, we got Dr. Jim later in the house.
Nothing says Monday. Cool.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
What sparked my interest in trading was the probabilistic nature of it. I used to play poker a lot, still do, and if you understand the math for poker, you realize that it's a probability game, it's a number of occurrences game, and you want to put yourself in good spots the majority of the time and have good risk management. All of these things apply to options trading and trading in general, so that was my initial pull into the trading world. My trading style really revolves around implied volatility analysis. I like to look at specific markets, look at the differences in implied volatility between the weekly cycles and the monthly cycles, see if there's certain strategies that might play into that more than others. My favorite strategy of all time is a short put, simply because it allows you to acquire 100 shares of stock at a lower cost basis. And it's a position you can manage or push forward in time forever if your trade size is small enough.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
It's option jive. Woo! Time for an option jive, my son. Are you ready for this?
I'm ready. That was good. It really got the juices flowing. Let's do it.
Well, even the S&P just made a new high. Well, they're up 38.5 right now, 69.29. I don't mean a new high all time. I just meant for the overnight session. We are flirting right there. NASDAQ up 177. Russell up 23 and the Dow up 260 and change, volatility in by 26 cents.
Cancel crash.
Cancel crash. Bonds just trade under 115, 114.31. And your gold silver pair trade is still widening.
Yeah. I haven't got back in yet. So
I know.
Don't jinx me.
All right. Well, let's get to this option jive so we can get to the opening. You know, the whole world's waiting for this option jive so we can get to the opening.
Hey, I'm waiting for you to get off your soapbox. Come on. Research corner.
Ready to go.
Let's do it. So a couple of things that happened last week. If you were cryogenically frozen, the Fed cut rates by 25 basis points to the 3.5, 3.75 range here, in line with expectations. It's been talked about for quite some time. We had expectations for a cut, then no cut, then cut. So we've gone full circle multiple times here. We had a little bit of weakness in the tech stocks, the Mag 7 specifically, kind of underperforming on the week. The Dow and the Russell really the strongest of the group here. And then silver was the other story of the week, just going absolutely parabolic to the upside. Those are kind of the three biggest headlines of the week here.
I mean, I think of the three, the first one was exactly what they expected them to do. I mean, yes. I know we went from rate cut to no cut to rate cut. But that was earlier in the month, really. I mean, by the time it was a week before this Fed cut was to be announced, I mean, 80-90% chance of a 25 basis point cut. So it did exactly what it was supposed to. The other two, well, we don't know about those. I mean, that was the ones that really were more opportunistic.
Yes. Getting on to the next slide here. So looking ahead here, you got core retail sales. I think you have a CPI number and some employment data as well coming out. Federal Reserve speakers are all throughout this week. So, you might get a little choppiness. You also have expiration. You have December monthly expiration, which is a big, typically one of the bigger volume and open interest expirations because it's one of the quarter.
Do you know why? Besides it being the end of the year, do you know why? Try to think outside the box just a little bit because they've been around so long. I mean, those were the leap options a year ago. Yes. So now they are the most traded option for the monthly option, become the monthly option. So those 4 quarters that we have, which become the triple witching quarters, are always the ones with the most volume because they've been around the longest.
Very good. Definitely. So giving you just a recap of the week. The prior week we had a strong market, gave a little bit of that back, especially in the NASDAQ. The NASDAQ by far the weakest of the group last week. Again, you had kind of a bid in the Russell and the Dow Jones. Dow was at all-time highs and is even past that today. So I believe so, including the...
Yeah, this was probably the scariest slide of the week. When you have a market that's been extended, I mean, we're near all-time highs. I mean, you have to say it's extended. It could go higher, but it's definitely extended market the way we've had to the upside. The leaders have been the S&P and the NASDAQ. Yes, of course, the Russell and the Dow Jones have been coming along just as nicely, but you want to see that strength typically from the S&P and the NASDAQ, and we didn't have it last week. So that was the biggest factor of maybe having a little bit of capitulation in the market. That's kind of why I think we're going to chop around too, to be honest with you, for the end of the year.
Yeah, agreed. So SPX, just looking at our week ahead here, you got about a $95 expected range, which is about 1.4% in either direction here. We'll see if the actual move kind of comes in there, but you got pretty much the same kind of setup into this week as you did last week. Last week, you had a little bit of a bid in volatility going into the week just because you had the FOMC and whatnot. You had a little sell-off at the end of last week, which kind of popped volatility up a little bit as well. So basically looking at the same sort of expectations this week as we had last week, just to give you a couple numbers there.
Very good. I think it's just a good thing to look at, kind of looking back and reflecting. When you look back and reflect here, is there anything that you think you should have done or been? No, the next slide first. I'm sorry, I was going to the one we were just looking before. Look, this is the weekly move, right?
No, this is IVR. So we're looking at the changes in implied volatility for these products. So had a little bit of a bid in kind of commodity vol, gold, silver. We don't have silver up there, but gold and silver obviously had some higher vol. You had a little bit of a vol crush in some of the currencies after FOMC. Not a shock to see that. Natty gas in there. Everything else is kind of just at lows. I mean, S&P volatility going from, or IV rank going from 12 to 11, not much of a change here.
So let me rephrase it. You're right. IV rank is what I meant. Is there anything here that you missed? Like you were trading a lot of gold. Volatility was expanding in gold. You were trading it from the futures side. Do you think maybe we should be more option centric?
Maybe we could definitely look at that.
Okay.
Look at that.
Good.
Yeah.
Yep. Next one, please.
So then this is just a slide on silver just to show how massive this move has been. This chart goes all the way back to 2008. This was our biggest rally in silver. We're back above the highs that we had in like 2011. It's been just a massive, massive move. Silver implied volatility through the roof here. This tells the story for you.
And look at the inflation adjusted 1980 peak compared to today. Again, giving a little bit of love to the bulls here.
Yeah,
I don't look at it that way. I just look at it as price. I throw out all that other macro stuff. Although Chris and Ilya were really jonesing out on the macro stuff and all the numbers that are going to come out this week. I mean, they were back. I mean, I got my eyes glazed over for a second, but they are back. They would love to see this.
Yeah, well, they've been deprived of their macro numbers for, I don't know how they sleep at night. They've been just so worried about them. There's so much coming that they anticipation.
They've had the shakes.
Yeah, I don't know how they've been able to sleep at night. It's been tough. So they'll get all that back. Thank heavens,
Beautiful.
Next slide here. So just looking at the Russell and the Dow, this is just kind of a chart of the pair here. Stayed pretty in lockstep here. Again, it's kind of goes to the same sort of idea that we were talking about on the last couple slides. Dow and the Russell have been, kind of stronger than the rest of the market, the S&P and the NASDAQ here.
Yep. If you traded the market or were looking at the market, this is nothing. This is not surprising to you. You saw this all week.
Yes. A little recap for everybody. Mm-hmm. So the biggest movers in the S&P 500 on the week, we had Lulu to the upside. So that was a good one. We traded that for earnings. Got a couple shekels out of that. You got a couple, Warner Brothers, not really a tradable name at this point, given the buyout news and kind of the options starting to price that whole thing in. NEM is one of the gold miners in there. So that's, obviously participated in this upside move. Royal Caribbean, kind of high vol. I don't know if I can give a specific one on Royal Caribbean or MOS. On the downside, you had Oracle just getting killed all week. Robinhood, which has become kind of more sticky to the Bitcoin move. I think it's been it's getting kind of bucketed in, at least on a day-to-day price action perspective, into the Coinbase MSTR bucket versus kind of a broker, finance, tech company. It's kind of been in the Bitcoin space, or at least felt like that. AVGO, SMCI, SanDisk, these are all kind of chip names that have been moving. Yet AVGO earnings, stock was down pretty significantly. So the whole semiconductor chip space has kind of had a little bit of a pullback there. Nothing huge. The numbers are bigger than what it looks like on the chart. So, you see a 10% move in AVGO, it seems like you're getting murdered.
$35-40.
It's $35-40, but it's off of, a doubling, tripling of the price. So, they're still not at lows here, given these moves.
Yeah, you are right. And AVGO, another thing between AVGO and Oracle, just looking at two stocks that got hit for earnings, the technical side of the people that will read into the numbers and stuff. Oracle did not meet all their expectations. AVGO actually exceeded all of their expectations, and the stock was still punished. AVGO IV rank still relatively low Oracle's IV rank post earnings still relatively high. So if you were looking between the two, because they're two less than desirable trading stocks, the markets aren't that good in AVGO or Oracle. I think I would default to Oracle personally. AVGO looks like it's unchanged this morning, maybe up a scotch, and Oracle looks to be the same, maybe down a tick or two. So I think there's still opportunity in Oracle from a premium selling standpoint. I think AVGO, you got to be a little bit more directional.
Cool. I like it. So this week, this is from last week earnings, just to give you an idea of some of the biggest movers. Oracle 11%, Broadcom 11%, and then Lulu was 10% to the upside. Costco was basically unchanged. That was kind of and Adobe as well was basically unchanged after the earnings event. Had a little bit of a rally into the close, but I would imagine it's a 50-50 split there. And I think in our next slide, when we look at kind of
before you go to that, Costco's kind of an interesting one right now. Costco's down $8. It has fallen from around $1,000 just a couple of months ago down to $877, where it's going to sit right now. Pretty significant size move in a stock that was one of the leaders in the clubhouse. Everybody looking for a split around 1,000, myself included. Sitting at $877 now. And then if you look at Lulu, it's down small, about $2, which after that, big 10% upside move isn't that much.
Yeah.
Sorry. Go ahead. Next.
No.
Slide.
This is good point. So recapping earnings here. So we've had 3,500 earnings reports. So far, they've been basically 50-50. Your average is right around zero. I love looking at this slide just because it kind of reinforces the idea that earnings trades over most periods of time become 50-50 shots, and it's just it's a coin flip. I know that we remember the ones that rip our face off, the Oracle type moves, but overall these trades, and Vecchio will tell you the same thing. He laments these earnings trades. They end up being 50-50 shots, and they're just engagement trades. You stay small with them. I think that's the key takeaway of this slide here.
Very good. Good job. Good job out of you. Good job out of the team. What's this last one? Up and coming earnings here. You can see this really, Lennar, Micron, CarMax. Maybe you can look at Nike. It's over. Remember when Nike used to be the one that we would do when we would give away money? It was kind of the worst stock to be, we would have our viewers say which way Nike was going, and then we would put on a position of selling premium. Nike is a tough stock to trade selling premium in, and it's also always seems to move outside the expected move. So watch yourself with Nike. And Carnival Cruise Line, can we keep it? Can we keep it going? Carnival Cruise Line is probably just a day or two away from bankruptcy. According to
it's outlived its bankruptcy by 5 years.
And prospered.
And prospered. Take a look at Royal Caribbean. It trades at $280 now. It got as high as $360. That was a $30 stock.
I agree. It was. In all honesty, though, with all the bad press, if Carnival Cruise Lines and Royal Caribbean aren't two examples of, news means nothing, to a stock's price, these two can't get an uptick in good news, right? Yet the stocks continue to go higher. All right. Let's take a quick 90-second break. My craft services is here with my eggs. We'll be back.
Oh, yes. You must nourish yourself before the open. Really get yourself going here.
That's right. We got the opening bell. Immediately follow these messages. We'll be back in 90 seconds. Tastylive.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and Tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Global markets never sleep. Explore them with Forex on tastytrade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on tastytrade.
Tanta paciencia, contigo quiero una indecencia, por eso te quiero desacatar. Dale pa' acá, estoy seguro que te va a gustar. Dale pa' acá, yo estoy seguro que te va a encantar. Dale pa' acá, dale pa' acá.
Back from your pee break, and we are back.
No. You had your little breakfast break. I only want egg whites. No yolks. Just egg whites. Cottage cheese.
No, I like the yolk. I'm a yolk guy.
All right.
Yeah. Hey, you know what's yoking you? Even the S&Ps are up 41 here, making new highs, 69.32. NASDAQ, one of the leaders in the clubhouse with the Russell, both up 0.75%. And the Dow up 0.5% in step with the E-mini S&Ps. Volatility in by 22 cents. Let's key on volatility. See, opening higher like this. I actually said last night I would like to see us open lower to go a little bit higher. I don't know if we're going to be able to maintain this lofty levels here. We'll see what's going on. Volatility only in by about 1%. It was up around 3.5%, 4% on Friday. Is this enough of a move in volatility to keep and sustain this rally that we have going this morning? What do you think?
I think we're going to chop all week. I don't think we're going anywhere. I don't think there's going to be, I think we've kind of, the year is over, so to speak. I think we'll be inside higher. We'll get to 7,000. We'll get the hats out. We'll chop around there. And
you get the 7,000 on ES you're talking
on
about?
ES, yeah, on the current ES contract, because we're at 69.30 right now. I mean, I think that's the path of least resistance. But yeah, it's gonna be a choppy week. You got option expiration. You know, it's gonna be choppy.
Well, guess where we are in SPX, Nick? SPX. If you had to say one number, what would you say?
I would say 68.50 because we've been there all year. And or not all year, all month, I should say. It feels like a year.
It feels like a year. You are correct. 68.57. I'm going to give you 68.50 for the win. That does seem to be the mean, meaning where we've been all month long, as you eloquently said.
Yes.
Let's take a look around the market here. Gold is still up around $29, but it's off of its highs of 84 on gold, meaning 43.84. It's 43.55, up 27. It was up closer to 40 a moment ago. And silver is up $1.75. Let's take a look around the market, what's moving here. All you got to do is click on net change, and you can bring it from top to bottom or bottom to top. We'll do it the movers to the upside. Tesla up $15 and change. AppLovin up around $9 a change. And Lily's always in this group, either the highest mover or the lowest mover, but a horrible market's up $9. Carvana up around $6 and change. IWM, public service announcement, has a dividend. You got to do something about it today if you are in the money calls, deep in the money calls. IWM up $1.33. Nvidia up $2 and change. Gold, as you can see there, GLD up almost $2. Let's see what's moving to the downside here. Oracle down 4 and change, can't get out of its own way. Reddit down almost 4 on that news of buying another company. Baba down almost 3. ARM down 3 and change. Coin with cryptocurrency being lower, cryptocurrency or Bitcoin itself is down 800 and change. Coin down 2 and change. What do you think here, son?
I have if you remember, we have that Tesla butterfly on the upside. The 65.75 is the long spread.
Yes, I do remember.
It's marked at like $3 right now. Do you close it or hold it?
I think you had it around $1. It was $1 and change from let's say. Are you closing it?
No.
That's your...
I just did a Rocket Lab position. Vanetta mentioned that on the for Daily Dose. I did a call ratio spread, 1x2, 65.75. I did it for a 35-cent credit. Kind of like what I've been doing in like a BE or an OCLO, something like that, where you have
anything that has that big call skew to the upside, right?
Exactly. Just kind of a engagement trade. Puts it on my portfolio page here.
Yeah, you think about when a stock has big upside volatility skew in the calls, meaning that a call further out of the money is trading significantly higher, like dollars higher than the puts at the same. So $10 away on each side, for argument's sake, or $5 away on each side. The calls are trading significantly higher than the puts. The phenomenon there, or the thing that you can take advantage of, is the call spreads are going to trade cheap.
Mm-hmm.
So if you're looking to buy a call spread, meaning you want the stock to go higher, you're getting it at a relatively cheaper price compared to other stocks that don't have skew. Now, it's perfectly priced because there's a two-sided market on it. But just the way the option stream is, or the option pricing is, that call spread is going to trade cheap. And that's exactly what you did. On a 1x2 ratio spread, you're buying a big wide, $10 wide call spread relatively cheap. And out of the money options, since we just showed that, an equal option $10 away from the money is trading significantly higher, naked options trade a lot more expensive. So you're buying something that's relatively cheap, selling something that's relatively high, the naked option. And if you get the volatility contraction or a small price move in your direction slowly, you really benefit from that trade. It really works out quite nicely when you get the direction and the volatility contraction right. If it doesn't, if volatility expands and the stock goes higher quickly, you get killed.
Yes. In the short term. Hopefully
In the short term. I mean, I'm making a joke, but I don't want to paint the picture that this is the absolute key to trading, because there's always something on the other side to rear its ugly head.
I just bought. So I had in Uber into the big move it had to the downside. I sold a put and did a call ratio. So I had the 80 put, 85.90 call ratio spread on. I did the whole package at $1.97 credit.
Mm-hmm.
Last week, Uber had a little bit of a bounce. I closed out that 80 strike put at $1.20. So it left me with the 85.90 call ratio on for like 70 cents, almost 80 cents. I just went and bought the 95 call. So now I have the 85.90. I can show this on my platform too, if you want me to.
Go ahead.
So now I have the 85.90, 95 butterfly on, and I have this on for basically a scratch. I'll pull my order chains over.
But you took a little bit of a leg here, but it was kind of like a price movement leg, right? It wasn't like your opinion.
Correct. Yeah. I sold it when volatility was higher and the stock was lower. Stock had a little bit of a rally. That put lost basically half of its value, or a little bit just a little bit less than that. So I legged out of the put, and it left me with this 85.90 call ratio spread. And then today, with the stock down $2 and change, this 95 call at 40 cents, I could just close this position and take, $1 of profit, or you can buy this call. You free up all the capital, which isn't an issue here, but just showing the mechanics of what I'm doing. You take off this capital on the upside and you give yourself an up to $5 shot in terms of profit if you get somewhere in this range, which is just outside the money here, for basically no risk. You have risk.
Yeah, the risk is what it's worth right now, right? I mean, that's the risk that you have, which, when you make it into a butterfly like that, you're happy, and you got time, right? I mean, you're willing to risk. Butterflies trade cheap relative, and you're willing to kind of leave that out there and look to close it. So let's get to your Tesla butterfly. Since now you did exactly the same thing in Tesla.
Yes.
Now you're sitting with that position and it's been working for you, right? It's come into this is like a synthetic butterfly.
Yeah. So I have the 65.70 call spread here. That's right at the money. Stock's up $19 and change. On the upside, I have the 95.510. So I actually have $5 of risk to the upside. Yes. I missed that when I made the adjustment. I'm not worried about that. It's not really the point here. I guess there is tail risk here, but I have this on for a 67-cent debit. So it's basically a nothing shot here. We call it the 60 cents, free. It's marked at $2.37 right now. You're actually, just to give you an idea of volatility, IV rank at 12, but volatility is relatively high here. I mean, you have a $25 expected move through the end of the week, which is, that's a 5% move in the stock here. Do you keep this on? It's basically a 50-50 shot in terms of being in or out of the money at expiration. Do you keep this on for more profits? What do you think?
Yeah, Tesla making new highs. Like you said, you have $5 worth of risk to the upside. I would look at it like this: like, what's your call spread trading for that you're long there?
I mean, it's probably trading at like $5, half the width. It's it's marked at like $6. It's fully in the money, so it's marked at $6.
Right. So it's marked at $6. It can go to $10, right?
Yep.
And you got a $15 wide out of the money spread.
That's marked at $3.
That's marked at $3, which even if the stock rallies inside, which you were just quoting your $10 wide spread, so it's probably trading around $5. That spread that you have that's out of the money, if the stock goes inside your two short strikes, it's going to be trading for around $7, right?
Yeah.
$7, $8. I think for the extra $5 that you could make on the overall spread, I think you sit with it.
I agree. I mean, because what you're saying is that the risk on the upside call spread is maybe $1 or $2. Like there's not,
correct.
You don't really have the upside risk, so to speak. It's there if you get a tail event, you hold it into expiration, but a slow chop up isn't going to hurt you, even though you have that wider call spread because it's out of the money.
Correct.
I'm with you. And I mean, it would be just so much more fun to just bank a full profit on that, right? I mean, you can't be a Johnny taking the little ones. You got to have some cojones here.
Well, the flip side to that is you're going to have to wait a little while because you're going to have to wait till, Wednesday, Thursday.
Yes.
Or at least.
For sure.
Even the S&Ps cut their gains by half. They're up 20. Volatility really hasn't moved. 1842, it's down 20. And NASDAQ and the Russell, which were up around 0.75%, are up just under 0.5%. They're all up around 1/3%. Even the S&P's up 23, NASDAQ up around 100, Russell up 10, and the Dow up 150 and change. We are really just chopping around here. Bitcoin down 670, Ethereum up 50 and change. Gold up 35 and silver up $1.60. You want to take a quick 90-second break and come back and bring in Dr. Jim? What do you think?
Sure. No, I can't start my Mondays without a Dr. J appearance.
Nothing says Monday like this, man. Dr. Jim, the skinny on options, abstract applications. We'll come back with him immediately following these messages. We'll be back in 90 seconds. Tasty Live.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options. It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Diggy, we are back, son. You know what that means? Well, Monday's going to slap you in the face right now with this man, Dr. Jim, the skinny on options, abstract applications. How are you, Dr. Jim?
Man, look at that blackout. Look at that blackout on the screen. Look at that.
Yeah.
I mean, is that what the 3 black crows are? Like, is that it? Like, boom, boom, boom?
The three of us matching.
You're 100% correct. What's it mean to the market, Dr. Jim?
I mean, does anybody really know? Come on, man. Nobody knows. Right? But look at that. Boom, boom, boom. How about that? Okay. All right.
More importantly, Doc, are you ready for your Miami Dolphins tonight?
No, dude. I don't know what you're talking about. Here's all I'm saying. Did you guys feel like, maybe not you necessarily, Nick, but maybe you, Tony, did you feel like new life breathed into your veins with Phillip Rivers playing yesterday?
I did.
Like, that was exciting, dude. Like, super exciting.
Yeah, believe me, it was the Boomer game of the week that all Boomers bet. We took the points and the Indianapolis Colts because we're sympathetic like that. You know, you had to pull for the old timer. But the only thing was, I mean, he got up off the turf.
Yeah.
I
know what you're talking. I know.
Let me say this: Josh gets up off the ground better than Phillip Rivers. Okay?
Are you talking about the time that when he slipped on the logo? Like when he slipped on the logo?
Yeah, where he took like a 2-step drop back and like kind of like had like a wobble, and it was like he kind of like rolled on the floor on the grass a little bit. It was kind of funny.
No, it's so good, man. It's so good. And the memes this weekend have they've been on fire, dude. Like it's been so funny. But hey, he gave him a shot. I mean, they should have won that game. Like that was crazy.
But that's what I hate what they did to football. The kickoff is absolutely horrible. The new kickoff rules. Any team that's within one score has a chance to win if they have the ball at the end of the game.
I know, with any amount of time. Like the time doesn't even matter.
Yeah.
And these kickers can kick 50, 60-yard field goals now.
Except for ours. Except for the Bears kicker, Cairo Santos, who we appreciate. He has done his service. He does not have that leg in him.
No, he does
not. The only one.
We gotta start testing. We gotta test these kickers for some PEDs, man.
Yeah.
Because something's going on, dude. There's something in the water.
Peptides. They're doing peptides.
They're doing peptides is that's the new age PED. Yeah. That's some good stuff. Yeah, but I mean, you know, it made sense. So they ran into my Seahawks, dude. I mean, my Seahawks, the defense is just too strong. It's just too strong. You know?
It is a strong defense. That is true.
Yeah.
That is true.
But next week they got Monday night, like Rivers against the Niners. Like I'm like clearing my schedule, man. Like I can't wait to watch it. And that's gonna be great, man.
I mean, just imagine how amazing his boomer arm will be after 2 weeks of practice. You know, 4 years off, and now he's back. Yeah, 2 weeks in.
I know. Is he the first? Tony, you can maybe look this up. Is he the first granddad to ever play in the NFL? I think he might be.
I think he might
legit,
be.
Like,
I don't know. With some of the early childhood births in the NFL, I would say no, he's not. But I would say he's the oldest granddad to play in the NFL. That's for sure. I'll give you that.
Man.
Yeah.
Yeah. All I know is it was exciting, and when they were like keeping it a game, I'm like, wow. This is really, really crazy. And so anyway.
I saw one meme that was like, Phillip Rivers looks like the creative character from Madden if you had to make it like actually real life. You know, like that's what your creative character would look like. It's like a little bit overweight.
Isn't he actually? But he's actually in Madden right now, right? He's actually in Madden, isn't he?
I think they put him in, on the last update.
And he looks like that quarterback, that big dude from Kentucky back in the day.
Yeah.
Like that super huge guy.
Yeah.
Oh, man.
I remember
he's got a
that guy.
Ben Roethlisberger in him right now. I think that's what he's. I think that's.
Man, no, it's too good.
But I gotta say one thing: every a boomer armchair quarterback who says, I could go out there and do that. Phillip Rivers just proved that we.
That's right. That's correct. That's correct.
We can't do.
Yeah.
I mean, forget the fact that he's already got 60,000 yards in the NFL. Forget all that.
Right.
But we are with him. Like, we can all do it. Like,
we can all get up off the couch and do it. We can all, pack the grocery bags and get out there.
Oh, man. It's too good. It's too good. No, I'm excited. I'm excited for the next 3 weeks of football. It's gonna be fun for that reason alone.
My Taiwanese sources say Brett Favre was also a granddad.
Really? Oh, wow. So that's recent.
He was was he mid 40s too? I mean, Rodgers is 41, right?
Yeah, but Rodgers doesn't have children, never going to.
Fair.
Yeah, I mean, Favre must have been in his 40s. Yeah. And
he had to be. I'll try to look it up for you. 41.
41. Okay.
41.
Okay.
41.
It was funny too. One more thing. It was funny too, listening to Brady talk about Rivers coming back. They were asking him about it, like in a pregame or whatever. And they were like, hey, he's 44 coming back, like, whatever. And Brady was funny. Brady straight threw some shade at him. Brady was like, well, in my last year, I was 45. So Brady's like, 44 is nothing. Like, I was 45. I thought that was pretty funny.
Yeah, what do you expect Brady to say? I mean, he's a competitor, man. I mean, if he could have it his way, he probably would have suited up and played for Indianapolis Colts before, Rivers would have played for him if they would have asked him to come out for a day. I mean, you got to be competitive SOB. I mean, you still feel like you can do it.
Yeah. No, it's good stuff. Good stuff. All right. Well, speaking of feeling like we can do it, man, we got the 12 days of trading. Today we're talking volatility. What do you guys think volatility is going to do next year? I'm curious. I want to hear it from you guys.
I want it higher. I don't want it to be low. I want it back.
Yeah.
I think the last couple of years of trading, let's just continue it. Just continue volatility, spikes, contractions. I don't want it to be a dull, market. I want this to continue. Traders market.
Yeah, we both talked about a little bit chop going into the end of the year, and this is the last full week of trading before the end of the year. Markets have days off going into Christmas and New Year's. So I think we both talked about chop. I talked about a little bit lower going into the beginning of the year, and if that's the way it's going to happen, then volatility is going to expand a little bit. So I think we're going to have a higher volatility than we have right now. Going into the end of the year. That's my guesstimate, and that's exactly what it is. It's a guess, and I'm a little bit light on positions. I'd like to put on new positions. I prefer high implied volatility. So I'm just asking Santa for all of these things so I can get high implied volatility.
Have you been a good boy, though? Are you on the naughty or nice list, Dad?
I'm always on the good boy list. I'm never naughty.
All right, that's good.
Yeah.
I had a sneaking suspicion that you guys might say that this morning in terms of wanting implied volatility higher, wanting a little bit of expansion, and what have you. And what's interesting is I wanted to work through why we want that to happen, because it's not that clear. Like, if you're brand new trading, when implied volatility expands, it's not always a good thing for you. And so I wanted to explain why that's the case. And kind of going into the new year, we've got the 12 days of trading. We do want more implied volatility. We do want more chop around. We do want a trader's market. But let's kind of talk about why that is the case. So, Beth, go ahead and cue us up here on the title slide. IV expansion, is it good or bad? So it's interesting that both of you said, hey, that's what I want going into 2026. But let's unpack that in a bit more detail. So the one metric that we trade maybe more than any other at Tasty is volatility. As a non-directional variable, volatility gives us a way to trade the market without necessarily being long or short market prices. Still, there are many times when the same move in volatility might impact two different positions in opposite ways. So really quickly, so next year, thinking higher volatility, I'm curious, what do you guys think about the market itself? Do you guys see, 7,700? That's been floating around a lot the last couple of days.
7,000, you mean?
Yeah, 7,700, 7,700.
No, I meant for next year. 7,700.
That's a 10 to 15% move. That's like what we get. I mean, that's usually what
nothing.
it is.
That's nothing. That's nothing.
Days. Hey, we're up 3x since 2019. I mean, what are you scoffing at? 700 points to the upside.
We'll knock that out by Easter, Bat. We'll knock that out by Easter.
Sure. I think I'm gonna be surprised by 2026 a little bit here. I think we're gonna, if we get to 7,700, we're gonna get there from significantly lower numbers.
Okay. So you get a little bit.
Does that mean? Wait. I want to box him into a corner here. Hold on.
Sure, go ahead.
Does that mean under 6,000? Does that mean we talking 5,700?
You're saying 7,700, which is 800 points from now, and you're saying under 6,000, which is 900 points from now, and the E-mini S&Ps for the year for all of next year, 380 days or whatever away, have an expected move of almost 1,000 points. Yeah, we can do that.
Okay. All right. I mean, the children will be officially scared. If you go under 6,000 in this market, they're a fragile bunch, man. Like, have you been on the internet? Like, if it goes down 80 basis points, I mean, it's over, man. Like, it is over.
I understand.
Yeah. Okay.
Well, I'm listen, you've got some stocks in the market that were leaders, like the Mag 7, the Microsofts, the AVGOs. They're kind of not coming back the way they had in previous rallies in this market. And if you don't get them underneath this market, I don't know if the rest of the 490 stocks can hold it up. I mean, you need these stocks. So I think there's a little bit of I don't think we go anywhere. Like I said, I think we chop around. I don't think we go significantly lower to the end of the year, but it seems like there's some change, some winds of change in the market, in my opinion.
Okay.
Hey, listen, it's subject to change.
Of course.
Yes,
I mean, of course,
yes.
nobody knows. We all know that, but it's fun. I mean, I think we've been lulled to sleep potentially too. I actually do think it could be a little bit busier than maybe people are thinking as well. But Nick, you see 7,700 slam dunk just to make sure where we're at?
I don't think so. I don't think you have as much of the upside as we're used to. I kind of agree. I think you get a little bit of choppiness. I think we've pulled forward a lot of the AI value. I think that's kind of in here. So I don't know if we're gonna have that same sort of velocity in the next year, but I think it continues to be a trader's market, two-sided action, volatility. Like this is gonna be. I don't think this market that we're in right now is going to change. I don't think we're getting lulled to sleep. I don't think it's, all over and it's just a grind higher every day. I think it's going to be two-sided.
Well, you're seeing it in Bitcoin. You're seeing it in Bitcoin. Like some of these, risk on assets, they're not having that, big velocity jump to the upside. You're not able to scalp it. You're not getting those kinds of moves anymore. Look at AVGO. Look at Microsoft. I mean, Tesla's been giving us some good volatility, but even that, I mean, at the highs that it is now, gave you, tried to shake you out to the downside. It's not the straight stair-step up market that we've had. We've had a little bit as of late. We've had a little bit of kind of, I don't know, what would you call it? Like the market's trying to get its footing underneath it. It's a little bit shaky at all-time highs. I mean, let's not forget. We're 1 or 2% off of all-time highs or at all-time highs in this. And I don't know if gold and silver rallying is so great for the market. The way it's been rallying, it's been kind of
meme.
I don't know. It would be like if bonds super rallied. What I mean?
Right.
Like, it takes a little bit away from the rest of the market.
Yeah.
I mean, silver's up $15 in 3.5 weeks, right?
Yeah.
I mean, that's not normal, man.
We do have the Dr. Jim tweet that it's going to 70, and it did sell off about 48 hours.
You're welcome. You're welcome, by the way.
Yes.
So don't ever say I don't do stuff for you, man. I'm here for you guys.
We needed it to cut our losses in half or so. So we appreciate it.
So you had your off ramp. If you didn't take it, that's your fault. That's 100%
That's right.
your fault.
No. You provide opportunity for us, Dr. Jim. We took it.
Man, you are welcome. You are welcome. All right. So, okay. So yeah. I mean, volatility higher into the year, that would definitely be a little something. All right. So let's talk about when implied volatility expands, right? If I'm a new trader and I'm listening to what Tony's saying, what Nick is saying, what I'm saying this morning, it's like, okay, it sounds like this is a good thing. It sounds like this is what I want. Well, we got to unpack it a little bit because that's not necessarily the case. So Beth, go ahead and hit us on the next slide. So when it comes to implied volatility expansion, we want this for new trades. So this is where we have to make sure we are clearly, dividing and drawing a distinction between our new trades and our existing trades, because it's going to be very, very different. For my new trades, for my opportunities, right? Like Tony was saying, it's a little bit light on positions. Like we're looking for things to do. We're looking for, places to sell premium. This is where the implied volatility expansion is going to help, because you have at least several gimmies that come along with the implied volatility expansion. Number one, you have higher implied volatilities and higher implied implied volatility ranks. And so this gives us a better opportunity to sell, volatility when it's higher, potentially going to mean revert lower. Volatility likes to contract. I mean, a lot of different things. So getting in after the volatility spike makes a lot of sense. Secondly, you have higher option prices. So when volatility expands, option prices follow suit higher. And so now you're collecting higher credits. And so obviously this is going to help you with wider break evens. It's going to give you more room to work with on the credit itself. And then lastly, you also end up with wider expected moves. And so now, if you want to, you can push your strikes out further. You can keep your strikes at the same and then essentially collect higher credits. You have a lot of things working for you when it comes to implied volatility expansion. And so the significant benefit that you're going to draw from implied volatility expansion is for new trades. And so if you are a new trader, you just found the network, hey, welcome aboard. We all hope you stick around and poke around. I mean, there's so many resources here on the network, the live programming, the archives, the YouTube stuff. I mean, it's all out there. The implied volatility expansion, though, is for new trades. And so do you guys think this is something that could be helpful for new traders to understand?
Totally. I mean, volatility when in a vacuum, like most people think volatility is a bad thing. And so I think, just the concept that volatility is an opportunity is a huge deviation from the traditional financial media and know-how that you are taught as somebody that doesn't really trade or trade options. And so I think understanding that volatility and opportunity are hand in hand is something super important, especially for new traders, because it does get kind of spooky when volatility spikes. But when you understand that it's an opportunity, like that's how you outperform is volatility. You don't outperform if you have low volatility, you outperform if there's high volatility.
And nothing's better than looking at that IV rank, right? On a stock when you as a new trader, if you're looking at that, like, we can all sit here as students of the game for years and decades even and say volatility is low, volatility is high because you have a decade of information, in your head. If you're a new trader and you're looking at IV rank, which is the first number right after the stock symbol, and you could say, okay, it's above 50, or okay, it's below 10. Below 10 is low, above 50 is high, above 30 is, okay, below 20 is maybe I'm going to try to find something else. It's just so easy for yourself to say, hey, volatility is high or low because you have that IV rank number. So I think when you're looking at this, high IVs, high IVRs, they're definitely gimmies.
Yeah, definitely. Absolutely. And for the new trades. And what you said there, Nick, was interesting too, in terms of it being kind of spooky and it being kind of scary. It's like the VIX jumps to 30, 35. It's like, all right, some things are really moving there at that point. But I want to take this one step further. So go to the next slide there, Beth. Let's make sure we understand that if I have existing positions on, any implied volatility expansion is going to hurt those positions. And so the old trades actually get hurt. It's a handicap when volatility expands. And so, if I'm short options, if I've sold premium, I have negative vega, right? If I have negative vega, that means when volatility goes up, I get hurt. When volatility goes down, I get helped. And so this is what I want. This is the point that I wanted to make in terms of, you have two different positions. A move in volatility is going to impact those positions very, very differently. Like one of them is a brand new trade that you're about to put on. And one of them is a trade you've had on for a week or 2 weeks or 3 weeks or whatever. The trade that you've had on, because it has short vega, is actually going to be hurt by volatility expansion. And so the higher IV is going to lead to higher option prices. Of course, when we sell options, we want the option price to go down. We don't want the option price to go up. So that same higher implied volatility that's helping any new trades that we might put on is actually hurting our existing trades. And so this is oftentimes going to lead to a negative P&L on that position. Of course, you have other things happening like the delta effect, the theta effect. So it may not be net negative, but that move in volatility specifically is going to be hurting that position. I think this is one of the things that can be so confusing to new traders in terms of understanding, do I want volatility to go higher or do I actually want volatility to go lower? Like, they tune into the network. I mean, even listening this morning, it's like we're all kind of saying the same thing. We want volatility to be higher, but that's actually in conflict with what you see on this slide. Sure. And so what do you guys think about that?
Well, I mean, listen, you're talking about a new trader here trying to learn what volatility is. Volatility is embracing risk. And a lot of times the way that volatility is sold to the public is
bad.
You want to run away when volatility is high. And what we're really saying is you want to really embrace premium selling trades when volatility is high, and you want to embrace non-premium selling trades when volatility is low. We're trying to teach new and old traders how to use volatility as opposed to it being a scary thing and into something that you can embrace and trade with.
Yeah. I think this also reinforces kind of our mechanics of having less exposure when volatility is low and having more exposure when volatility is high. I mean, this is the very basic version of our strategy, right? Like if you have positions on and volatility expands, you're going to get hurt by that. So you don't want positions when volatility is low. I mean, it's pretty, this is kind of what our core thesis is that, putting on short premium when volatility is high and opportunity is valuable. There's more premium to sell, and taking positions off when volatility contracts and that risk is theoretically lesser. This is a core of our strategy.
So this is a perfect continuation. So Beth, go to the next slide. Exactly what Nick just said is a perfect segue into the next slide. So I'm going to say that our preference, which is going to run completely counter to what we've been saying for the last 12 minutes, by and large, as premium sellers, IV contraction is much preferred over IV expansion, as this leads to lower option prices on our current positions. Because what you just said, Nick, volatility contracts, right? What do? We're able to take off our positions.
Yeah.
Right? What are we trying to do? We're trying to take off our positions. We're trying to make money. We're trying to book winners. We're trying to do all these things. And so what's really interesting, and this is what makes it even more confusing for new traders, but I kind of wanted to give people kind of a one-stop shop when it comes to volatility going into next year and, the 12 days of trading and thinking about volatility. It's like you actually want volatility to contract in the end, because once you have the short premium position on, it's the volatility contraction that can be a big driver in that P&L. And so even though you'll hear us we're all whining, we're all griping, we're all crying, just like Philip Rivers after the game last night. Like, I don't know if his Centrum Silver is going to do it, man. Like, I don't know if his Centrum Silver is going to get him back for next Monday. I hope it's enough. Right? I hope that his New Balance are going to get him there, but I'm not sure they're going to do it. I mean, we got to see. So he's whining and crying
He's
too.
44. He's not on the senior Centrum yet, okay? He's not on the 50-plus Centrum, okay? He's still in the normal multivitamin. He doesn't have to go to the senior ones, okay? Not yet.
And my boomer peeps reminded me about, well, my buddy, I have to say this, my friend David reminded me that George Blanda played until he was 48. I don't know if you guys remember him from Oakland. He was a kicker and a quarterback.
I mean, I read about him in the history
Double
books.
duty.
That's crazy stuff, man. 48. Wow, that's
48.
And
like
they didn't even make Centrum Silver back when he was playing. So I don't know what he could do, man. Like,
I thought Janikowski was the previous old one. The kicker, he was there for like 100 years too.
Yeah, he was there for a minute. He was definitely there for a minute. But when volatility is lower, this can mean fewer opportunities for new traders and new trades, which is why it's so important to remain patient in low IV, which is exactly what you guys have been saying. I mean, Tony doesn't have that many positions on right now. Nick was like, hey, this is why we like to allocate less capital when volatility is lower. But I really wanted to just make sure everybody's on the same page and we understand. We want volatility to expand for new opportunities and new trades, because that we feel like that gives us the biggest advantage to potentially the trade moving in our favor. But then once we have the trades on, once you have a portfolio constructed, you actually want volatility to contract.
Yeah, most definitely.
Yeah.
No argument there. And we would say
But that's the easier one to play for, because at some point volatility reverts to a mean. And so, playing
a
for
lot faster than price would.
Usually it happens faster. It's not a given that it happens with the speed that we have seen, but it's one thing to be short volatility when volatility spikes versus being long volatility when volatility is at lows, which is what most people are doing. Is they're long delta, long market when volatility is low versus trading high volatility.
Yep, 100%. All right, let's get them a few takeaways. and then we'll send them on their way. At Tasty, we're directly trading volatility every single day in the markets, but as a beginner, it can be difficult to truly understand how implied volatility changes impact our positions, where a simple reference point for short options is that implied volatility expansion helps your new trades, but it hurts your old trades or existing trades.
For every gimme, there's a gotcha, right?
Hey, I've heard that before, man. That's a catchy little jingle. Like, that kind of stays with you, you know?
The really good one.
I heard you on the opening bell. You were searching for it. You didn't say it, which I was waiting for it. You were like, yeah, there's always another side to it. Like, yeah, you look around the corner and there's something. I'm like, just say it, man. It's right there for you. And you couldn't do it.
It hurts so bad to say. This doesn't hurt, though. We're going to take a quick 90-second break and come back. We got more Tastylive. That's right, more Tastylive. Immediately found these messages. We got a market measure. Even the S&P is completely unchanged. NASDAQ down 15. Russell down 2. Dow up 37. Volatility completely unchanged. It is a choppy market. We'll take a quick 90-second break and come back. You got Bitcoin selling off a little bit here. We got more Tastylive after this with market measure.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Nicky, we are back, son. You know what that means. Time for a little bit more Tastylive. But this, man, we got a market measure talking about 0 days, sponsored by the SIBO and my friend Kai in the house. What's up, Kai?
He's good. He's well fed. You know, he had his nice breakfast this morning. He's doing good. He's good. He's got.
Try to deal with a cold during the weekend.
Ooh, yeah, it was frigid here in Chicago, but I was able to stay warm. Thank you, Kai.
Nice.
See,
did you get the Christmas stuff up? Did you get the Christmas stuff up yet?
Yeah. I got all the Christmas stuff up. No help from you, but I got all the Christmas stuff up. Yeah, thank you.
Yeah, let me check my missed calls. Yep, no, not there. Okay. I was busy anyway. I wouldn't have come. It takes me like 5 hours to get to anyway.
You posted a picture last year on Twitter. That was a good picture with a lot of lights around your house, right?
Thank you. Yeah. Not as many this year. I'm a little, not gonna lie, I'm a little
was it?
a little bah humbuggish.
Well, I thought Vinny was gonna set all these up.
Yeah, I was waiting for my son to come over and help me, but
which son? You got one in the house.
Yeah.
that load? Come on. Lucky if he still talks to me. He's 15 years old.
Oh, I know. I told you this day was coming. You thought
it is come.
You thought this wasn't good. You thought he was different. You're like, no, Vinny. He's not like you, Nick. He's not like you. He's nice. He's a good boy. He's not going to do that. And I'm like, oh yeah, you just wait.
Mine's close. Mine's 12 years old. It's getting to 13 next month, and he stopped talking to us most of the time, just staring at the screen, either iPad or laptop. When I ask something, wait.
Yeah.
Wait a minute.
See?
That's 30 minutes at least.
It's just like the market, Kai. You think it's different this time, and it's not, man. It's the same as it ever was. As it ever was.
Well, this week was different for 0DT. That's for sure.
Yeah.
We got some interesting stuff here. You want to get into it?
Let's do it.
We have some interesting stuff here too. So this is a 0DT piece from last week, but we're going to focus on the 0DT around the FOMO. So we have, I ran actually long-term analysis for every single occurrences around the FOMOs for 0DT.
Cool. Let's do it.
Yeah.
See it.
So this is what happened last week. So we saw from the research corner, the market down. SPX was down 0.6%. That's well within the expected move, which is 1.35%. But Friday, we actually saw the intraday reversal of down 1.4%. That's actually even larger than the weekly expected move. So this is when we were talking about on Monday. 1.4% is nothing. Any day can destroy that expected range. So you got to be prepared.
Yeah. It was another week where it felt like there was a lot more volatility and price action than actually there was at the end of the week. I mean, if you remember, the prior week we had, I think it was like a 0.2%.
Yeah, there were multiple weeks of very small.
But you've had some two-sided action. There's been some pretty wide ranges day to day. We've just ended basically flat for the last, for basically all of December. We've been sitting at this 68.50 mark. So another one just like that.
Yeah, I would say similar to the earnings, like the long-term results. From the long-term perspective, the IV expected range, majority of the occurrences somewhere between 70 to 84% that the price will fall in that expected range. But looking at the intraday is tough, right? Last week only had 0.6, but any day we have 2 days more than 1% move. Wednesday was a big day after the announcement too.
Yeah.
Cool. Yeah. So next slide is the performance of last 2 weeks. But from last, we already knew the 2 weeks before we had all earnings. So these two losers actually all come from last week. One is from Wednesday after FOMO meeting. One is from the Friday. We have a huge reversal happening early in the morning, like around 9 a.m.-ish, right? The market started to turn around. But as you said, I heard your conversation on Wednesday. You passed the SPX 0DT because you don't want to get into all those trouble. So if we go to next slide, that's the cumulative P&L and average P&L. If we skip the Wednesday trading, we still end up with the average negative P&L simply because we have a large loss on Friday without stop loss.
And that, if we go back to the last slide too, on slide 2, the FOMC day didn't move at all until basically the end of the day, the last 2 hours-ish, hour and a half, which is right when Jay Powell took the stand. Like, we intuitively thought that volatility would stay bid and that the prices wouldn't move. This kind of shows you exactly that on an event day where you have an event in the middle of the day, don't expect to see much movement in that premium, especially on the 0-day options, because you have this kind of like binary event there. So it's interesting to see that it really went nowhere. Like there was no really opportunity to manage a winner or a losing trade. It didn't move at all, whether you put it on it right at the open or at noon. It was basically the same price.
Basically the same. So you can see that red dotted line on Wednesday from 8:30 all the way to 1. It's pretty much a flat line.
Yeah.
Right? Even between 1 and 1:30-ish, it's still very close to the original price. So which means you can put in a trade like any time in between if you really want to trade.
Yeah.
The premium is not going to come in.
Yeah, but I think it even more so says that on a day like that, you just avoid it because you're not really getting, like you can see the rest of the non-FOMC days, you're having opportunities to manage most of these trades. You have that one outlier trade where you basically go to max loss within the first hour or so. But all the other trades, you have multiple times to manage at 25 to 50% of the max profit and get out of those trades.
Right. So basically on FOMO that day, your real trading day starts from 1 p.m.
Yeah.
Before that, it's nothing changed.
Yeah.
You can keep watching. I've been trading every single FOMO meeting for this year. My personal experience is the premium doesn't even change.
Yeah.
This one actually, they come in 10% in the first 1.5 hour. Then afterwards, they stop. They actually move up. You can see the VIX 1D in the first 1 hour or so. The VIX 1D actually drop a little bit.
Yeah.
But after that, even the price didn't even change. The SPX price didn't change. The VIX 1D keeps going up, actually pushing up the premium at a certain level that doesn't even change for the rest of the hours before 1 p.m. So really interesting to observe that. I think there's only, and there are like two occurrences right before the Fed announced they reduced the interest rate. They cut the interest rate. Those two events, the premium actually kept going up. So if you put on your trade at 8:30 or even 9, you actually start to have a negative P&L all the way to 1 p.m. So it doesn't even worth to. It's very difficult to guess, right?
Yeah, and that's kind of what on the third slide here. If we go to the next slide, because I cut Kai off a little bit, but that's basically what you're saying is like just avoiding that day. You cut your losses really significantly over the last 2 weeks of data here.
Right, and holding your position and start trading at 1 p.m. You literally only have 2 hours to trade.
Yeah,
you put yourself you have huge volatility toward the end.
Pretty cool.
So next one, since we were talking about that those two are large downside day, we want to take a closer look into these 2 days. So on the left side is the Wednesday. We can see these are the show the underlying price movement and also the short strikes. So you have your range in between and exceeds the range, which is color coded in red. So you see majority of the day, the SPX did stay inside the range. Mm-hmm. For a typical day, you already have like a 50 to 75% premium comes in. But for that day, nothing. No change. And Friday is different. Friday, even at the around 12:30, the underlying price came very close to the short push strike, came all the way back. But for the whole day, you cannot manage at 25% because that reversal actually happened too early, around 9:40-ish.
It does show you that even on like the outlier moves, you have an opportunity to lick the wounds and move on. Like on Friday, you went from a pretty big, if not full loss or close to it in the first, 2 hours to, being right at your short put strike where, that loss is probably not, you're probably not winning on the trade, but you might be a couple $100, $300, $400, $500 loser to a $100 or $200 loser. Like you get kind of an opportunity to start making that decision of like, okay, this one now is not working. I made some money back. I'm gonna close this and get out. Even on the crazy big moves like we had on Friday.
I was trading on Friday. Actually, you
got greedy, didn't you? You didn't.
I was greedy. I remember I had two chances to take it off, especially the one at, around noon. They jumped back to the 68.50-ish. Yeah. That actually was a small winner for me because I took off the worthless call because it's pretty much only 25 cents. I took it off, and when they went back up, I actually made tiny profit. I waited and becomes a loser, like pretty much a full loser afterwards. So
there's no miserable place in trading than where you work. I mean, it really, and it's going to happen, and it happens to everyone.
Yeah.
But everybody always talks about luck and everything else like that. You manifest your own luck, or you make your own luck by, you close the out of the money option for a quarter because, listen, I had a quarter left to risk. What's the big deal? I'll just take it up. You could have closed it at 50 cents. We'd be saying the same thing. Any small amount of number. And then you got the move that you needed. A lot of people who are going to be piggy or peggy would stay in the trade and then become a full loss again. Yeah. You took the trade, closed it. Now, you could have opened another one after that had a higher probability of success and sold both sides if you wanted to, like if you want to be more aggressive. And I get the idea of closing it and saying, I'm going to let the market win by just making a little bit amount of money, not what I expected to make. So
and the reason I stayed long because there are different voices in my head. Hey, this is Friday. Hey, this is right before the Christmas. The market should be stabilized with a lower volatility or going up.
Don't overthink things. Don't overthink things.
Don't even think about it. Take the profit and run.
As Dylan would say, you can't be thinking. You got to stop thinking.
That's right.
You got to stop
you
thinking.
Can't be thinking.
Yeah. So next one, since we're talking about FOMO, really bad performance. So this is actually long-term analysis. Back in 3 years, every single day, all the data we have. So for all days, the average credit we can receive every single day, not only FOMO, every single day is $4.5 dollars for $20 wide and $20 delta iron condor, which is pretty juicy too. But for FOMO day, if you enter at 8:30, you're able to collect $5.8. That's more than 20% than the all days. But look at the performance. The success rate is 83% versus 88%. 83% is actually in line with our expectation.
Yeah.
In 23 occurrences in the past 3 years, we had 19 winners and 4 losers. Is that? Yeah, four losers. But the problem is that the average P&L is only $4 US dollars, not credit.
Yeah. And that's because you're probably getting a lot of tail on both sides on this specific data set.
Yeah, exactly.
For these FOMC days, you're getting a lot of the max losses, whereas, the all other days, you probably have a pretty standard distribution of your risk.
Exactly.
Like you have a lot, it's a lot more standard.
Yeah, so it doesn't really worth doing a trade starting at 8:30. Probably just skip the FOMO if you don't want to. You don't have to take the extra risk in the last 2 hours.
Good stuff.
Yeah, so the next slide, I know there are a lot of viewers that would ask, what if I put the trade after the FOMO announcement? So this is actually a good experiment for me too. I didn't even see this result before running this analysis. The results actually came out 100% of winners if you put on the trade right after the announcement. So the time we enter is 1:05 p.m. Mm-hmm. And the interesting is the average credit is $5.1 compared to the $5.8 for 8:30, which is nothing.
Yeah, so it moves 50, 60 cents in
4.5 hours. It didn't even move. So if you really want to trade into that volatility, probably can just put in your trade around 1 p.m. And the success rate is 100%, 23 trades, all winners. The average P&L is huge, $184 for only less than an hour. That's a huge winner. Thinking about if we collect $4.8 for all days, 25% is 1.6, so $160 on average. So this is a big and quick winner.
It's really cool.
Yeah.
Food for thought, my friend.
Yeah.
Yeah. So next slide. Next slide is the what's more impressive is how fast the premium comes in after the FOMO, because we know the implied volatility was elevated before that, and it started to collapse immediately. Like in the next 20 minutes, it started to collapse. So on average, all of these 23 occurrences, the average duration to reach 25% is 49 minutes. So if you put in 1 p.m., you should expect to get out at before 2 p.m. on average.
Wow.
And the average hourly P&L is more than $250 compared to $126 for all days. This is impressive. So don't be greedy again. I don't think you need to wait 25%. 10, 15% is good because your premium was higher.
Yeah. And you got to keep in mind these events are, once every couple months. You don't have like these huge, the FOMC event. They look amazing to trade that, for almost $300 in 50 minutes. Sounds amazing, but you only get a handful of those every year. So
it's more like trading earnings, right?
Yeah.
Once in a while, you want an extra couple of bucks, but take it off fast.
Yeah.
So the last one is so if we relook at the Wednesday's performance, this passing Wednesday, entering the trade at 105, now we can see we actually can reach the target right before 3 p.m. But you can see because the price come back really quickly, so the P&L actually passed 25% all the way to 50%. We're take it off. But look at the like 140, 45-ish. We actually touching the 25% very shortly. But because the program is very strictly 25%, so if you touch 24.5, it still doesn't trigger the exit. Okay. But you see, you don't have to be that aggressive. 25%, 15. I think 15% is great.
Yeah, really good stuff. I love it. That was awesome.
Really nice. Good job, Eddie, my friend. I mean, I know we haven't placed a 0-day trade. I mean, it's 9:30 already, Nick, and volatility has expanded, flirting with 19 here, traded up right where it is right now, up 33 cents with the E-mini S&P down 22. So maybe on this little break, we'll take a look at putting something on, or you could take a look at it right now if you want to.
Yeah, maybe just do the put side into this move.
Oh, look at you getting direct.
Just because the holidays come in?
Because the holidays coming? Yeah. Kai knows it.
Where's Santa?
Yeah, I'm thinking of 67.85.
Go ahead.
Yeah. All right.
You do this in SPX, $10, $15 wide? What are you doing?
I'm going to just do it $10 wide.
Getting directional. So here you are, trying to do, how do you make the trade even smaller than normal? We do $10 to $20 wide. You're only doing one side here. You're taking a directional bias on it. You're going to screw yourself all up here. So you make your strikes a little bit shorter. You make them only $10 wide.
You know what? Because you're not here, you can talk like that, okay?
Kai, you did an excellent job. We're going to take a quick 90-second break and come back. We got more Tastylive after this. What comes up next, son?
We got the boys for live from the trade desk.
Q and Ryan, that's right, coming in from the trade desk. Kai, we'll let you go. We'll take a quick 90-second break and come back. Even the S&P is down 16. They just rallied off of their lows by about 10 handles.
See, I missed it because of all your talking, all your this and that. Man, you're gonna lose
down
this.
Down 124. Russell down 12. Dow down 64. Volatility
10% winner in 35 seconds. You stink.
We're going to take a quick 90. It's amazing how all the bad ones are my fault. We're going to take a quick 90-second break and come back. We got more Tastylive after this. What comes up next? Quentin and Ryan from the trade desk. We're back in 90 seconds. It's Tastylive.
So I see you're taking an interest in open interest. Open interest, open trades. It's right there. Imagine all the trades are in XYZ at the same strike and expiration. Day one, Brittany buys 4 options to open a trade. Dean also opens, but he only buys 2 options. And then, closing bell. Day 2, open interest is 6 because of yesterday's trades. Now, Jessica gets in on XYZ, and she buys 2 options. Day 3, since no one has closed any trades yet, open interest is at 8. Watch this. Brittany closes her trades, Dean closes his, and Jessica keeps her eyes open. On day 4, open interest is now down to 2. That's because Brittany and Dean closed their positions, and there are only 2 still left open. That's how open interest is different from volume. And both of them are parts of liquidity, which is something we look for before we enter into any trade. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tastytrade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tastytrade customers.
Step into the futures arena with Tastytrade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Nicky, we are back, son. And you know what that means? Time for a little bit more Tastylive as the even S&Ps are down 10 off of their lows, well off of their highs, chopping around as we had expected for the day so far. Maybe not to this magnitude of the move. I mean, you've had about, what is that? The lows on the even S&Ps overnight were 64. Intraday, we've had about what? About a 40, 50 handle move on the even S&Ps when the expected move is closer to 29 or 25, something like that.
Yeah.
We've been outside the expected move, hanging out right inside the expected move right now. But you know what? All that means nothing when you've got this man coming from the trade desk. Your friend of mine, Mr. Q. How are you, brother?
Fellas, how's it going? Thank you for having me. And oh man, I'm sitting in the big boy desk.
Hey,
today.
Don't get used to it, all right?
I will not get used to it, but I'm taking it in while I can. I'm at the big boy desk today. This is good.
Big shoes.
I'm having a granddaughter today. Well, I'm not having it. My daughter's having
He's been acting like he's having it. He's been like, oh guys, can you extend the break? I'm cramping a little bit.
Hey, congratulations!
I'm starting to feel a little pain. Epidural, please.
Yeah,
Epidural.
can you bring in like the Greek yogurt? He's feeling a little peckish. Please.
Well, what I was going to say, Q, is, I mean, it may happen a couple more times. I mean, I do have 5 kids, so it may have a couple more times. So maybe not get used to it, but live to expect it, is what I'm trying to say.
Yeah, very nice. And congratulations.
Thank you.
Okay. I got some stuff to go over today, fellas. I've got, I was out for a week, so I got a lot of stuff to talk about.
Yeah. Hey, wait. How was last night? You find get a little something?
So last night, Nikki and we went to
Do I have to give a shout out to somebody on the show? Can I tell them?
What? Go ahead.
Did you find a new missus there?
No, we're working on it though. Well, your girlfriend's got to set me up. She was like, I got this friend, I got that friend. So I'm like relying heavily on her now. That's like my one shot is like for her to set me up with someone. So
we're playing matchmaker here. I like it. Mm-hmm.
So we went to a Hanukkah event last night, Nikki and I, not planned together. I was very excited when I saw him though.
Yes.
It was great.
Yes.
Yeah, so we did that. And then also I was in Florida. I visited Mark the Trainer. And we also had the Dr. Jim show as well, which was great in Tampa. But look what Mark the Trainer gave me. If you can zoom in a little bit, we've got an old-time stock certificate here from Pilgrim Regional Bank.
Is it still around? Was it acquired by somebody, I imagine?
I think it's probably out of business.
Yes.
Honestly, I didn't do too much research before coming on here.
Hey, you
but
never
this
know.
is what we've got, an old-time stock certificate. So that is what they used to look like before everything went all electronic.
I'm going to guess that it's let's see here.
That's pretty interesting. I haven't seen a stock certificate, I don't know, in decades.
Yeah, the last price I'm seeing is OTC in 2019.
Mm-hmm.
So I think,
gotcha.
I think
Maybe taken private or something like that.
That might be a collector's item.
Yeah, and then you know what I also did? I had Jason from the trade desk, head of the trade desk, head of service, whatever you want.
Another sleepover?
Boss. No, he got me. So from Costco, there's been this like thing on TikTok, like getting a chuck roll, which is like 40 pounds of meat, and then cutting it up into steaks.
Yes.
So
yeah, I've seen those. I've seen that.
Yeah, so I had Jason get me one of those, and that's what I spent my Saturday morning doing, cutting up a bunch of steaks with a massive 40-pound like slab of meat. It was very peaceful and very fun, actually. I really enjoyed it.
Did you freeze it all, or did you give it out?
Yeah, no, I froze it all. Yeah, I froze it all, and it'll be good for like the next 3 months.
I mean, 40 pounds isn't a half cow or anything here. It's just like, it's a big one.
It
was big though.
Guy. I mean, 40 pounds.
He needs some protein. This is a
we do need some protein
right here. Come on.
We do need some protein.
He's eating one of those a day for the next, 2 weeks.
Yeah.
That's nothing.
I forgot it's Hanukkah. 40 days, 40 nights, 40 pounds. I got it.
Yes, happy Hanukkah to all that celebrate.
Yes.
Happy. I actually brought a dreidel into the office today. Brought a little dreidel, one of the ones they gave out last night. I brought that in.
There you go.
Yeah. Yeah. All right, enough out of me.
He's bringing gifts. You didn't bring me a gift, Nick.
Well, you're not here, so
He's got something special for you tomorrow.
Yeah,
That's what he told me.
Yeah.
All right, enough out of me, or still a little bit out of me. Let's get to the top 20 symbols going through the system, as well as their IVR, if we can get that pulled up. I'm not used to this setup here. So,
okay.
All right, you'll find it. It's going to pop
team
up
will
real
have
quick.
it. Yeah, the team will have it popped up.
Look at it. Okay, there we go. Yes. Beautiful. Top 20 symbols going through the system and their IVR. At number 1, we've got Tesla, 11, Oracle, 52, NVIDIA, 9, Robinhood, 20, Broadcom, 19, iBit, 54, GLD, 45, SLV, 84, MSTR, 44, Apple, 3, Palantir, 6, Amazon, 11, SoFi, 15, TQQQ, 27, AMD, 22, CoreWeave, 21, TSLL, 19, Microsoft, 14, Meta, 4, and IREN, 60.
What do you think about that?
All right, there we go.
I mean, it's a funky list, no doubt. IREN? I mean, that's on there. That thing's moving a little bit. But yeah, I mean, like, I think it's more of the same story. People looking for the stuff that's moving.
That's right.
Yeah.
That's right. Yeah.
Good.
Yeah.
All right. Well,
Thank you
very much, fellas.
Good job out of you, my friend. We're going to let you take a quick step out here. We're going to, through the powers that be, we're going to bring our next victim.
It's like TV magic. Yeah. Like TV magic. Yeah, you got like switch one, do the other, put it in there.
Might be the reason why the stock market is a little bit softer going into this Christmas holiday season here, or maybe that's an opportunity, right? Ryan is the one who talks about crypto, and crypto down around 4%, almost 4%. And by crypto, I mean Bitcoin, trading at 34 and change, down 34 and change, trading 86 and change. Let's bring this man in.
Got a bone to pick.
The cause to all our worries, Ryan. How are you, my friend?
I'm doing well, Tony. It's nice to see you.
How's it feel to be the Grinch? You're wearing green. You're coming in here. It's the holidays. Bitcoin is not behaving to the upside. What's going on?
Back to zero to start the week here.
I mean, getting Bitcoin in your stocking is worse than coal.
At this point.
At this point, it's like at least you can light the coal on fire, to get some heat and warmth from it. Bitcoin.
Nobody wants this.
Who wants this digital coin thing?
Trashy tokens.
Yeah.
Get them away from me. Yeah. I mean, look, guys, I'm probably going to say the same thing that I said last week. Not much has changed here week over week, aside from you got a little bit out of the Fed. We're going to restart some open market purchases. But
should be bullish.
We'll see. This is kind of a normal move, 2 to 4%. We're chopping around here. Your range has been all the way down to 80 and kind of like 94, 95. Can't seem to hold a bid for whatever reason, even in the midst of some dollar weakness and kind of lower interest rates here today. But we'll see. I mean, I think you probably have to get through this week where you got non-farm payrolls tomorrow. Maybe that's a catalyst for how we trade. But I think this is, again, what the price action that we've been seeing in terms of the correlation with equities. It's not like the Nasdaq's ripping to a new all-time high today and Bitcoin selling off. So it's kind of all trading together. Has
the crypto space participated in the Santa Claus rally traditionally over that? I mean, I know the data is kind of skewed because the size of the moves we've had in the last 5 to 10 years in Bitcoin, but is there a period, like a couple days, like a Santa Claus rally type thing that kind of applies to Bitcoin?
I mean, generally speaking, you look at the last, say, 10 years of data, the fourth quarter has historically been pretty positive. Not this time, right? We've talked about October. This is the first October in, I think, 6 or 7 years where you had a negative outcome. But typically, the fourth quarter and into the first quarter have generally been positive. And I do think that if you see a continuation of this rally in equities, let's say the S&P gets to 7,000, you get that Santa Claus rally, which could materialize pretty quickly. I know we're getting close to the end of the year here. But I think that you see crypto follow suit, even if it is just a little bit of a relief rally. But right now, consolidating sideways here, we're off of those lows, but not able to really break higher. Certainly haven't been able to regain 100,000.
What do you think about that, son?
Yeah, no, it feels like it's kind of, as prices go up, you get more of the social commentary, like more of the, have fun staying poor tweets, of the other side of the coin. I feel like the move down kind of dulls the sentiment. The sentiment isn't there right now.
Absolutely.
You just have the sentiment. The move in Bitcoin is very, very much sentiment driven. I think even this period of time has more solidified that it is kind of, and I think it is kind of a first mover to both the downside and the upside. The downside in Bitcoin kind of correlated with the choppiness, this period of time that we've had choppiness in the S&P 500 and equity markets as a whole. So I think we should look at it almost like a VIX. Like the VIX is low kind of right now.
Yeah, I think you've definitely seen over the last year or so, and as this has become a little bit more institutional in nature in terms of the participants, you've definitely seen this front run moves on both sides, as you've mentioned, in other markets, whether that's over the weekend and then you do get the Sunday futures open, you get some volatility. We've seen some selling pressure because this is the one market that trades 24/7.
Yeah.
You absolutely see that. But to your point, it's just this degree of apathy at the moment here. You go back and you look at some of the indicators for sentiment, such as the Fear and Greed Index that CoinMarketCap puts out. It hit 11 earlier in November. That was worse than post-FTX collapse for selling as a result of that exchange blowing up. So from a sentiment perspective, after the washout in October, when all the leverage was taken out of the system here, it really hasn't been this bad. This is kind of as bad as it gets from that angle. So we'll see. I think this is where or how kind of bottoms, I think, form. Everyone just walks away. They don't care. And next thing you know, there could be a catalyst.
Do you think there's a little bit of a currency factor into this? I mean, the dollar being so weak kind of makes it
less outside of the US, less desirable to be in this sort of like exchange product, so to speak?
I think generally, and it's not going to be day to day or week to week even, but generally a weaker dollar tends to support Bitcoin if it is to trend that way. We've just recently started to see that dollar strength come out of the market and a little bit of a breakdown there. So I think if you get persistent dollar weakness, and that's on the back of more interest rate cuts, guidance from the Fed, it's likely that we get a very dovish Fed chair here when Jerome Powell is out of the seat. And so if there's more printing and there's anything that's going to continue to weigh on the dollar from that perspective, then I think it's going to be supportive over a 6 to 12 month period of Bitcoin, in the same way that it's likely going to be supportive of commodities. And it could be that you're seeing a lot of that in the market right now when you look at gold and silver. And that has taken a lot of the attention away from crypto, right? Because when we go back and we look at, okay, what's the use case for cryptocurrency? Aside from you can build applications on decentralized blockchain networks and use those as settlement layers, when you look at something like ETH or Solana, when we look at Bitcoin, we describe it as a digital gold. Over the long term, it's been a decent store of value. It's very volatile, of course, but it's a currency debasement hedge. Yeah. Or at least that's what the belief is, right? And so maybe it still has to be proven to be true. I think that it is, but when you have other currency debasement hedges that are hitting all-time highs, it's taken away a little bit from crypto. Certainly after the blow up in terms of all the leverage that we saw a couple months ago.
The funniest part about
you mentioned interest rates. I mean, bonds have been going lower relative. I know they're up 17 ticks today, but they're only 115 and change here. So, maybe interest rates cut, but the bonds are saying that maybe it's a little bit not a foregone conclusion that you're going to get more cuts here as rates go lower. As bonds go lower, rates typically go higher or stay steady, right?
Yeah, you've definitely seen a bit of a steepening of the yield curve too, which, to your point there, you've got higher long-term rates. There's less of maybe a reason at this stage to own crypto. At least right now, given the setup. Because what you also see when you look at this from that kind of like big picture macro perspective, this asset does terribly in an environment in which both economic growth and inflation are decelerating, which had a little bit of a scare around that being priced into this month. We'll see how the data comes out. But typically it does very, very well in an environment where both growth and inflation are moving higher. And you really haven't seen that on the inflation side of the equation here. It looks like growth might be okay, but when you look at this as that debasement hedge, that inflation hedge, at least that's the narrative around it at times, you haven't really seen that show up in the data. For example, oil prices cannot get off the floor here. Yeah. So you just aren't seeing that rip-roaring inflation where people want to, dump money into this. But I think you get there over time.
The waiting game. I like it. Nobody scoffs at silver up, 25% a week. Like nobody calls that a bubble.
No. Nobody calls that anything.
Nobody calls that anything. I love that kind of different market, because it's a metal and it's in your hand. It's not a bubble.
That's correct. That's correct. You can feel it.
Yeah, you can feel it. If they're in your hands, they're real, right, Dad?
That's right.
Learned that one from you.
I got a couple.
Thank you.
I got a couple quick expected moves for you guys here. Sometimes difficult, of course, to explain the 2 to 3% moves in Bitcoin on a day-to-day basis. Long term, I think you still want to own this and buy the bigger dips. So where could you go here? Short term, we've seen volatility come in quite a bit here. So we went from the high 50s to the mid 40s, and we look at Bitcoin implied vol. ETH has come in a little bit as well. So you got smaller expected moves, of course, against a lower underlying spot price. So now we're looking for about a $5,500 move in Bitcoin over the next week, being priced in within a 1 standard deviation. About $300 for ETH, Solana, SUI, XRP. Not much of a change there, but also seeing a decline in volatility. You can see that reflected in those IV ranks too. If we go back about a month or so ago when things were just blowing up in the market, you had an ETH IV rank that was closer to like 80 or 90 at the time. So come in quite a bit here. It's calmed down, but the trend has still been lower, of course, right? We have not been able to break above 93, 94 in Bitcoin and hold on to that for really more than a day. So I'm just kind of patiently waiting. If you get a big level to the downside, you get 80 again, or you see 75. I don't know what would get you there. I think you would see a lot of volatility in other markets as well. But if you get there, probably add a little bit. But I'm kind of just patiently waiting here, and I'm more keen to probably buy dips in an uptrend if we were to retake 100 and continue to move higher there, let's say into the next quarter. We'll see. But yeah, I'm in no rush to try to buy every $2,000 dip or anything like that. Maybe you want to trade it, but I'm not as active as I have been recently.
Things move fast in this space, no doubt. So
things move fast, and they move even faster when you have positions in them for some reason.
That's right.
Good job out of you, Ryan. Even the S&P is down 9 and change, basically unchanged here. The NASDAQ down 91. I guess the leader in the clubhouse to the downside is the Russell, down 0.5 percentage point, down 12. All 4 indices are lower, with the Dow basically unchanged. Even the S&Ps were just unchanged a moment ago. Volatility hanging in there, up 22 cents at 1884. Bonds up 18 ticks, 115.07. There's your beloved Bitcoin under 87,000, just about $200-300 off of the daily lows. Ethereum, which was up on the day, unlike Bitcoin, is now taking a little bit of a slide to the downside, down almost 2.5%, a little over 2.5% to 82, flirting with 3,000. It was under 3,000 just a moment ago. Oil is now worth less than silver. Oil is 56 and change, and silver is almost 64, up $1.80 something and change. Nikki, we're going to take a quick 90-second break. Thank you, Ryan, for coming in. Thank you, Q, for coming in. Thank you, Kai, for coming in. We'll take a quick 90-second break and come back. We got more Tasty Live with Liz and Jenny next. Peace.
Peace.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tastylive.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Step into the futures arena with Tasty Trade's Active Trader. Multiple ladders, hundreds of indicators, precision control, From micro gold to NASDAQ, all CME one click.
Hello, everybody, and welcome to the Monday edition of the Liz and Jenny Show. My name is Liz Deerking, that beautiful brunette. Jenny Andrews, happy Monday, Jenny.
Happy Monday, Liz.
What does it mean when your nose itches? Doesn't it mean somebody's talking about you?
When your nose itches?
Yes.
I think so. And I don't know who would be talking about you. Maybe someone's planning an extra special Christmas gift for you, Liz.
That could be. That could be. So we survived the freezing, frigid, cold temperatures of Chicago. You doing okay?
It's going to start warming up, although I struggled today because you know how today's garbage day, and I usually tape Christmas envelopes to the garbage cans for the garbage men. It was so cold, no tape would stick to the garbage can. So I'm going to have to try it again next Monday.
Oh, I try to catch them.
It's almost impossible to catch them.
Oh, I have Mrs. Poole working in the house who's for those of you who are old enough to understand the Mrs. Poole reference, my husband's office is in the front of our house.
Okay. All right.
He knows everything that happens in the neighborhood.
Well, they usually come like during the show. I'll probably hear them going by during the show. Anyway, it was so cold, crazy cold.
I know.
Nuts.
I know, but it's supposed to warm up. But do you know what today is, Jenny Andrews?
The 6th day of trading.
The 6th day of trading. My traders gave to me volatility.
Yeah, today we're going to talk about volatility, what we think the market's going to bring in 2026, what the market's going to look like. Are we going to see some vol? Are we not going to see some vol? I think can
we jump to the platform and see what the VIX is doing right now? What VIX is doing right now?
Okay. Why don't you guess? SPOO's down 10. Where do you think VIX is? I don't know. I haven't looked.
I'm going to go 1675. Oh, 1675.
And I was going to say like 1710.
Okay, let's hit it.
Let's see.
So we're 30 cents, 30 apart.
Ooh, you're close. Closest without going over.
Braces right style.
1688. So honestly, it's weird. But I feel like since 2020, we've had some like years of decent vol. I kind of think 2026, and what do we know? Honestly, what do we know? But I kind of think 2026 is going to be a year of lower vol. Is what I think, kind of what I think.
Which means you think it's going to be like a little bit of a steady grind up. Can we do something kind of fun? Go to the SPX and see where the expected move for the cycle for the entire year of 2026 is. I just want to so we get a good, like, legit range.
Okay, and again, this changes when vol changes. So with VIX at 1680,
which I think is like mid range, right?
Yeah, sure.
Yeah, so I mean, I think it's a little on the low side, but like this is average volatility. So let's go all the way to next year. So
okay, so we go to December of 2026. That vol out there is 23, but that's normal. We usually see higher vol further out in time. That's typical vol. That would be called contango.
And I'm just looking at them because you have December 18th and then January 15th. So there's a month. Obviously there's no like weeklies out that far, but you've got 967 expected move or 1013. I'm just gonna say for all intents and purposes 1,000, like just under 1,000.
Yeah, wrapped around 1,000.
Yeah.
So
if we're right now at 68.17, that's saying that in this time next year, it's going to be 78.17 or 58.17.
Right. And both, I don't think, are like that crazy unreasonable.
I don't think so either.
No. And neither are crazy unreasonable. Yeah. If I had to guess, I'm going to go more with the 78.17 and lower VIX here. Is my guess, but who knows?
Well, I mean, I think 7,000 is a foregone conclusion. I think we'll hit 7,000 at some point, but I don't know. You know what I mean? Maybe before the end of the year.
Oh, I think we'll hit 7,000. I do think we'll hit 7,000. Maybe before the end of the year. That would be nice.
Okay.
That would be nice. I don't know how many people. It's funny because I don't know how many people on our network are bullish versus bearish. Tom's not here, so like the major bear is gone. We still have Tim Knight. He's a big bear. But as far as like
the big bear's gone,
options go, I like to sell puts. So selling puts are neutral too. So I hesitate to say like, oh, we're so bullish, but selling puts are neutral too. So we just want to like sit here, grind up. I hate the big move down and vol explodes, and then I got all these short puts, and that's a problem.
It is a problem. Can you do me a favor right now? Can you open up December 31st of this year? I just want to, like I said, I like putting context around what Jenny and I are talking about. There we go. December 31st. Go to 7,000. You knew what I was going to do.
Yeah,
so
the expected move is right around 69.70. So it's a 12 delta. So 24% we could get to 7,000.
So that's just it, is you double the delta. And this is all to Jenny's point, and I'm glad. I'm just trying to bring volatility back into this. If vol increases, these numbers will move as well. Everything is based on volatility.
So if this IVX here, the volatility of this December 31st 16-day option, if this were higher than 15, this brown bar would be bigger, right? Yes. If the vol were higher, this brown bar would be bigger. It's kind of like what came first, the chicken or the egg. Market moves, vol increases. What happens when vol increases? These option prices increase. So if these option prices increase, this number is increasing. And this brown bar is expanding, and the expected move becomes larger.
Which is pretty interesting when you think about it, because how do you get vol to expand? A down move, especially in SPX. We're just talking SPX right now. And because the VIX is based off, SPX options. So you get a down move, and I kind of agree with you, Jenny. I still think in a down move, you're going to get a farther expansion to the upside in the expected move.
Well, yeah. In a down move, vol increases, and then the brown bar increases both sides, both ways. Yep. Right, it just gets larger. This expected move gets bigger. Like if vol goes from 15 to 18, this expected move goes from like 143 to 153 or 63. It gets bigger. Bigger. And so that was. We'll see what the year end brings. I mean, we don't have.
And I do stand corrected. It is SPY, not SPX. I apologize. Frank is 100% right. I was just transposing them because we were in the SPX.
So we have till December 31st, 16 days. And that's like 16 actual days, not 16 trading days.
Yeah, that's 16 actual days.
Yeah. Which is kind of scary. Here's what I need to tell myself. Look, December 24th, Christmas Eve, 9 days. I thought I had a good grasp on my gifts. I don't. I still need a lot.
Oh.
Do you?
Yeah. I'm good.
You're done?
No, I'm not done. I mean, everybody else gets cash from here on out. I bought all the gifts. I've got the kids and everybody done, and so yeah, no, I think I'm done. And we've had a lot of our Christmas parties. Like we had a Christmas party yesterday with Dan's family, so done and dusted there. Do you know what I mean? Okay. I had a Christmas party with my cousins, done and dusted there. So it's just like our immediate family, and
so this Saturday is our big family like cousin Christmas party at my house this Saturday. So that's coming. That's looming. I've got all these looming things. Christmas is busy. Honestly,
you're having your cousin Christmas party on my husband's 50th birthday.
Oh, what are you going to do?
We're going to a party. We have a party.
On Saturday?
Yeah. I have a party on Friday and a party on Saturday.
I know we've got our fun club. Our we've got like 14 friends from growing up that still get together. Fun club Christmas party on Friday, but I can't go to that.
And then we are going to another annual Christmas party and they're like, "Are you sure it's okay?" I was like, "Yes, because I'm not throwing a party." So sounds great.
So it's busy. This becomes a busy time of year, super busy time of year. Every day that ticks by as we get nearer and nearer this December 24th, I'm going to start like sweating if I don't get all my stuff done.
Oh my God. I've got a party of 50 coming on Christmas Eve, and I'm already done and locked and loaded with what I'm doing for that. We're done and dusted.
I need...
I'm a professional party thrower, though, I think. At this juncture in my life, that's what I am.
Oh, for 100%. Liz is a professional party thrower. You have pool parties pretty much every day all summer.
Yes, that's correct.
So I think that has having a pool party every day all summer has made it easy.
Well, you just get into a rhythm. I'm like into it. You know what I mean? I have the high top tables. I just changed the colors of the 6 high top tables I have everywhere.
Yeah. You're Liz is a professional party thrower.
It depends on what time of year it is. Sometimes it's blue, sometimes it's red, sometimes it's black, sometimes it's white. We change those covers out all the time.
And I will take any and all suggestions because I have no, after wrapping gifts and making my list and doing everything, I have no exciting gift for my 17-year-old daughter. No, wow. I like the kids to have one gift where they're like, "Oh my God, this is awesome." I have that for my son. I do not have that for my 17-year-old daughter.
I mean, I think your daughter would pass out if you buy her the Windy City Smokehouse bracelet.
What is the Windy City Smokehouse?
Because you would never let her go to it, but it would be awesome.
What is the Windy City Smokehouse?
It's when all these singers come. So you've got Darius Rucker, you've got some famous country singer who you would know, but I don't. Oh, Kenny Chesney. I think Kenny Chesney is going to be there too. And then all these people, and it's 4 days. It's in the city.
When? Over the summer?
United Center. Yeah.
At United Center?
It's at the United Center parking lot.
In the parking lot?
Uh-huh. I'm telling you, she'll pass out.
No way. No way. My kids have never been allowed to go to Lollapalooza or any of those things. They're locked down.
The funny part is we bought the bracelets for them for this year. They're not listening, so I can say this. And Dan and I are going to take them for 2 days. I'm going to see Darius. I'm going to see Hootie and the Blowfish.
In the United Center parking lot.
United Center parking lot, surrounded by a bunch of teenagers, and I can't wait. It was funny. I was talking to Dan's cousins. They're 35. So, you got 35, 32, 31. And we're all meeting at Windy City Smokehouse.
Oh, funny. Well, you'll have fun. That sounds like fun.
Yeah.
That is not my kind of thing. I had to deal with the city yesterday. Parking was a nightmare. I illegally parked, and then I told myself,
Benny Andrews.
Yeah. Well, I said, there's no way the parking people are going to be out when it's 10 degrees and the Bears are playing. Bears are playing at 10 degrees. No way I'm getting towed or ticketed. And I didn't. It was fine.
Oh, you in trouble.
Okay. All right. So let's take a look at what we have in our positions here. We have bonds bonds had that crazy move down on Friday. And now today they've kind of bounced right back up.
Kind of. Let's take a look at our bonds.
Yeah, I mean, today they got as high as 115.11, which we've been in and out of our ZB, which is great. We threw this on Friday, and look, it's up $101.
Let's get the heck out.
Yeah, take that off.
Did you see how low Bitcoin got too? Bitcoin was, I think, into the 87.
Wait a minute. Was this just a roll? This might.
Oh, we rolled it and multiplied it in size. We need 50%.
Yeah. We need
50%.
We need more than.
Put a GTC in for 50% on that.
Right. First, yeah, you're right. This was a roll.
Yeah.
Okay. So GTC is in. I was fooled by this $100 on Friday.
Don't be fooled. Don't be fooled.
And as far as anything else, the only green things are gold, silver, and palladium, right? So we've got, as far as like, I'm not saying, I know we've got that pair, but as far as what's moving up in the market today, all the metals, silver's up, gold's up, and look at this move in palladium, up 5%.
Tim Knight for the win.
Tim Knight. Now, didn't I say let's take this off to buy 2 shares and be up $27, up $14 since we bought the shares? Don't you think we should take it off?
You do what you think is right.
You want to?
Tonight says palladium to the moon. We've got 2 shares, can't hurt us. I like it. I like having this is going to sound bad. I have shares in my account so I can keep an eye on the price.
I get it.
Because you can't sell puts in here. Otherwise, we would.
Right. That's right.
I mean, just try. So you go in.
No, I know it says like closing only or something.
Yeah, and then hit the button. If we get filled, we get filled. Whatever. Who cares?
No, it says closing only because these markets are so wide. Look at the money, 590 at 740.
Yeah.
All right. Well, if you want to, I'm going to sell. Here's the.
You're going to close one?
I just don't know why we have. How high are these metals going to go? How long? Like, what is going on?
I'm telling you, do you know how long ago? If you look at gold, do you remember when you're like, oh, don't buy it now? I was like, buy gold. And everybody thought I was crazy. The metals right now, I mean, I have been a metal bull for a very long time.
But how high are these
And
metals?
Tom and Scott used to make fun of me. Like, I guess silver and gold. Just call me Bro Lives for the rest of the year.
Oh my gosh. Do you think we should separate these, take off our gold and leave our silver, and then hope for a pullback?
I mean, I have a hard time being short silver, but sure.
Because like this pair, so many times we'll see it go, one up or down, and one's winning and one's losing. And I know pairs are on as a pair, off as a pair, but sometimes this is such a small position, 2 by 14.
I think you are trigger happy. Close whatever you would like to close.
I don't know. I came in thinking
I would rather put on new positions. We're only down 1. We're going to go green on the day.
Okay, that's fair. What do you want to put on? I
know earnings are coming to an end. This is the last full week. Number 1's expiration week. Number 2, it's the last full week. The next 2 weeks have a day off in them between Christmas and New Year's. So this is our last full week going into 2025. So let's talk about, if we think implied volatility is going to be lower in 2026. You think it's going to be a grind higher and a lower implied volatility. I kind of have that opinion as well, which means we should put things on now while you've got silver has an 83 rank. If we want to take off silver and gold, I have no problem selling premium in silver and gold. Like let's do some type of lizard. I don't care which direction it is, or iron fly. I don't care. Like let's iron fly SLV.
And I don't care. We don't have to. I mean, to trade SLV is
got an 83 rank. Like that's something we should sink our teeth into. So if you took this and did an iron fly, which is or iron condor, I didn't even think you could pull that off in this, but you can do an iron condor.
Yeah, you can. 57.64.
But Frank says he's been long metal since before we were born. Me and you both, Frank.
I'm just gonna go 30 delta, 63.60, 30 delta. And
that's $1. I would like get more, but that's fine. That's perfect. You're gonna get about $1.
Yeah, 54.51. Here's $3 wide, $3 wide at the 30 delta.
Great. Did you remember when we were?
Only because there's an 83 rank.
Only because there's an 83 rank, right? And then remember when we were on the road? This is what I love. We trade in 1 lots here. This is Liz and Jenny on this show. This is our show account. We trade in 1 lots. But when we were on the road the last time, it's so funny because if you were doing this and you're doing it for $1.50, you're probably gonna up the size, right?
Well, if you're
you can, and if you want to get bigger in it, if you wanted to get bigger in it, you can always look at. You could always bring it in if you wanted to make more.
If I wanted $1 and I'm, you can switch it to naked options and you get so much further. I mean, the skew here, the cost.
And look at that. You're using $576. That's it in silver and SL.
And look at the skew here. So it's trading 57. The 50 put is about 55 cents. That's $7 down. You want 50 cents on a call? It's the 71.
That's
there's still so much call skew.
That's because silver's going to the moon, Alice. Oh, spoons are up 650.
But if silver's going to the moon, like, is that not good for crypto? Like, is crypto going to continue its like? Look at crypto today. Bitcoin down to 86,000.
I know.
That is painful. And we have
3 crypto positions. We've got ETH, SBET, and IBIT.
Okay, IBIT is our kind of like synthetic jade. It's our little jade lizard.
That's fine.
Risk. We're gonna leave that. ETH is still a zebra that's completely out of the money with 18 days to go.
We rolled it out last week.
6 days ago. Yeah.
Yeah.
And then in SBET, I like the idea of selling string. Oh, and we did in Jan. We sold a string around our stock. Okay.
And take a look at that. We did that 6 days ago as well. We've got the 10, 12 around the stock, and it is completely unchanged, meaning like up $61, down $62. Like that's the strangle is not doing anything.
Okay, let's move on to something else because I don't know.
Well, we got filled in silver, so I'll push that stuff through. Hold on.
Yeah, that's just a little baby iron condor.
Yeah, but I'm glad. Like 80, that's what we should be taking advantage of is that 82 rank. What else has a high rank? Because we don't have a lot of premium sold positions in here.
Do you want to see all the puts I sold on Friday with my high school kids?
Yeah, let me see it.
Okay, so we do not have it. I sold puts in Fly.
Oh, we have Fly, don't we? I have Fly.
No, I bought Fly for JD for his birthday.
That's why we have Fly. So then I put it in my account to keep an eye on it.
Yeah, so we don't have Fly, 79 rank. So 79 rank, $21 product. You go out to January and it's trading 21.30, 17 and a half puts, $500? $500 to put these on, to get $1.
Press that button, Jenny Andrews.
So
let's talk about this. Because this is an implied volatility show, we're going to talk about what we think right here. Fly. I don't know what it was. I can look over. It says Firefly Aerospace. So that's the ticker. The IV rank is a 79. The implied volatility for the Jan 16 cycle is a 113. So this is a very high implied volatility product, low price, that is only putting up 500. Can I see the chart?
Yes.
And it's at the bottom of his range. I like it.
Right. So it's the bottom of his range, high implied volatility, only a $21 product. If we're selling that 17 and a half put for $1, takes our break even to like 16 and a half, right around here. That's our break even, and choosing $500 to make 100. I know Liz asked me what the high school kids thought of me, and I said the teacher probably thought I was a snake oil salesman because I was like, okay, so here you can get $100 using $500. And if you have to get long the stock, it's at 16 and a half. And they were like, so how much do I have to pay to do that? I was like, no, you don't pay to do it. Like you get.
It's like your neighbor from across the street. What was his name? Mr. Sweatco?
Yeah, Mr. Sweatco.
How much do you have to pay for that?
So this was one of them, which when you have high implied volatility, some of these positions look great, sometimes too good to be true. You got a 22% chance that this 17 and a half put is going to be out of the money at Jan expiration. You have an 82% chance of keeping 50% of that $5, that $105.
Okay, ship it. We went through all the volatilities on here.
Okay, so that was one of the puts we sold in class.
So, and keep in mind, I do want to say I like having just the put side on. Puts are neutral too.
That's how, when I said, oh, slow grind up or I'm bullish. I'm long delta because I have a lot of short puts. But in my mind, puts are neutral too. So I feel like that's a neutral position. Would it be more delta neutral if I sold a call too? Sure.
I mean, the other thing you could have done, Jenny, and I like the puts, but the other thing that you could have done, let me try to get back in so I can see what we're doing. The other thing you could have done is brought it to the 20 and sold like the 20, 22 and a half big lizard, or even the 22, 25 big lizard, because you would have been getting $5.
Yeah, but for these high school kids, like I was just
way too much.
Yeah. Okay. Hey kids, all right, I'm just teaching you short puts, but now here's a big lizard.
If anybody picks that up, you hire them immediately. Like if anybody picks that up in one class, you hire them immediately. Okay.
Okay, so that was one of them. Did you push that out?
Oh, done and dusted. Check my work.
Okay. So that was one. We also looked at, well, we have Archer. We puts in Archer Aviation, which Archer Aviation, it had a little bit of a rally and now it's just giving some of it up.
Yeah.
And I'm fixing our chart. It drives me crazy that it like resets to, it resets.
Yeah, I know it always resets. And we've got a lot of good tweets coming in, so we got to pop into those because I want to show Ashvin's little puppies.
Oh my goodness! Yeah,
on fire. Jeet's coming in with some great trades. We got Eric Blue Wackadoo, Steve Jones, and Jack JT.
Okay, we will here. Ashvin, love your dogs. They are the cutest. The first time flying.
I bet they're flying to Louisville. Did I say it right? Louisville. Our producer's from Louisville, and I was told by my son that I say it all wrong.
Louisville. I think what Laura was trying to say is like you can't say Louisville.
No, so my son told me. My son said everybody that's from Louisville says it like that.
Louisville.
I was like, it sounds like
Louisville.
Sounds like. Yeah. I was like, you're putting the wrong accent on the wrong syllable.
It's just like. Tone down the I. Tone down the I.
Louisville. You don't say the I. Louisville. No, you slur the L too, is what JD told me.
All right. Well, Ashvin from Louisville. The dogs are so cute. First time flying. Oh, okay. And Frank, Empire Manufacturing. We've got some stuff going on this week.
Yeah, we do. And like I said, this could be a crazy week just because it's the last full week before we have a couple days off and the end of the year.
And I told Liz, there was a lot of premium. Last week, those daily calendars were like $7.50, $8. This morning, it was the $68.45. And I'm curious to see where it is right now. The $68.45 calendar this morning was $11.50.
Yeah.
It was expensive. Because we've got a 17 vol in the 1 day, 18 in the night. I don't know. It just seemed it was high compared to what those calendars were trading for last week.
That means something's happening, Jenny. Things are percolating.
All I did this morning were short put spreads. I don't know. Did you do anything, Liz?
I did a calendar.
Oh, how much did you pay for it?
I paid $12 for it.
Yeah. But look at SPOO's up $8.50 now.
I know. I put it on right when SPOOs were up about 29.
What time was that?
8:31.
Oh, yeah, on the open. Yeah. Okay.
But look at this, Bob on Fire. We appreciate you. There is no earnings today, but we have Lennar, MU, Jack JT's little baby, Anderson Consulting, Accenture Network. They just rebranded after all the scandal, and I worked for them. Nike, FedEx. So you got a lot of. There are some retailers.
Yeah, it's in Micron. So that's gonna be a big one. Everyone's gonna be watching Micron.
Yeah.
I think it'll be I know it's a slow week because of the holidays, but earnings winding down. So thank you, Bob.
There's a Jeet. Wait, and he's got.
Wait, let me go back. Where did Jeet go? Oh, Crowd. Short Strangle and Crowd.
So he's got the 116 expiration. I didn't see Crowd on there, so there's no earnings. So he's got the 450, 560, collecting 755.
Yeah, and it's it's a decent collection, but Crowd's an expensive product. So he's getting a lot of premium, but it is expensive. It's expensive. It's probably a pretty expensive strangle. So Ajit's Big by Big, he could do these with our like 35.
And I like what he said. A wide iron condor, 30 points wide, and each short leg can also work very well. And that's another thing that you can do. And that's okay. Like if you have the capitals, it's a lot easier to get farther, but you can always replicate this. So you're going to use about whatever. You'll use about $2,400, $2,300.
I'm going to look. CRWD.
That's the way we get rowdy, but you spelled it wrong.
CRWD. All right. Going to Jan. It's only a 5 rank though.
Ooh, that's a tricky one, especially when you got ranks galore and lots of other things.
Well, I don't know if you have ranks galore.
Well, I'm just thinking.
You have only
we just looked at 2. That's what I'm saying, ranks galore. So you can always kind of find something. We found fly and we found silver, right? So it's hard when there's a 5 rank to sell premium. Here's where I might do something, be a little bit more directional.
It's tricky. Like ranks galore in the metals, yes. But if you search Tasty Default IV rank, it's metal. Is that Brazil or Mexico?
Brazil.
metal, Brazil. Here's Mexico. So yeah, like metals, Mexico, metals, Brazil. And then the ranks fall off. Then
Baidu at a 30 isn't bad. So those aren't bad. Netflix at a 27, which it's because it's been down so much. Cisco's not bad though. And then I would stop. Like anything under like 25, I'm out.
So it's tricky. There's not, if you're trying to find like lots of products to get into and sell premium in, the ranks are, it's hard to find. You can't just be like silver.
But I don't think, unless there's a crash, unless we're in crash mode, you will only find cycles of things that have high ranks, right? Isn't that fair? So in a crash, everything's got a high rank. So, but we're not in a crash right now, but in a crash, everything's got a high rank. And then up until that point, it's sectors that have high implied volatility.
And to Liz's point, Netflix is still decent because it's been down so much.
Yeah.
And I don't mind getting Netflix, and we do have.
We have Netflix. We got it the other day.
Jade Lizard. I'm going to put a GT in for this.
Sure. And it's still almost right where it was, right?
Oh, yeah. Look at our short put, the 84.
Yeah, it's pretty far down.
Yeah. Okay. But thank you, Ajit, for sending that in.
Do you ever get in one of these Zoom glitches where every time you push something through, it kicks me out of my platform and I have to go back into Zoom? Does that ever happen to you?
I'll have to find the Zoom, but
I have to keep, every time you do something on the platform, I have to keep finding Zoom. So after you do something on the platform, know that I'm not paying attention to a word that you say.
All right, well, here's what Blue Wagadoo has to say. Happy Monday. IVR is 16.2. Went with the long side again today, swinging 1 DTEs a bit and managing longer moves, because Friday was rough, and Friday
was 2 full losses for me, 2 tranches.
Friday I had my SPX was full loss. So. Yeah. There were those old studies by Jacob of like, if it doesn't come off by noon, close it at noon.
But when I get there, by the time noon came around, I had like $25 left to lose. I was like, what the heck? Why would I close it for that?
Yeah, there's not much left to lose. So at that point, you're like, whatever. Right.
I think if it's like a scratch, close it. Or a small, you know what I mean? If you're right there and it's a small loss, I think that would make sense. But when you have nothing else left to lose, you Thelma and Louise it.
Yeah. So Friday was 2 full losses in SPX for me. So my SPX P&L has really been teetering. It's just like it's looking good, and then it's back down, and then it's getting better, and then it's back down. Because I've had in the last couple of weeks a handful of full losses.
So mine, where I said I'm going to mechanically do, because I have a bunch of different accounts. Mechanically, I've been doing the one. That one's still up a lot on the air, even with my full losses.
And that is the one.
And that's the one I started. Like 2 months ago?
And which trade is that? No, but which trade?
It's the put spread where you butterfly it off.
Oh, okay. Okay. So that was one. That's all you're doing in the one.
It's all I'm doing in one account. And it's worked because what I find interesting about that trade, and I've gone back and forth with Patty and a bunch of other like emailers. What I find interesting about that trade is if I sell it, I'm just going to give a roundabout numbers, but if I sell it for $3, then try to butterfly it off for 2, that's locking in 100. Sometimes I'm making more than that on where it ends.
That butterfly. And that butterfly is kind of similar to that calendar, how I said, that calendar, you could make more than the 10%. You can make, 300, 400. And you're finding with that butterfly, if you butterfly it off, sometimes that butterfly can make that much. Not at the end of the day, but even in towards the end of the day.
Towards the end of the day, correct. So it's those I find fascinating. When they work, they work. And like I said, I've had and it's that same account. I've had full losses in there as well, and a couple tranches of it. And it's still consistently profitable for me in that account. I've been doing it for, don't get me wrong, Jacob's studies are over years. My personal vetting of this is a month and a half?
Well, and we go back and forth on,
I want to be consistent. That's what I wanted to do, something in that account and stay consistent with it. Now I did the butterfly in the other account today.
So I really, starting Jan 1, and we talk about this, starting Jan 1, what we want to do with SPX. I think starting Jan 1, I want to make SPX a bigger percentage of my SPX trades, a bigger percentage of my account, and scale back on some of the other things. What I really might eliminate, which you might not like to hear this, But what I might eliminate, the cleaning lady is opening the garage and coming in, and I forgot to put the warning on the door, but I was uncertain. And Liz, you know this. If someone puts a sign on a door that says, "Do not open this door," what happens?
No. Okay, let me just set the scenario. She invites all of our girlfriends to her beach house.
Yes.
She feeds us drinks all day long and puts a sign on a door that says, "Do not open." Every single person opened the door.
I said, "Do not open that door," because the door was literally off its hinge.
You didn't say because the door is off the hinge. You just had a sign on that said, "Do not open." So every person went in there like, "Oh, what is Jenny hiding?"
It's the hot water tank. It was the door to the room with the hot water tank.
Well, where? You fed us alcohol all day long and then put a sign in front of us. So don't feed your cleaning lady alcohol and tell her not to open things.
And everyone opened the door with the sign on it that said "Do not open." So my cleaning lady's here. My heart is, I'm like, my blood pressure is elevating right now. I didn't put a sign on the door. I talked about it, thought about it, because the cat is behind the door in the basement. And
cats and dogs living together. We're going to hear a cat fight soon.
The cat is living in the basement behind the basement door. I thought about putting a sign on the basement door for her. She doesn't speak English, but I thought of putting a sign on the door in Spanish, but I was like back and forth.
El gato inside-o. Is that what it was?
El gato abajo. No abres la puerta. Like, I don't know, but I forgot to put the sign on the door. Or I thought if she saw that sign, she might be tempted to open the door. Like our 14 friends opened a door with a sign that said "Do not open."
Like I said, we slept there for 2 days and everybody had been drinking on a boat.
I don't know. So there's no sign on the door. The cat's in the basement. We'll see if the cat's she opens the door.
It's pretty funny. Okay, so let's see. I'm pulling for Eric here.
Back in the platform. Oh yeah, I've got just the short put spreads today, but I put in a GTC to just take 50% of the put spread, and I would have done the butterfly off. If I'm going to get that aggressive and go for 50%, I would have done the butterfly off, but I put all these orders in from my phone, and for me it's very easy for me. What?
It's hard to put it in from your phone.
It's very easy for me to sell a put spread for my phone. And then it's very easy for my phone to say, take 50%, because that's what pops up. Like, close order, you want to take 50%? Take 50%. Like, that was all very easy. But I looked at my phone and thought, do I want to try to fool with trying to like butterfly this off from my phone? And I decided to pass on that.
Yeah, I get it.
So anyway, we're rooting for you, Eric. We are. But my mouse is like scrolling so fast. Steve Jones, hopefully Las Vegas is great. Liz was just there and it was kind of cool.
He's in Hollywood, California.
What?
Jenny, living in Hollywood. Let me read for you. Living in Hollywood, California.
Hey, Steve Jones used to live in Vegas. He used to live in Vegas. Now he's in Hollywood, living in Hollywood, 3 a.m. in the morning. All parking was occupied. I thought I will only be 5 minutes so I can park on the red curb. You guessed it, came back 10 minutes later, and there was a parking violation ticket on my window.
Yeah, I get it.
Okay, but this, Steve Jones, I think used to live in Vegas.
I don't know his whereabouts. And
Yeah. No, he does. He does. Look at this. Steve Jones, Las Vegas trader. So I think this is like when he was living in California, he moved his car, got a violation.
Possibly. I like that you know his whereabouts. Steve, you have a stalker. And her name is Jenny. If you feel unsafe at all, please let me know.
Okay, and Jack JT, MSOS, up, reducing my shares. MSOS, Jack JT.
MSOS, let's take a look at it.
MSOS. Oh, the cannabis stocks again.
Oh, yeah. They're going to be restructured or something. Vanetta was talking about it this morning, reclassified, something. So all your cannabis stocks were up.
Yeah, I got rid of mine. I don't have it.
But I got to tell you, it's kind of deceiving because if you had been in Tilray at 20, if you just got in, it went from like 5 to 10. But if you've been in it, it went from 20 to 5. Do you know what I mean?
I mean, we were TO.
So you got Tilray, MJ.
I mean, we had these for so long. I swear, 2018 we got in. So like to Liz's point, if I got in this in 2018, which is, because I swear people were like 2019, you're the pot stocks, right?
Well, something happened. There was like some type of like legalization in that year. We're like, oh, it's gonna happen.
I think this. Okay, yeah, like this drop. I think this drop of the pot stocks. Then we were all like,
keep in mind that's still 50. Like you're in the 50 handle and it went all the way down to 5.
Yeah, I think it was this drop, and we all got in, and then we waited and waited and waited and waited and waited, and then at some point I just got rid of it.
Yeah.
So
I get it.
I don't know, but I get it, Jack. I get reducing my shares. Sure. I'm out. I have no more pot stocks.
I still have a couple, but I think that one's like split like a couple times because I don't know. I still have a couple. I don't have MSOS though. Okay, let's see what's up above Jack.
Okay.
Oh, another Ajit.
Oh, see, we got lots of tweets coming in. Let's see. Here we go. Gold, Ajit, and gold. So high ranking gold. Here he is selling a strangle in gold. Crazy Ajit.
Wait, he's in GLD, which GLD is expensive too, isn't it? You could
make an iron condor in GLD, but we just sold one in SLV. It's kind of like doubling up.
Yeah, I mean, they're not identical, but yes.
Yeah. I mean, they're highly
correlated. Yeah.
They did.
That they are.
And then look at gold, gamma exposure, an explanation of what it is. So gamma, just to like make this like easy layman's terms, gamma is your rate of change of delta. So your gamma is how much your delta will change with the move. So let me see if gamma's even on here.
On the platform. Go to trade page.
I just go to SPY. What?
Yeah, go to SPY.
Yeah, we go here, and I open up Jan. Hold on, let me open up Jan.
So I am still seeing Tilray. Are you in SPY? There you go. Now I can see it. Okay.
Yeah. Okay, so like here's your delta and here's your gamma. Yes.
No.
Can you see? Okay, Liz.
Yeah, now we can see.
Okay,
we were on Tilray.
Okay, so here, if this is a 48 delta, the gamma is the change in your delta. So like if we move, and I can't even remember, is implied volatility changes or is it we move? Like if we move up $1, then I think our delta is going to go from 49 to 51, which would make sense because you look at, then if you look at when $1 up, then here, it's 51. So the gamma is your rate of change of your delta.
As the price moves.
So if you have a very large, if your gamma is real big, then you're going to have big delta swings.
Yeah, you will.
But as far as like we manage risk at order entry, as far as like we are concerned as retail traders, and we know each position we have, and we know the risk in the trade, we're not really watching like, oh my gosh, what's our gamma? What's our delta going to change by? That's if you have like massive positions.
I think,
and you really.
Yeah, I think it's if you have a huge, I don't look, this is the one, it's the forgotten Greek because I kind of know what's going to happen as the price movement in my options instead of being like, what's my gamma?
Yeah, I mean, that was something that we would look at on the trading floor. So on the trading floor, let's say your position got, instead of positive theta, you were very negative theta. So let's say I was very negative theta where I was burning, $500 a day in theta. And I could see, okay, my gamma is 200. Well, if the stock goes up $1, my deltas are going to move by 200. So I'm going to sell 200 shares of my stock. Like this is how we would do it on the trading floor. If the stock goes up $1, I'm going to sell 200 shares. And then when the stock drops back down, then I'll buy those 200 shares back.
Locking in a profit, you're completing the triangle.
And I'll keep doing that today, like based on your gamma. So as the stock's going up, whatever your gamma is, I'll sell that many hundreds of shares, and as stock's coming back down, I'll buy them back. And you're just trying to scalp the stock all day to cover your theta burn.
Yeah, because you need to do something to cover your theta burn.
Yeah. So like that's how people would trade. I mean, let's say you were really long a lot of options in SPY, and you have that daily theta burn. You have the ability to scalp SPY as it moves throughout the day to cover your theta burn. that's what we would do on the floor. But and on days where we're getting wild movements and big moves back and forth, great. But if you're sitting there and there's like nothing happening and we're barely moving, it's tough.
Yeah, no, I get it. Can you do me a favor and go back to Twitter? Because Frank took something from the chat and put it on Twitter for us.
Oh, great. Thanks, Frank.
Yeah, so go top down.
Let me refresh this. It's coming. It's refreshing. I feel like my internet is
I think your internet is slow because when you were saying you were on Spy, we weren't watching Spy. Collectively as a group, we the people weren't seeing Spy. I'll tell you what, why don't I read you the tweet?
Okay, here.
So this is from
well, here I have.
Oh, there you go.
I've got it here.
Okay.
Do you see it?
Yeah, now we can see it.
From Ron Vicker. Take a look at Oxy. Now testing 480. Sure. Okay. We'll take a look at Oxy. And then
you just go to these tweets because I don't know.
And while we're in tweets while we're in Twitter. Yeah, parking ticket happened in the distant past in California. Who knew that the parking people work 24/7 in Los Angeles? Currently living in Las Vegas. In my opinion, the weather is great here. Well, I'm glad. I mean, I think Vegas weather's nice.
Yeah, I mean,
it was just a little cooler than.
It was very sunny. It was cooler than I expected it to be when I was there. It was sunny. It was very pretty outside, but it was chilly. It's not pool weather. Well, it wasn't when I was there.
And here he is, Jack Tucker, 21,700. 21,700 for the day for Jack Tucker. So good luck.
I think you're freezing up a little bit. 2 double tranches, 0 DTE, 2,100. That's great. Good luck. He's Jack Tucker. We love it. We love it. We love it. We love it.
I know. All right, I'm going to go into Oxy.
Oxy is occidental petroleum. Yeah. 4 rank.
Okay, so it's down quite a bit today. Is oil. What's crude oil doing?
Let's take a look at the side. Crude oil is 56.29.
We're down like 2.5% on Oxy, and crude oil is down 1.6%.
Yeah.
So yeah, crude oil at 56. Either one. Like I kind of would be more likely to trade just crude rather than Oxy. But
crude is bigger than Oxy, and crude also has a 20 rank versus Oxy, which has a 4.
And we could trade MCL, the micro crude.
Yeah, we could. Well, interestingly enough, and I like when Frank does this, Frank says Oxy is a good trading vehicle with tons of open interest and nice tight bid asks.
Nice. Yeah. I mean, so we certainly could. I only say like crude because it's 20 rank instead of a 4 rank. Wasn't it a 4 rank?
It was a 4 rank.
So here, and we can compare the two. Like if I go to Oxy and I go to Jan and I want to sell.
There's not a lot there. That's what I'm saying. I kind of agree with what you're saying.
Let's just go to micro crude. But I mean, if thanks for bringing it to our attention, I wouldn't have even looked at crude if you didn't bring it to our attention.
Yeah, I love it.
So micro crude, we go to Jan and we can get $1 on the 54 put.
That's not bad.
No. Using 618. We could do a Jade Lizard and move it down to like the 53 put.
Do you want to see what? Do you want to Jade Lizard this thing?
Yeah, that's what I was saying. If we move it, we can move it to the 53 put.
That's not bad.
You're not getting enough for the call spread.
What were you getting for the put? 70 cents?
No, like 80 something cents.
Then yeah, I would rather pull it up.
80 cents. I'd rather go from the 53 put to the 54 and just sell that put.
I agree.
So we're getting $104 using 619.
Yes.
Okay. Yeah, 20 rank micro crude.
I like it.
And this is the micro, so it can get like we have closed micro crude positions for a loss. It can get big, but
micro crude.
It was.
Go ahead.
Oh no, go ahead. Go ahead,
it's
Liz.
okay because I think I'm getting. I think it might be my internet, so I didn't mean to interrupt. Go ahead.
No, I was just gonna say, like we have closed positions in here for a loss before because they've gotten too big. Like if it gets close to at the money, this put was using $600. Let's say it becomes an in the money put by a couple dollars, then it's, it can get a little bigger if vol increases. It could use a little more buying power. What were you going to say about
I don't remember, because then as soon as you got filled, I got lost and I had to refind you again.
But what do you think of closing positions? Let's say you're selling all out of the money options, and instead of rolling them, you just close them and take your loss. Because as I was teaching the kids and teaching them selling puts, and they said, what happens if it's a loser, if the stock's down, if it's a loser. And I said, well, then you can just close it and take your loss and start over in the next cycle with a new put. Like I just felt like that was a simpler way than trying to explain rolling to them.
Oh, because essentially rolling is closing and starting over. So I think that was smart.
Yeah. Right. Like rolling is closing and starting over, but sometimes when you're rolling, you're trying to get a credit. But I don't know.
I think that is the smartest thing to do, is be like, just close it and start with a new one instead of being like, put it in as a roll.
SPOO's down 15.
I know. Look at that. All of them are down right now.
Yeah.
We got a little bit of a pop on Friday at the end of the day, but it didn't pop up enough to.
I think when we see Bitcoin down, then the market kind of follows. It's like.
Well, Nikki had a good point today. He said when Bitcoin moves a big move, not like an inside day.
A big move.
Then the market follows. And $3,000 is a big move in Bitcoin.
Yeah. Yeah.
It's nothing to shake a stick at, Jenny Andrews.
No, I mean, we had Bitcoin up to like 90. How high did we get? I thought we were getting like 96, or how high did it get? It felt like it was making a comeback. Felt like it was making a comeback.
I don't like the 86 level. Yeah, it got up to 92.
Almost 95.
I do not like the 86 level.
No, it got up to almost 95, 94, 950. So almost 95, and now back down.
Look at that. It's almost where we started the year.
Is it?
Yeah. So, I mean, if I'm reading your chart right, isn't 2025 right there? Right at the beginning of the chart.
Well, what kind of chart is this? This is weird. Look at this. It goes from, because I'm in BTCZ. I got to go in $/. $/BTC. Okay. So now where did we start at the beginning of the year?
Keep going back. You got
2025. January 1st was 95,000.
95,000. But then we dipped in February. So I think that's why the chart looked a little bit interesting, because right then, I mean, in January we were high, and then as soon as we get to February, we kind of dipped underneath it.
So Bitcoin started the year 95,000. Now it's trading 86,000. So it's lost it's lost a decent amount this year.
But it's got a high volatility. Look at this. It went as low as 75.
Oh, I know. Yeah, I know. I'm just curious. So that's Bitcoin. And as far as SPY goes on the year, January 1st, let me see, where were we?
We're up 20% or something.
Open was like 580, say 590, so 590 to 680.
That's a lot.
Yeah.
It's a lot.
So, but for like the crypto buy and hold people from like January 1 to the end of the year, it's down.
Yeah.
10%. 10,000.
But it has the volatility to say that it should move more than the S&P 500, because the SPY vol. Yeah, SPY vol is pretty normal. Will you do me a favor and look?
Kind of a weird year. I'm curious to see how it's going to end.
Yeah, it has been a little bit of a weird year.
And it really has. And honestly, like I think a lot of people out there, you look at the SPY and how much the SPY made on the year, a lot of portfolios might not show that because I feel like it was just like a handful of the stocks.
Yeah, I do. I feel like it was a handful of stocks too, but I feel like this was a tech-led rally, and now the techs are kind of pulling back a little bit too. So Can we see what some of those are doing? Can you look? I want to see what Google, Nvidia, and Oracle are doing as our closing.
Google's down today.
Okay. Oracle, I think, is down. I heard. And that had some massive moves down last week.
Oracle down again today.
Yeah, I mean, look at Oracle. Oracle's went from 340 all the way down to 185.
And it's still high rank. And in January, how far can you get? Like, it's trading 185. You can still get, and I know it's not a lot, but you can still get $85 on that 150 put, down like $35.
That's not bad. What do you think about a big lizard with a fat tail here, though? We've got a 50 rank in a tech-heavy product.
So you can make it $15 wide. No, you got to go $10 wide.
Yeah, go $10 wide because you got to buy something.
And then, so you've got a $10 wide where you're collecting 1085. You have $900 in risk to the downside.
That's not bad.
It's not bad, but if you get your break even to 175 and you're using $1,000, and if it goes up, you're only making 84. I honestly would rather just sell the 175, 165 put spread for 265. You're using less buying power, and you have more profit potential if it goes up. Even if you.
That is always the case too. And you have the same. You have a smaller max loss, and you have a higher profit potential. It's not bad.
I'll ship this put spread in Oracle.
Okay, cool.
So,
I mean, that rank, why was that not on the IV rank list?
I don't know. Is it not in the Tasty default?
That's what I'm saying. So take a look. Go back to that list because that's insane.
And Frank, just breaking news from Frank. This is the first time silver has been over oil, other than in 1980.
Oh.
Go back to what list?
What I'm saying about that list, because there are implied volatilities everywhere, and I kind of thought that. Then we get in there, and I was like, I guess not.
Well, that was just the Tasty default. Oracle must not be on here.
Well, why? Check the other ones. Like, what about your NVIDIA and Google? Because I didn't see those on there either.
If I go to Tasty Fast Movers, what do we have on there? Oh, CCJ is on there.
Well, that's what I'm saying. So there's a lot more on there. So where are your tech companies? Where is what list are those on? It's not on Tasty default?
I'll go on. Well, you could go on.
Because like Archer has a 33.
Here, we can go into the NASDAQ. So we can just go into the, NASDAQ 100 here. And then you can search by IVR here. And then you've got just the NASDAQ stocks.
Yeah, look at all the ranks.
You've got, yeah.
Tasty
default. I think you have to just be open to looking at multiple watch lists. As far as the day goes.
Like I want to see, hold on, I'll do this. I'm not going to force you to do that. I just want to look at stuff.
We did the Iron Condor in SLV. We sold a put in FLY, and we sold a put in MCL. We're still working that Oracle put spread. I'll adjust it by 3 cents. Final offer.
Filled. Good job.
Okay, and now we're in Oracle. So 4 trades. Not bad in an hour.
Yeah, that's not bad at all.
And we're out of time. We are over our time.
Yeah, we're working overtime. All right, Jenny, you have a wonderful afternoon. I will see you later today. And everybody remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We will see you tomorrow, live from the SIBO.
Look who's back testing. Tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tastytrade.
Tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tastytrade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Dale pa' acá, estoy seguro que te va a gustar. Dale pa' acá, yo estoy seguro que te va a encantar. Dale pa' acá, estoy seguro que te va a gustar. Dale pa' acá, yo estoy seguro que te va a encantar. Ahí, ma, tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear. Ahí, ma.
Tasty Nation, welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal. And of course, Ryan Grace, as it is Crypto Monday. Markets are trying to sell off a little bit. E-minis down 9, NASDAQ down 50, down the Russell down a little bit as well. Bitcoin down 3.8K, sub 90K here, and ETH down as well. But some more earnings this week, some more numbers coming out. But in terms of SPX expected movement, nothing too crazy for the rest of the week. 88 points through the end of the week. We'll see if we can exceed that, match that to the upside or downside. But starting off the Monday with a little red here.
I'm going to say it's going to be over.
Like sell-off is over?
No, over 88 points. I mean, look, man, we came into last week with very small ranges coming out of Thanksgiving holiday, right? And it was like 40 something. I'm looking now, points, 50 points, 30 points. And then, of course, we had the Fed, where we had like a 75-point range. And I just looked. I really kind of forgot, but the rest of the week was a little bit higher, like as far as like moves, ranges, whatever. And I think volatility is climbing back a little bit, much to our chagrin. Like, we were kind of looking forward to this kind of end of the year Santa Claus rally, but I don't know. Coming into this Monday, there's some negative news here, or negative feeling, I should say. Not negative news. It's the negative feeling, and the worries about AI doesn't seem like they've gone away. So I'm going to anticipate moves. Obviously, you mentioned the rest of the week. We got non-farm payrolls. I think 2 of them. I think November and October tomorrow morning, which is so wild, by the way.
Just throwing in those numbers right before.
Yeah, you know what I mean? And then we got CPI later in the week. I don't know how much these things are really going to affect, but I just feel like it's, I don't know. It's not shaping up to be a good week with expiration coming up at the end of the week here so far.
Yeah, definitely some interesting moves. Before we get to your take on crypto, though, how about those Bills?
How about those Bills, baby?
I saw the score. I was like, come on, like figure it out. And then all of a sudden, James Cook just ripped off, what, two touchdowns, 3 touchdowns? I mean, what a comeback.
Yeah, week in, week out, they've started slow. I think I saw a stat yesterday where the Patriots are the best first-half team in the NFL. Bills are one of the best second-half teams in the NFL just in terms of aggregate points scored. So that played out as the stat would lead you to believe. But a fun game, a little bit of an emotional roller coaster. If you're a Bills fan, you start kind of in the hole, and then they have to climb out of it by the end of the game. But it's exciting nonetheless.
I mean, you should be excited. Look, I'm just going to say this. You don't have to comment on it because I get it. As a fan, this is not the kind of thing you want to hear. But just as an outsider looking in, this could be a pretty good year for you guys. Your biggest nemesis in the last several years are who? The Chiefs.
Yep.
And they're out of the picture.
Yeah.
So you know. So you know.
Yeah.
It's there. It's there to be had.
The Bills don't have the best run defense at times. They don't always tackle. So that, to me, is a concern. But I suppose if you can put up 40-plus a game, you're going to be okay on the other side.
It's there to be had, man. It's wide open. As I said, this is the first year since 1998 with no Patrick Mahomes, no Tom Brady, and no Peyton Manning.
Wow.
That is actually interesting.
It's an interesting stat.
But yeah, this is going to be the most exciting postseason in the last 10 years.
Yeah.
For that reason. But there's also so many teams that are just coming up out of nowhere.
Right.
Like the Texans.
They look good.
They're going to make a run. Like they have the best defense in the league, not even close. So yeah.
The Rams are still pretty good.
Yeah.
Rams are still pretty
They can stay healthy.
If they can stay healthy, yeah. Yeah. It's the thing.
But the Bears, though.
Bears got to win. Good, better, best. Good, better, best.
There you go.
Never let it rest.
Uh-huh.
They look good. They look good. I mean, God, that dude, man, that guy, Myles Garrett, that guy looks like a cartoon. I mean, his muscles are just ridiculous. That guy is so big. Oh, my God. He's going to get the sack record. I mean, that's a wrap.
Yeah.
He got 1.5 yesterday, right? I think he got 1.5. I think he's like 1 full sack away from tying it.
Yeah.
2 games ago.
I feel bad for him because he's only played on teams.
It's unfortunate that he's on the Browns.
I don't think there's ever been a guy who has the sack record who was on the one of the worst teams in the league. I don't think that's ever happened. I mean, I don't think that was the case when Strahan got it. It wasn't the case when TJ tied him. It wasn't the case back in the day when Lawrence Taylor might have had it and the Jets have always sucked. Sorry, Chris. When Mark Gastineau had it. So I don't know. That is interesting. That is interesting.
Did I see Michael Parsons go out with an ACL as well?
Yeah, it was a rough.
That's a crappy weekend.
Yeah, it was a rough day as far as that goes. Yeah, wild.
Yep. Crazy times in the football world. But yeah, before we dive into the slides today, real quick recap with the market. As I mentioned earlier, Bitcoin down about 4%, ETH down 3%. Wheat, crude almost at 55. That's kind of crazy. Natty gas down 1%. To the upside, not much moving other than silver, of course, the train that cannot be stopped. Silver, copper, and it's interesting, though, because silver's been pretty disconnected from the other precious metals. Gold's actually down on the day. And where's platinum at? Am I blind? Maybe it's not. Let's see here. Platinum up 3%.
Yeah, platinum up.
So yeah, platinum and silver up, gold down. Interesting moves nonetheless. But yeah, silver, what a move this has been. And it's trying to recapture the recent high we've realized, but we'll see. I mean, silver at 60 plus.
I mean, it's crazy. I know, yeah. And I know I was looking late last week, looking at the other times where we've seen silver really kind of do something similar. 2011, it was 48. And I think, God, what was that? Was that, I can't remember the other year where it was like 30s and change. So it's just weird. You feel like when it made those huge moves before, you feel like it was not too far from here, but it was much lower. So yeah, this has been quite the run in silver, and it doesn't show any signs of slowing down.
Yeah, it'll be interesting to see how the year ends with these precious metals. But we thought it was over with gold, and now silver's ripping higher.
These have been the best performing assets, right, on the year. Silver and gold, I feel, more so than the market. I mean, they've outperformed the market.
Silver's up 100% on the year.
Yeah, gold's up 60%.
What a year!
What a year indeed, and platinum too. Platinum's up almost 100% too.
Yeah, platinum looks like it wants to run to 2,000.
S&P 500 is only
platinum ferry. Is that what it's called on the
platinum ferry? Yeah.
Oh man, love it. But yeah, if you want to join us on the YouTube channel, we're streaming live there. Just head over to Tastylive. I've got a couple links pinned in the YouTube chat. One is the referral program. If you and a friend, or if a friend opens an account, you both get $100. And then the money match program as well. If you don't have an account with Tasty, you can open one, get a 1% match up to 30-day window of any deposits and 30 days commission-free trading. So check those out.
Heck yeah.
But yeah, why don't we pop over the slides?
I did have to look at the chart to remind myself. I do remember when platinum used to be $2,000. I thought I was crazy for a second, but I remember that. That was in 2008. Yeah, back when gold was, I don't know, $700 maybe or something like that. But I remember that. I thought it was crazy, but yeah.
Platinum was popping off.
Yeah.
Now it's back.
Yeah.
Crypto update, December 15th. I feel like every Monday we have a pretty big move in the crypto world. To the downside today, but we've had some realized volatility in there over the past couple of weeks, and we're kind of sitting around this channel between 85 and 95K. Is there a breakout? Are you waiting for more? What say you, Ryan?
Yeah, I think you're chopping around, you're consolidating, whatever the term is you want to use here after the blow up. When we saw the leverage get taken out of the market in really the beginning of October, feels like forever ago. And then you didn't really get any positive catalysts one way or the other. I think for a second, when you look at the NASDAQ, you look at the S&P, a little bit of a growth scare, maybe priced in to this December data that we're about to get. I don't know how much you guys read into the fact that we're going to get a retail sales report from, I think, October and a jobs report from October and November. Does it really matter? We know that going forward, it's likely we get a new Fed chair. That person is likely to be a bit more dovish than where Jerome Powell is today. That said, the Fed is cutting rates. They've started Treasury bill purchases again, the end of QT. So I think there's a lot on the horizon there that's net positive from a liquidity perspective. But yeah, to start the week here, sad price action, guys. That's how I would describe it. Sad price action. Down about 2% right now when we look at Bitcoin. About the same, almost 3% when I look at ETH, underneath 3,000. A lot of red on the screen here today. Lower than 87, lower than 3 when I put this together. Momentum has shifted back to bearish to neutral. So it looked like for a second in terms of tracking those exponential moving averages that we might get a little bit of positive price action here. Just hasn't been able to hold a rally. So if you look at Bitcoin, 93, 94, that's been kind of the top there. ETH's been a little bit more volatile in realized terms. And we got all the way up to about 3,500. But a quick 500, 600 point move following that. So until this changes, I'm not really all that keen on stepping in and trying to buy dips. If you got a bigger level, let's say 80, 75 in Bitcoin, something where from a long-term perspective, maybe there's an opportunity for an entry. That'll get my attention. But for now, I'm kind of just sitting on the sidelines and waiting for this to all resolve. What we have seen, at least with Bitcoin, is a bit of a bottoming process possibly in place. I think it's going to take more than a couple weeks to play out, but you've seen a series of higher lows in there. Same thing with ETH. If those levels get taken out, it is what it is. The path of least resistance has been lower, but over the last month and a half, you kind of have had a little bit of a structure that's being built in there. So we'll see. That said, again, no way to ignore that, red across the board here. If you jump to the next slide, we've got our weekly expected moves. So volatility has come in a little bit, lower spot prices. As a result, we can expect smaller or tighter one standard deviation weekly ranges. So if you recall, over the last month, we had about a $6,500 move or so in Bitcoin, about $1,000 less right now, $5,500, right around $300 for ETH. And then we've got Solana, SUI, and XRP. And you can see those implied volatility ranks across a 3, 6, and 1 year basis, 3 month, 6 month, and 1 year basis have come in quite a bit. A lot higher. If you go back to October, the IV rank for ETH was closer to 80. So lower realized vol, lower implied volatility. I would describe the mood in the market as generally apathetic. There's just not a lot of excitement or attention on crypto right now as it chops sideways versus what you guys described, what we're seeing in precious metals and industrial metals. So that said, where are there potential opportunities? One thing that has my attention, and I do not know the specific reason behind this, but Bitcoin Cash as an outlier has been a great place to hide out. That's up quite a bit. BCH is the symbol. Price momentum in there is positive, where everything else is continuing to trade lower. So that's just one call out there. Additionally, as I talked about this with Jamal last week. If I had to pick between Bitcoin and ETH right now, in terms of what I'm seeing, I think the trade is in ETH, right? You look for the relative strength in there. We look at the ETH BTC ratio. That's looking a little bit better. Bitcoin market cap dominance is starting to slip a little bit lower. And so we'll see, that's going to take some time to play out. But that has been the place to hide out, I suppose, between the two of them. ETH's been a little bit stronger than Bitcoin. So if we go to the next slide, you'll see a couple of those values there. So yeah, you can see Solana versus Bitcoin is weak. Solana versus ETH is weak. So I'm not really excited to step into a position or a trade in Solana. It's trading about 126. Hasn't been able to do much. Maybe at some point it rips higher, but it's not now. But you do have, again, that relative outperformance in ETH versus Bitcoin. And when we look at those exponential moving averages, they are looking a little bit better from a momentum perspective when you look at ETH over Bitcoin. Doge, as a representation of memes and alts and smaller market cap stuff, continues to underperform as well. So yeah, it's not a great trading environment today, but we'll see. Maybe that changes in the coming months.
Yeah, we've seen Bitcoin dominance. We've talked about this before too, where when it was significantly stronger, we were looking for, if this comes down, where does it go to? I like the ETH call out. Bitcoin Cash, certainly interesting, but there's, at the end of the day, it's more opportunity to take your stab at trading a range or getting in at lower prices. I mean, ETH was almost all the way up at 5K just a couple months ago, and we're sitting sub 3K now. Similar story with Bitcoin. To Ryan's point, I think with the momentum being to the downside, if you wanted to be more patient, I think there's likely more room for the upside and downside moves. But yeah, I think looking at the data here consistently can sort of paint that picture, and we can get some more trade ideas down the road as we start to see some more stronger signals of some pattern forming or a bottom forming here. But your point of higher lows is definitely there in the Bitcoin futures, and we'll see if we can get a little bounce from here for sure.
Yeah, I mean, you do have, I think, a tailwind in a weaker dollar. We'll see if that trend continues. The dollar's trend has shifted to bearish now. We're seeing a steepening of the yield curve, but the path has been lower in terms of rates. Certainly at the front of the yield curve, you have some of that Federal Reserve dynamic that kind of feeds into the market in terms of the balance sheet. But we'll see. I mean, right now, look, the trade has been to sell rallies in crypto, maybe sell out of the money call options in things like IBIT or ETH, or if you have a longer term position, you can generate a little bit of yield off of that. And in this environment, seems to be one in which you want to sell some calls against those positions. As we know, this can move very, very quickly in a very short period of time. And so that can all change. But again, for now, this has been pretty weak. That weakness continues. And here today, you're seeing that alongside some of the weakness in the equity market.
Yeah, it's been tough for pretty much all of the markets that had their heyday earlier this year. But yeah, NASDAQ slipping, E-mini slipping a little bit. Bitcoin, Ethereum highly correlated to those sectors as well. So, yeah.
In real danger of getting coal in our stockings, gentlemen. Real danger.
It looks like that. But at the same time, and I'd love to get your guys' opinion on this, I'm looking at shorter term price performance and like some of these signs that you're seeing, maybe not necessarily day to day, but I think you would argue are generally positive or what you'd want to see. And what I mean by that is what's underperforming short term? Well, tech is underperforming short term. But that was a very crowded trade, a lot of attention on AI, of course, and then your data centers, your nuclear trades, quantum to some extent, a lot of volatility there, and so that gets people's attention, and some of those things absolutely ripped higher. But what are you seeing now? You're seeing a broadening of performance. I've got the Russell up here 6% over the last month. NASDAQ's only up about 0.7%, S&P 1.5% or so. You're seeing, in terms of industrial commodities, they're trading pretty well. And now natural gas has gone back to kind of neutral bearish from a pretty bullish move. But you look at the price of copper, you look at, as you guys mentioned, silver, you have other industrial metals. Oil has been that outlier, but I think that then helps to feed into, a little bit of disinflation when you think about CPI, or you just think about that input into inflation as energy cost. So if that's declining, that should be a little bit better for the consumer, generally speaking. So when you look around, there are some signs of decent growth or metrics that would feed into that, where it doesn't look like it's okay, there's pending collapse because some of these AI stocks are selling off. What do you guys think when you kind of look around the market?
Yeah, this is something I've kind of been saying. I feel like I'm almost like a broken record. I mean, we talked about it last week. I talked about it with you even a week ago this time. It's a lot of the same money that's trading the AI trade and Bitcoin. And so for those who are super interested in Bitcoin, honestly, again, I'm not saying because I'm a Bitcoin bull. I make observations. And it's clear to me that for the most part, it's struggling because that's who's trading it. That's the same type of money. And so a lot of people who've been weak or, kind of weaker on the AI-related names, the tech-related names are also kind of weak on Bitcoin right now. It's the first time that I can remember that Bitcoin has been so weak and there's not a major story surrounding Bitcoin itself. It's just, it's being swept up in that trade right now with the tech trade and AI trade. So it's actually more concerning for the AI-related stuff. The news around Oracle and their bonds, it just doesn't seem to go away. The amount of money that's circling around between the different companies in the AI sector, it just hasn't seemed to go away. This has been a real story for the better part of 6 weeks. And as soon as we start to gain some headway in the market, these stories come up once again. So, until I guess there's some clarity around the amount of spending, because it was interesting. I feel like 2 years ago, it was like they're spending and they're spending and they're spending on AI, the Metas and the Googles and all that, but is it paying off? And that's the thing that we were noticing around their earnings. Now it's just they're spending money towards this, and where's it going? It's kind of, I don't know. I don't know what to think of it. I honestly, I wish the market would make up its mind one way or the other. Are you really annoyed about it and are you just going to take us down 5%? Or is there really not an issue and it's just, I don't know. That's kind of how I feel right now. The market hasn't seemed to made up its mind yet.
Yeah, I like the call out of, some of these specific products, some of these specific equities taking it on the chin. But when it comes to ETH, Bitcoin, Solana, the narrative isn't there's nothing that's seismically changing here. It's really liquidation that hurts, not necessarily liquidation, but a sell-off that hurts. And I see it as an opportunity that you haven't been able to get, excluding the 3 days here over the last month and a half, but we haven't seen Bitcoin below 90 since earlier this year, like literally like the first couple days of the year. So I like to look at it as an opportunity, especially long term, given everything that we've talked about on the show with Bitcoin and Ethereum and anything else in between. But yeah, I definitely see it as more of an opportunity than anything else. And I'm positioned for that in ETH and IBIT. The year-long trade in IBIT is about to roll off here in the next couple of days, but I'll continue that through next year, because even with this big sell-off, it's still a profitable trade with my strikes at 65. So that just goes to show the implied volatility that these products offer. And even if you are bullish, neutral, you have the ability to pick up a lot more premium than some of these moves are resulting in. And IBIT, if you look at Bitcoin from the beginning of the year to now, we're pretty much flat if you look at IBIT specifically. And the implied volatility has represented premium that does not equate to flat. It was like 50% all year, regardless of Ivy rank. So I'll still be in these products consistently, but I for sure see this as an upside opportunity. I don't think Bitcoin's gonna, fall out of bed here. I mean, it's already had a nice 20-30% sell-off here. But I like the fact that we've kind of consolidated around here, especially if you've been waiting for some kind of bottom to be forming. I think, we're at near the bottom of the range of where we've been trading over the last couple of weeks here.
Yeah, and I don't think the weakness and again, this is a very small asset, relatively speaking, but I don't think the weakness in it is reflective of a broader weakness in the economy or a risk there. As I mentioned earlier, calling out some of the performance in other areas, specifically the Russell. But when you look around, you have a steepening yield curve. You have sectors that are outperforming, such as industrials. You look at how materials are trading. Like some of those areas where you would think if there was just a drop-off in demand or you had pending recession, et cetera, they would certainly be underperforming. They look pretty healthy right now, right? When you look at credit spreads, when you look at even just use HYG, the high yield ETF as a proxy for some of this, it's not bearish necessarily. It's just, these things there's no like pending blow up from what you can kind of read, at least today. I think you're going to have a generally decent environment over the next quarter or so.
Yeah, HYG is always one to watch when we're in serious, worrisome times.
Yeah, I think, like we've said time and time again, if you're willing to take a shot here, if you have the ability to take some risk, even if it's in a defined risk way, it's definitely interesting. But yeah, in IBIT and ETH, I'm positioned for upside moves here, and I'll continue to layer those on, especially if we continue to sell off here.
That's what we do. That's what we do. Yeah, all that said, I know we kind of have a somber tone here, but it's just like the market seems to be dealing with some indecision right here as we head into the end of the year. I thought we had kind of gotten through that given last week, but it would seem we have not. And it seems a little weak. I'm not, to your point, I can't believe I just said it. I can't believe I just said to your point.
It's okay. You get a couple each show.
I talked to him last week. I'm trying to change that. I feel like too many people say it. As you rightly noted. As you rightly noted is my name. As you rightly noted, I feel like it's these data that we're going to come out with. I don't know how much those really matter. Normally, I would say, things are going to change on the other side of that. I'm not really sure how much they matter. And I don't know if this is the market telling us that they do matter and we're nervous as they're coming up, which, again, you could tell based off of volatility a little bit. But I guess maybe we'll see by the end of the week. But, again, this is always one of these strange weeks. We are getting some data, whether it matters or not, and we're getting an expiration, and that always ends up being a little bit strange. So
it's pretty big expiration too. I think it's like $5 trillion in notional. I don't know if that's the biggest ever. I don't think so, but you could easily see this kind of unpin and drift one way or the other into the end of the year post that expiration.
Yeah, fact remains there's going to be a lot of unwinding, right? For sure.
Looking at the YouTube chat, seeing if we have any crypto-specific questions. Many of you check and discuss crypto futures. We also check the spot. Which one do we trade? Which one should we check, et cetera, et cetera. So I think it depends on what you're trying to do. I mean, you can trade the spot. You can buy directly through here. If you're trying to trade options, that's going to depend on what you want to do in terms of risk. Like you can trade Bitcoin futures options, but IBIT is certainly a smaller product. You have a lot more flexibility there. Same with ETH-A. Both of these are going to track the price movement of those products themselves. But from my size account, I'm trading IBIT and ETH-A with options. I think they're both super liquid, and you can get your directional exposure or neutral exposure through those products. Ryan does a lot of liquidity pools, so it's really just a matter of like how you want to expose yourself to these markets and what sort of direction you want to take. I don't think there's really a right or wrong answer with that.
Yeah, I agree. It just comes down to whether or not you want to employ leverage. And I think with some of the futures products, they're relatively large in terms of the notional that you have exposure to. And so when you have something that's as volatile as this is, and sometimes it doesn't seem like it's all that volatile, but I always want to remind people that it's a 50% realized vol asset. It's $100,000 or so. So that's $50,000 on each side within one standard deviation on an annualized basis. When you add on a ton of leverage to that, it certainly amplifies things. And when you do that with a product that's marked to market, you could just blow up when you're wrong short term, even if you were right over the long term. So that's why I don't like to use a ton of leverage. And if I'm going to use leverage, it's going to be in something like the options on an ETH-A or IBIT or one of the other ETFs. But most of the time, I'm just buying spot. And when we look at, okay, what are prices doing? Most of the time, we're just looking at the spot market. There's not going to be that much of a difference between the future price on a 1 month basis and the underlying spot price. If there is, then there's a real trade there, which I think you see a lot of institutions take advantage of, where you could be long the underlying spot, you could be long the ETFs, and then you would sell futures against it. It's going to be capital intensive, but you're able to capture that spread and that basis trade there.
Thoughts on XRP?
I don't own it. Yeah, I mean, there's the XRP Army. Ripple as a company is doing a lot in this space, of course. It's not something that I own. Right now, most of my positions are concentrated in, or my portfolio, I should say, is concentrated in Bitcoin, ETH, some Solana, a few other tokens. We've talked about some of the DeFi exposures, but I don't own XRP. No, not that I'm against owning XRP or anything. It's been, it gets you farther out on that risk curve where we're not in a, up into the right environment with crypto prices. So I'm just looking to take less kind of volatility in that sense.
Yeah, and we've talked about that where like when you have these environments where Bitcoin and ETH are the dominant products that most people are trading, once you get into sort of those fringe names or less popular products, you can see some more downside volatility within those products. And if we look at the watch list here for crypto, you can see there's plenty of downside movement today with a lot of these, but most of these are down more than Bitcoin and ETH and Solana. So just another point of like, when things are looking grim, you might see more downside movement in products like Pepe and other more less notable products, we'll say. Are there any legislative things you're keeping your eye on? I know we've brought that up before with some things happening in the future, but is there anything 2026 that you're looking at?
Yeah.
We only have a couple days left before the new
I know, right?
At least for this show.
Yeah, as we get into the new year, you're going to look for the government to make some progress around the Clarity Act and define, what the SEC is going to have oversight over, what the CFTC is going to have oversight over. I think once you get a framework, once it's known, You're going to likely see more institutions come to the table. There'll be more participation in the market. There will be more products that are built. There's more things that are probably going to be built on chain. So that's what I would keep an eye on, is like, what progress do we make from a regulatory standpoint? And the reason for that is because that will then bring in larger pools of capital or larger players. Not that they aren't in some ways there already. But then what you look for is, okay, what banks are making XYZ announcements, who else is participating, larger corporations, what are they building? I think you're going to see more applications built on blockchains like Ethereum. You're going to see more use cases. That's going to pull in more users and generally should create more value. But it's going to be on the back of, some regulatory developments. So that's what I would keep an eye on into the first half of next year.
Yeah, I think the more information we get on that, the more the market will digest that information, and we'll see a clear picture one way or another.
Well, and you're starting to see some signs of it, even with these digital asset sandboxes, these innovation sandboxes. The CFTC just came out and I think issued some guidance around crypto as collateral for futures trading. And so, if you get to a point where you can get a margin loan against your Bitcoin position, you could buy securities with it, right? You can't do that today. That probably is a little bit more interesting to people when there's more that you can do with this. So that's all going to be on the back of, regulatory developments, and that's what I would look for as potential catalysts. Like, don't sleep on it, sort of thing, into 2026.
Love it. Someone in the chat saying short call spreads and IBIT have worked twice in a row. I mean, yeah. Like Ryan mentioned in the beginning of the show, selling the rallies has worked recently. But yeah, just in general, I mean, this product itself, 50% implied volatility has been the number that we've seen at a minimum. I mean, the Ivy ranks 52, but I don't recall this going much lower than the low 50s, high 40s, if it even got down there. But 50% IV, 60% IV, plenty of premium to sell premium against risk or just taking risk on both sides. That's what I've done all year. And like I mentioned, I'm all the way up here at 65. And this is going to expire in 4 days, but still a nice trade, all things considered, even with the sell-off here, just because you collect so much premium through the year that you can offset a ton of intrinsic value risk moving against you, which is what I've done on this recent sell-off here.
Nice.
Indeed. Any other questions in the YouTube chat, be sure to send them our way. Are there any new projects you're looking at from an ETH standpoint? Anything that stands out to you as unique that you've been keeping your eye on? Or is it more of just trading those ranges in Bitcoin and ETH and seeing what comes to the surface after?
Yeah, at this point, it's largely been just because, you look at all of these tokens and for the most part, they're positively correlated with one another, varying degrees of volatility. On the margin, it's the macro environment. It's that liquidity impulse. Those are things that tend to act as catalysts for price action. And then you can see that rotation into some of this stuff that's a little bit smaller market cap, and you get the outperformance at times. And we always refer to that as alt season. And you really haven't seen that here. I think you need to get a new all-time high in ETH before you really get materially higher prices in anything else. There's nothing that I'm really looking at as like a new project that just launched. Monad is a chain, another L1 that just came out that has a little bit of fanfare around it. But I think what I'm looking at more so is what happens with some of these DeFi protocols if you get clear regulations. We've seen Uniswap come out and announce the fee switch, which will use some of the revenue from the exchange to buy back tokens and then burn the tokens. So it's the equivalent of like a share buyback, reduces the total supply that's outstanding or circulating, and then should it continue to generate higher revenue over time, right? That revenue per token or that earnings per share goes up, and that's a way that the token holders can accrue some value. I would look for more of that in terms of value unlock in the DeFi space. Another protocol or token being Aave, so that's a borrow-lend market. These are real use cases. They're decentralized financial services. They've been unregulated. It's not clear as to exactly how the government's going to approach this, but we are of the belief that it's going to be positive, right? So when you get those regulatory developments, I think that's where you could see some unlock in terms of value in DeFi. And I think you're going to see more consumer applications that are built on top of these networks or on top of these protocols that allow people to, go through a KYC process, and it will be very similar to opening up a brokerage account or an account with another financial services company, but will leverage these protocols on the back end. So it's not necessarily like fully decentralized in that sense, but it's something where you're going to be able to generate the yields that exist or have access to these things more easily once there's a regulatory development. And as you have more participation, these chains should grow, or these protocols should grow in terms of revenue. And I think there's going to be mechanisms to pass on some more of that value to the, call them the shareholders, the token holders in that sense.
Yeah, and I think that'll be something that comes up that's interesting. Is just the restructuring of some of the yields and payouts that you get for participating with a lot of these, which will be cool. And it just brings more incentive for people to start doing so. So yeah, love it. Don't you have something on an ETH? Are you?
I have a Zebra. Yeah, okay. Also long delta situation. I have a Zebra in February. I got going on ETH, and then similar to you in IBIT, I have a straddle, the Jan straddle. The 55 straddle is what I have on, and yeah, just kind of holding that probably for the next couple of weeks. Eventually, we'll roll out to Feb.
It's crazy that we're almost at the end of the year here. Halfway through December.
Oh, yeah. 10 days of Christmas as of today.
Quickly approaching.
Yeah.
Man, I got to do some shopping, guys.
Yeah, I went to a mall nearby us in Rosemont, the fashion outlets. You couldn't even get into the parking lot.
Wow.
Yeah, you had to kind of park you could wait in line, which I wasn't going to do that. Yeah, it was crazy. Very busy. It's that time of year.
It's that on-the-ground research. We've got the data coming out from the government, but it seems like it's okay right now.
Yeah. And so this particular mall, and I think this is a trend. I don't think it's just isolated to this mall. I like trends. I've always been, this is what I do in general. And so I've noticed over the last couple of years how a lot of malls went from, having like the JC Penney's at their anchor and all that, right? And you started seeing like more high-end stores in malls, the Gucci's, the Burberry's and all that. And then they do these lines, right? Like to create this, whatever, mystical, whatever thing, to create these lines of interest, right? They didn't have lines at these stores on the other day, because why would you do that? They'll be stupid as hell. You want people to come in and shop. And so there was not as many lines at these high-end stores. However, the one store that I saw a line, Uggs.
Interesting. Okay.
Long line, too. Long line. So that was kind of funny to me. Like, wow. But when you look around, a lot of people are wearing those type of shoes these days.
Is that publicly traded?
Deckers.
Okay.
Yeah.
Got it.
Yeah.
There was the Becky portfolio. That was the first thing that popped up.
The what?
The Becky portfolio.
What's that?
It's like Uggs, Canada Goose, Starbucks. But it was like the Becky portfolio was up like 200% last year or something crazy.
That's funny.
But yeah, I totally hear you. I mean, it's always wild when you have the hype of the drop or whatever's happening. But yeah, I can't do it.
Oh, and then there's some new like toy that's out. I don't know what it is, but it looks like kind of like they have a whole store dedicated to it, and it's like it looks like a Power Rangers / Voltron thing. I don't even know I can't remember the name of it, but yeah, that was kind of crazy. Like they're clearly doing a product dropped around Christmas, and they're trying to get some excitement. But yeah, they have a whole store dedicated to these things, and then they had people like you could take them out, and they had like how you have toys back in the day where they have like these little branches and you can pop out the pieces and build it. And so they had like a little build section off to the side too. I wish I could remember the name of it. If anybody knows, for sure, I wouldn't even know how to look it up. But that was very popular in the mall for sure.
Good old mall.
I'm guessing it probably comes from overseas, I believe. I don't remember.
Yeah. We'll have to dig into that.
Yeah.
We'll revisit.
Yeah.
Take a tasty field trip.
I could ask my wife to text it to me. She actually started looking it up immediately. I'm sure she has it on her phone.
Celsius, I have this call diagonal spread. The 50 is about to roll off this week. It's worthless. There's nothing to really do here. I mean, you could turn it into you could roll it out to next week. We could actually look at that. But it's a flat position. There's not much premium to be had in rolling out to the 11-day or 18-day. So yeah, I think this is one I'll let this thing expire. If we get a rally of like 1 point, this will be a profitable trade. I can take it off. But as of now, it's a scratch, and I don't want to roll into a vertical spread because that will just slow down the trade way too much. I'd rather keep the long option by itself in terms of being able to appreciate from a rally.
This has to be in the Becky portfolio, right? Celsius?
Yeah.
Strink? Come on.
Yeah. Definitely. Another XRP comment, bullish on XRP and other ISO tokens. XRP is now available on Solana and Ethereum. You're just not an XRP guy.
I'll have to buy some. Yeah, I mean, if it gets low enough here with everything else, maybe take a trade. There are some XRP ETFs that have launched, so I don't know if there are options on those yet.
Yeah.
But that's interesting to me too, where if you can go out 3-6 months, you can buy relatively cheap upside in those call options, and then it does, if it plays out, you've got a pretty good position on then. But yeah, just don't have any at the moment. I've been in it before. I've been in the XRP trade, but nothing currently.
I assume people are mostly bullish on this because of the price point.
Yeah. Well, there's a lot that they're doing in terms of connecting institutions and bringing more people into the network for settlement purposes. And there's some growth with the stable coin on the XRP ledger. So there's a lot of positive signs, but I just think like right now it's just one big trade when you look at the crypto market. And since hitting that all-time high and drawing down about almost 40% off of that all-time high in Bitcoin, we've really struggled here. So maybe the catalyst is regulation. I don't know. You hate to think that that's going to be it. Maybe you get an announcement that some other company or even in some cases a sovereign central bank is taking a position. I have no idea. I mean, sometimes the stuff just flames out and then it bottoms and people don't even notice. And the next thing you're quite underway in recovery. But definitely not here today.
The bigger question is, what the heck is going on with our Costco, Mikey? This stock's getting worked today, man.
And I just gave them $500 this weekend. Steal. Yeah, it's wild to see. Something I never thought I would see is Costco at the annual lows of the year after reaching a high where I was sure they were going to split the stock when they were sitting at 1,000.
It's really hurting them, I guess. I don't know.
Yeah, it is wild times for Costco, that's for sure. But if you need new plateware, they do have a 40-piece set. It's $99.99. I bought that this weekend. There you go. And it was Mikasa, which is actually like a nice plate.
Yeah, it is. Yeah,
$100
Mikasa,
for a full set.
Really?
So I just threw that in the cart, and that's why I spent $500.
How often do you eat off of plates? Guy like you, no kids, no wife. I assume you would just eat off. I eat off of paper plates all the time. I'm curious. How often is that a special thing?
Like eating off of plates?
Yeah, like real plates. You eat off of plates most of the time.
Yeah.
So you don't use like paper plates? Shit.
Yeah. But I do see your point. Like when I was growing up, we ate off paper plates all the time.
Yeah. It's a huge staple in our house. Paper plates and paper cups.
Yeah.
Well, not paper cups. We use the solo cups, but whatever.
Yeah. But yeah, I guess I'm a plate guy. I don't know.
It's fair.
I don't know what to tell you. This segment sponsored by your local Costco. Yes, the one on Ashland. Tell them I sent you. And get some sushi while you're at it. That's the best part about that Costco is they have an Asian flair because it's so close to Chinatown. So you can get some fun stuff there. Branching out to some equities here. NVIDIA, 180 Feb 20 strike. No, 180 strike, Feb 20 call. Cost basis is $14. Currently trading at 12. What are your thoughts? If you're short a call, I think I would get rid of this. If you're short a call, trading at 12, cost base at 14. Yeah, I mean, you saw the drop from 210. Like I don't personally think that Nvidia is going to go like much lower, and a short call in an equity by itself isn't a strategy that I personally like to deploy, especially one that can quickly reverse and gather all of the interest in the U.S. and beyond. But yeah, it's a nice trade.
Yeah, I mean, I don't know. I mean, am I seeing that right? They were shorted at 14, and then it's 12 now.
Yeah.
Yeah, I don't know. I mean, why would you? Yeah, I agree. Why would you close that? Or I would say turn it into a strangle. But I mean, IV rank is so low at this point.
Yeah,
I mean,
it's
what are
tough.
you really doing? That's just a directional play, honestly. There's nothing wrong with that if that's how you feel. But I assume you're asking because you're thinking about closing it. Just close that thing. Move on.
Yeah, I might just if you want to be bearish, that's fine. But I think there's better ways to do it with less risk. So I would close this, book your $200 winner, and then just throw on like a put diagonal spread. Feb Jan, 180, 170, 10 points wide for $700. Like your profit potential to the downside is similar. You can make a couple $100 on a similar move, is what I'm saying, without all the risk. Not even close to all the risk that you have with a short call.
Or you can even just buy the 175, 160 put spread. I mean, right there at the money. I mean, if you're just literally having this on just to be bearish, there's easier ways to do it, like Mikey said.
Well, you take a profit. If you do get a bounce, you reestablish that position, right? I always try to look at kind of similar sets or signals across the market. So here is a fairly large component within the indices. It's trading towards the low end of its range, right? In terms of the probabilistic ranges and the implied volatilities, we can come up with some sense of what's highly probable, put it that way, right? Maybe it goes to 150, but come on, what would that take? And then what would you be seeing elsewhere? So when you look around, well, what are you seeing? In terms of the same thing, you're kind of trading towards the high end of that implied move in the VIX, 17-ish, 18-ish, not quite there. But, you're seeing that. You're seeing the NASDAQ, S&P also trading at that low end of the range, which doesn't mean you're going to bounce, but that's where you would typically bounce from. And then you have this short that's working for you in NVIDIA that very quickly, because we're only talking about like 2 points here, right? $2 in terms of the spread, very quickly could be, red the next day. So I think when you look at where we are, relatively speaking, in some of these other ranges, I don't know, not saying you're going to get a bounce, but this is where you probably would bounce from.
Yeah. Mm-hmm. Yeah, it's a nice trade for sure. I would just prefer to kick it over to defined risk, especially with IV so low. I think that's a great shout. Anytime you see sub 40% implied volatility in an equity that can move like crazy, I think it's not a lot of wiggle room if you're wrong, because you're not getting that premium that reflects a 50, 60, 70% implied volatility throughout the year, which NVIDIA has certainly shown can make that move. I mean, we saw this thing go from sub 100 to over 200 in a matter of 3-4 months. Like that's not a 30% IV move.
Ooh.
A couple minutes left here. Are you trading Coinbase, Robinhood, any other?
No, I haven't been in any of those because when you look at something like Coinbase, right, and I've talked about this before, it's similar in my opinion to your long gold or your long GDX or your long junior miners through GDXJ. So you have company-specific risk, you have operational risk, and you might think that Coinbase is a good company, sure, but like at the end of the day, it's the Bitcoin price is highly correlated to it, and it trades with more volatility. So in this environment where I'm talking about reducing exposures, or you've got kind of this one-way move to the downside, and you're seeing a degrossing in some of those volatility positions across crypto, I don't really want to rush into a Coinbase. Circle is kind of interesting to me at a lower level here. It's kind of back into the 70s, and so you look at that theme. I think you have to have the ability to be patient, right? This might be a 6-month trade, but I haven't done anything in there yet. But I've got enough crypto exposure that I don't need to just continue to layer it on via Coinbase stock.
Fair. Oracle, looking at Jan 165 puts. Yeah, decent premium relative to buying power, $1,600 in buying power. But with these types of trades, I think if you're selling any undefined risk, you have to be willing to roll it out. You have to be willing to defend it. I think if you're selling this put with a intention of buying it back, I think you just go with the spread. Like you can buy a 145 option, 20 points wide, barely give up any premium and reduce your risk entirely. But yeah, if you want to take stock at 165 if it gets there, or just keep the premium rolling if it doesn't, definitely like that type of trade. AVGO, would you sell a leap put, the 240 put for 14? I don't typically sell long-term puts like this, but I think just because if it's just a put, I think it's much better than if it was a strangle. If it's a strangle, you're just holding risk. You're not getting paid much at all because you have offsetting deltas. At least with just a put, if AVGO rallies here, you will get paid based on delta, regardless of how much time is left in that option. So, yeah, if you're kind of setting up a one and done type strategy, don't mind it. Are your personal accounts, retirement accounts, static delta, half static, half dynamic? Definitely a dynamic element to them, unless you're just like static long, whatever. But all three of us are trading dynamically, so.
Yeah, it's like half and half.
Yeah.
When you say personal, I assume for me, that means my IRA account, which I have I kind of have half and half static, half kind of dynamic deltas that I'll do from time to time.
Indeed. Couple minutes left here. Predictions on the rest of the week. You said over 88 points.
I say over 88 points.
Up or down? Or just
on the week? Oh, jeez. I mean, I'm going to say, this is boring, but I'm going to say flat, but I think we're going to move a lot.
So 88 points. We'll exceed 88 points up or down, but we'll end.
Yeah, I don't know how much lower we go from here, I guess is the thing. I mean, jeez. Yeah, it's hard to say. I mean, that's what I'm gonna stick by. I'm gonna say we're gonna go more than 88 points on the week in either direction, but we're gonna end up somewhat flat. It's gonna feel like a lot happened, but we're not gonna go anywhere.
I think we'll get back to the recent highs here. I think volatility is too low for this thing to really sustain. But that's my take. I think we get closer to the upper bound of 80 points to the upside.
I agree with you both. I'm with you, Jamal. Look, I mean, I think you're going to trade 90 to 100 points higher. You're going to get back up to 6,900. I think this is a dip that you can buy here, given kind of the macro setup, right? We always, especially in crypto, we want to come in and just watch this thing rip 5% every day, forever, always be right. Obviously, that's not the case. But I think, to your point, right, you're not seeing a massive expansion in volatility. If we saw the VIX trading well above, let's call it 21.5, 20, somewhere up there, like above 20, and you were staying there for a couple of days, you were starting to see signs elsewhere in the market, right? We weren't seeing like a bid in industrials, then I would be a little bit more concerned. But I think this is a setup for what probably comes in the next month or two, which in my opinion is higher prices. You got a dollar that's breaking down. That should be a tailwind, generally speaking. And I think, you're trading right simply here at the bottom of that recent range. Let's see if we get a pop back to the top of it.
Yeah. And would you be surprised to see a 7,000 pin at the end of the year?
I wouldn't be surprised.
I think it's baked into the narrative here.
Yeah, I wouldn't be surprised. I think the window is potentially closing for that to happen by the end of the year, given the way this week is starting. But if that happens, I wouldn't be surprised.
We'll see. That's it for us. Thanks for tuning in. If you have any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal's at Jamal Chandler. Ryan is at Ryan Fred Grace. And give Tasty Crypto a follow as well. I'm going to put the newsletter, Tasty Crypto newsletter, in the YouTube chat. I'll pin it to the top if you want to sign up for that. Totally free. And that'll be updated on Wednesday. Comes out every Saturday morning. We'll see if the market can give us a little bounce here. Maybe we can all be right. It's not working out so far, though. E-mini's down 20, NASDAQ down 100. Bitcoin hasn't moved too much since we started the show. But, yeah, we'll see where the rest of the week brings us. We'll be back same time, same place, 11 a.m. Central tomorrow. We'll see you then. Peace.
Tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tastytrade, pro-level tools, intuitive design, total control.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tastytrade.
Tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tastytrade customers.
Tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
I got a good feeling. I got a good
I was going for there. Welcome back to Risk and Reward. As you can see, it is a Monday for all of us. Interesting Monday today. We opened higher and have moved lower. We got iRobot declaring bankruptcy, all kinds of fun stories to discuss. But before we get into that, as always, I'm joined by my wonderful co-host, Errol. Errol, how are you feeling? What's going on?
Feeling good, feeling great. Hope everybody's doing well. It's pretty cold this morning, but I got to start off 12-2, baby. Go ahead and hand over the Lombardi Trophy.
That's not where I thought you were going to go after
We'll take it from here.
That's not where I thought you were going to go after you said it was cold. I thought you were going to talk about your hair icicles this morning.
Oh, no, yeah, that's been on the top of my mind as well. Just kidding. No, but I was thinking about the Bears and Browns game this week, and I know they were playing in like negative 20-degree weather, and it felt like negative 20 degrees this morning because the point that I was making earlier, my hair was completely frozen this morning. You know, I think I walked out maybe an hour after showering, maybe an hour and a half. It was barely damp, and for real frozen. I didn't even want to crunch it because I thought it could like crack and fall apart. So I was like, let me pause on that. But that's the morning so far. Other than that, pretty good. How about yourself?
Yeah. Broncos, look really good. Top of the AFC now.
Yeah,
the
proud of
Bears,
that.
the Bears just keep on winning. I can't believe it.
Oh, they're like 10-2. What are they right now? They're 10-3. What is it?
I think they're 10-3 now.
Is it 10-3?
I think that sounds right. Or maybe 11-3.
They deserve it.
I don't know. Somebody can correct me, but it's they're insane. I know that they're at the solo lead of the NFC now. That the Rams started to flounder a little bit. But not what anybody expected going into the season. Having these two teams at the top of the helm. I'm happy for the parity. I'm happy to see the Chiefs miss the playoffs.
I do. Happy to see that as well. But I gotta say, I am happy for the Bears fans. Like, that is a loyal fan base, right? Outside of the Browns fan base, I mean, Bears, they've had it really tough over the last few years. So, honestly, seeing them get some dubs, I'm for it. Maybe a Bears-Broncos Super Bowl, that'd be fire.
Yeah, the Lions fans definitely had it brutal forever, and now are finally getting rewarded for their patience in the last few years, and it seems like things are turning over a little bit for the Bears also. So, fun times in the NFL. My Bengals, sad case. Just a lost season. Hopefully we don't lose Burrow in the offseason. We'll see. Anyway. How late in the day is it safe to make 0 DTE SPX expire worthless? 4:30 or 5 p.m. Okay, I assume that's Eastern time.
How late in the day is it safe to let 0 DTE SPX expire worthless? Is it safe?
I'm not. I'm having a hard time understanding the question as well.
Maybe if you believe it's going to expire out of the money, let's say we have 30 minutes left till market close. What's the risk? How safe is it that it's going to expire out of the money with 30 minutes?
My initial interpretation of it was how late is it safe to put something on like such that you're planning for it to expire worthless. Eastern time.
Eastern time
is helpful.
So Eastern time market closes 4 Eastern.
4:30, right?
4 Eastern.
4 Eastern. Yeah, 4 Eastern, and then 4:30 would be
Yeah.
So. Yeah, I'm still. I don't know. I need some more clarity on the question.
And a little bit more clarity. But what I would say is, with my own personal trading, I mean, trading 0 DTEs an hour before the close isn't something that I would personally like to do with my trading. I don't know. 0 DTEs is just cutting it down to the wire, especially when you only have
Well, it's totally strategy dependent also, because there's a lot of 0 DTE strategies where the point is that it's going to expire worthless, and so the question becomes how close to the close do you want to push it before opening those positions, and then letting them expire worthless and collect on that theta.
Maybe check to see if there's any binary events, maybe earnings after the bell that you might want to keep in mind so that you don't get any volatility coming out of nowhere.
Yeah, my answer to all these questions really is kind of just an hour before market close. I find is like the aggregate answer that I have in my head here. Joe and Cincy both need a fresh start, like Stafford and Goff. Yeah, I don't know. We definitely need to clean house, like front office and coaching wise. But anyway, that's another story. Okay. Central topics for today. iRobot bankruptcy first. Parent company of Roomba has declared bankruptcy. They were selling to their Chinese manufacturer. That's pretty much the extent of the story. Nothing's happening to Roomba. They're going to continue the brand. But yes, iRobot as the parent company has now ceased to exist. They IPO'd for the first time in 2005. So made a nice 20-year run.
Was that the Roomba?
Yeah.
Is it 2005?
Yeah, Roomba. Well, iRobot, the parent company, IPO'd in 2005. I don't know if they had a product before the Roomba.
Oh, okay, I got you.
Or what?
I forget. I think that the Roomba was pretty popular when it first came out. I forget when it was. Maybe it was a little bit after 2005 because I remember it so well, so it had to have been maybe a little bit after.
I don't know. I mean, I definitely remember we had a Roomba in my house when I was like real young. I mean, it had to be like, 2008, 2009.
Okay, maybe
like
shortly
that.
after. Yeah, maybe around the same time.
Yes, I don't know if it's all around the same time or maybe they were a bit sooner. It's not the like OG Roombas were not a crazy.
Not the Roomba, Deal said.
The OG Roombas were like not a crazy technological concept at all. I mean, it was literally just a motor that drove the thing forward, and if it hit something, it would turn 90 degrees and keep going. Like that was all it was.
There's those circular vacuums that the most popular one, is that the Roomba?
Yeah.
Okay, those are still the Roombas. Okay,
yes.
Just making sure.
Yeah. Roomba was most popular, but they've gotten squeezed out by there's a few other companies. The one that I actually have one in my house that's a Eufy. It's not a Roomba.
A Eufy?
Yeah, EUFY.
You like it?
Is the name of the brand. I like it a lot. Yeah, it was very affordable on Amazon, and I think it's pretty much on par with everything. Performance-wise, it does a great job, and the app's really nice. Okay. And then there's also Roborock. I know my parents have a Roborock, and then there's one called, I think, EasyVac. Okay. That's another one, but there's just a lot of these cheaper companies popping up, and the Roomba brand couldn't sustain iRobot for that much longer.
Gotcha.
Not the Roomba, yeah.
Not the Roomba.
Yes, the Roomba, unfortunately. But if you have a Roomba in your house, do not be scared. Everything's fine. They're going to continue the app full support for all the infrastructure throughout the transition. Looks like it's going to close early 2026, so they're moving super fast here.
Might even look into a Roomba, honestly, for 2026. I sweep fairly often.
Yeah.
A lot of dust, all of that. I'm like, you know what? Maybe a number one. What is it called? Not a humidifier.
I have a
Is it a humidifier?
We've talked about a humidifier.
Okay, maybe it was a humidifier, that, and a Roomba, something like that. I think would help a lot. The little details, keeping the space clean helps.
Yeah, humidifier was one of the first things I bought when I moved up, and then I've had the UV since college.
Okay.
But yeah, I like it a lot. It's really nice, and you can set the times when it runs. So like I just let it run when I'm not at home. It doesn't bother me. Come back and floor's clean. It does a good job. I actually considered like getting one of the mopping ones, but those seem to have much more mixed reviews.
Okay.
I don't know.
Okay.
We'll see. Anyway, yeah, and then broader market wise, it's a weird day. It looked like we were going to open way higher. I mean, we did open way higher. It looked like we were going to go way higher, and then we just gave back all the momentum immediately. So we're now down on the day. Yeah, I am less happy with the market now than I was 3 hours ago.
I don't know what's going on. The market seems very almost indecisive.
Yeah, we keep doing this, and it doesn't even matter which side we open on, but we keep doing this open, swing through to the other side pattern over and over. Open low, move high, open high, move low. It's been very indecisive.
It definitely has been. I want to start using the term. We got a mixed bag today. I want to start using that a little bit more often. It's a mixed bag, but yeah, no, that sell-off in the morning, it almost was like such a controlled sell-off. I mean, we barely had any pops. And it continued for about the first entire hour of the morning. So that was interesting. We put in the day's low about an hour after the bell. Then we kind of put in like a midday high just right before lunch, and then now we're kind of trading between that range, kind of going nowhere. So it's kind of what the day's been like so far.
Yeah, I haven't taken anything this morning. Rivian is still printing, which I'm happy about. The Resolute position that I put on last week initially popped, and I was feeling like a genius, and now I started to pull back just a little bit.
Yeah. You want me to pull Rivian? We can
still
check those out.
Yeah, we can pop around.
We can hop in Tastytrade platform. We'll look at some Rivian. I don't really have much going on my end, to be honest. I'm curious about Rivian, though.
Philip Morris doing well for me today. Meta's doing okay. Again, Meta is another one that was doing way better at open than it is right now. Yeah, I don't know. Interesting, just interesting day in the market. And crypto, holy cow, we can't get anything going with crypto.
Let's see. We got Beto. Beto getting crushed on. Wow. These crypto ETFs are taking a beating right now. Beto's taking a hit. What was it? IBIT, the other one? We got IBIT taking a hit on the day. And then let's quickly look at, I think we can see Bitcoin down on the day as well. But with that being said, really not much going on. Trying to manage some of the QQQ positions. Like, even though we've had the sell-off this morning and we have some short delta on, we really haven't seen too much fluctuation in these contracts, to be completely honest. But some adjustments that we did do with some of the sell-off is rolling down the QQQ call spread. So we took the call side. We rolled that one down today from the 624 calls. So we closed the 624, and then we opened the 620s. And then we were able to collect about about an additional 60 cents of credit. So that's what we did there. These still expire by the end of the week. If QQQ doesn't fall near 602, maybe we take a loss on that one. If we don't get near, it could be a max loss. But if this selling continues, maybe that could we can get a get out of jail free card on that position. But we have two on, rolled one down. Who knows what we get this week? I mean, we got FOMC later this week. We got a couple more binary events this week. I mean, this is like one of the last full trading weeks that I think we have for 2025. So it's going to be a lot of managing. I know next week is going to be a shorter week. I know we have Christmas next week. We got a half day as well. We got Christmas Eve. Yeah. And then the week after that, we got New Year's as well. So it's really going to be a management week this week.
Yeah, I do think this is the last.
Take a shot every time I say week.
Yeah, I do think this is the last full trading week of the year. Yeah. I believe that you're correct on that. I'm fascinated to see if things just kind of cool off and continue this sort of stagnation, sideways action that we've seen at the end of the year, or if we'll get any considerable movement at all.
Yeah. He said, what is Rivian? Yeah, Jason, I don't even know what Rivian's doing right now. Taking a look at it, Gus had brought it up. Trading at 1940 right now?
Yeah, yes. It's
1942. We're almost there. One more penny. We'll have
it keeps
to bust
on
out
moving to the upside. I still can't make sense of any of it.
1942 we're trading at.
I'm so lost on this thing. I'm happy. I'm happy with the upside action. I'm just long now. My shorts did wind up expiring worthless at the end of last week, so now all I'm holding are just a naked 12 call, 277 DTE, and then a naked 25 call, 396 DTE. Both are up handsomely and continuing in that direction. The 12 call is obviously deeply in the money. So we were at something like the 15 range when I put both of these on. So yeah, things are going up, but Rivian is so confusing to me because the big red candle that you see here, these are daily candles. The big red candle, the most recent one 3 days ago, was when they announced that they were going to be making a pivot towards really making a push for AI integration in vehicles and full self-driving and autonomy. And the market hated it. Like it was the initial reaction. It sold right off, and I was actually joking that all of a sudden my shorts were going to be back in play, like it was a miracle at the end of the week last week. And then everybody changed their minds, and all of a sudden everybody is really high on this, and we're making higher highs. So yeah, I'm very, very pleased to see this trade come to fruition, and I think Rivian still theoretically has a lot of upside left in it to me. I mean, I'm kind of looking for the 25-30 range before I get out of these. That's why they're so long dated. But yeah, Rivian just flying and cares not about today's market action. It just keeps moving to the upside.
It looks like Jason, he copied one of the Tasty People's trades without knowing what Rivian is, living life on the edge. Well, I hope you were wrong because 1942 on Rivian right now. No Don Julio, Gus. No, Rivian absolutely going berserk. It's looking like it's kind of like a change of character, if you will, in terms of what we've kind of seen Rivian do over the last, 6 months to a year.
Yeah.
So we'll see how that pans out.
Yeah, and Santa Claus rally, big deal. Probably not coming until next week. I think Santa Claus is technically the last 7 trading days of the year and then the first 2 or 3 of the next year. So it's actually usually it's just right there, starts just before Christmas.
Yeah.
We'll see if we get that.
Yeah, with that being said, got chopped up, just not really chopped up, but we had a few opportunities today on NASDAQ. We're down about $35 on the day, so near break even. We did have a couple good opportunities, so we can jump over to the TradingView platform, check some of those out, but this is going to look a little crazy. I know. I'm going to show the entries. I know you're going to see quite a few arrows today, Gus. I know it's going to be left and right a little bit, but we'll explain them, break them down a little bit. Market's kind of been moving sideways now here. I am feeling a little bearish. We got a swing low near 24,938 that we'll talk about, that I've been a little bit biased towards, I will admit. So we'll get into it. As we jump to the TradingView platform and I show these entries, let's give a little context. We have our value area over here. We have a swing low over here. And let's zoom out just a little bit. So this is a swing low that I was a little bit biased to. That was around 24,938, but we put in a low on this day, late November, Tuesday, November 25th, where we had a breakout to the upside on QQQ before we had that 5 days of balance, and then we broke to the downside. So that initial breakout area is what I've been really biased towards. And with that being said, it was looking like we were getting more acceptance outside of this value area down here. So I've been short biased so far, wanting to target this swing low, but it's been difficult. We got a couple shorts up here, but we covered them a little bit early. And let me just put on the executions so you can kind of see what we're looking at. Let me do this so we can spread this apart a little bit. So this initial trade, I was looking to buy the dip this morning. We could have looked to get short at this initial value area low. But the reason why I wanted to get long was because the selling was so aggressive. And it was a little bit more of a bias trade. The selling was so aggressive. We sold off for an hour in the morning. I was like, I'm not getting short after an hour of selling to the downside, so I'm going to get long. The market surprised me. And this really just showed how weak the market was today. Stopped me out. We continued to sell off to the downside. Over here, I looked to get short again. But this was a little bit more of an impulsive trade. And although, yes, it makes sense, and maybe I can go back and journal and figure out how we want to pivot on some of these decisions. But after stopping out at that long, we flipped short to then potentially target some lows down here. But I stopped out. I just got out of the trade. I was like, I don't want to be in this right now. It felt like I was kind of chasing the move. Things were happening. Things were going really fast. I kind of felt the emotions a little high. So I was like, let me just get out of this trade, be a little bit more patient and wait for a different opportunity. But this morning, good Lord, an hour of selling. What was did you think we were dropping some news today? what was kind of your reaction to all the aggressiveness we've seen out of the gate?
I think, and I actually almost turned to you and said something to you about this off air this morning, but
Yeah.
I think that whenever we open up, there is this like, I think financial media has a real problem with like frantically trying to attribute the reason for things. Like there must be a specific reason that we open up every single morning.
Right.
And while that is obviously true at large in the efficient market, it's in an efficient market, it's usually because it's a combination of 250 different little reasons that everybody weighs different amounts, and it's in aggregate we push the market up. And so today, this morning, CNBC is all stocks open green on as the market expects good jobs data later this week. And it's like you just pulled that out. The market's not trying to price in theoretically good jobs data coming on Wednesday at the beginning of this week, like whatever. I think this is just the perfect case in point to that. So my short answer is when we opened up, I expected us to go higher just because we've stagnated for so long and it's a new week and it seemed like some momentum. I was surprised to see us sell back off, but I just think that this perfectly exemplifies that often it's just people looking for a reason to attribute to anything, and it might not even be substantiated, because then of course an hour later the headlines are stocks sell off as XYZ whatever, and it's if it's within the bounds of normal market action, which today absolutely is, sometimes I think it's just that market action. I don't know that it necessarily has to be attributed to any broader macro thing, and it doesn't mean that whatever you believe the reason is for the market opening up is that it's going to continue going up. So I don't know, sort of
completely agree there,
a finagled soapbox there, but it's just,
it's impressive, I would say.
I was surprised.
Kind of my
I'm
reaction.
Really surprised and I'm really just surprised by the continued stagnation that we're seeing. All this year has brought is volatility. When we're moving, and so to see, we've basically since, the mid-November, going on a month now, we've just been chilling at these levels.
Yeah, no, we have.
And if you zoom out beyond that, the last time we made all-time highs, or did we make all-time highs on Thursday?
I don't believe we did.
I'm not sure, but if we did not, then October 29th is the last all-time high, and we're just right around that range because, by October 30th, we're literally lower than we are today. So we've just been shopping.
No, 100%. The market was definitely impressive without, all this selling was coming out of nowhere. Who knows where it's coming from, but we sold off down to a low near 25,000 today. We ended up bouncing back near this value area low, and this is where things got interesting again, because this is letting us know, are we going to start trading within this level of value again, or are we going to reject this level of value? And shortly after we recognize the market is just very weak and we're rejecting these levels once again. So this is the first time we actually got to go and test the value area high, and this is where I started to get a little bit more interested in the market right here. Because the market was showing so much weakness, I felt more comfortable to add 2 contracts on this position over here, because I know we got a paper cut right here, paper cut right here, paper cut right here. This one was a lot more of an attractive opportunity, so we used 2 contracts at this value area high to get short. Once we took out a first swing low, we took off 1 contract because we don't know if the market's going to pull back and then go and make new highs. We're just looking for the market to respond to an area that we can enter in. So if the market's going to run 20 points in our favor, 30 points in our favor, we want to try and take something off at a reasonable area that we can justify. And I think these swing levels is a comfortable place to do that, and that's where I kind of like to do it, just because of all the uncertainty in the market. I like to take some off the table if the market gives you something relative to your risk, of course, but. Held one on a little bit longer, all the way down to this value area low. To be completely honest, I wanted to hold it down to the day's low. But because we already taken a few paper cuts, I was like, I can't afford that, just the way the math works out. It wouldn't be smart to do that. But I did want to hold this one to the day low, and that's why you can kind of see me re-enter a couple times near the value area low to get short, but obviously lacking confidence in a couple of those shorts as to why we stopped out of them. But that's all the market's really given us for the day. I think what has helped too is just having some of the QQQ positions and to not feel the FOMO.
Yeah.
Because it happens. So it's kind of where we've been at for today. But just trading in the range, not going too much anywhere since after the first hour at least.
Yeah. Big deal. To your point, yes. APLD, applied, what is it? Applied Digital? Is that what it is? Yeah. Is trading down today. This is like the pinnacle, I shouldn't say the pinnacle. I think that's Rocket Lab for me. But APLD is one of these stocks where it's really, really, really hard for me to discern what price is like at what price it turns back into legitimacy from hype, I should say. Like this one is one of those ones where it's really hard to try to.
That was APLD?
Yeah, APLD. It's really hard to try to separate those two things from one another, because this is a very hyped stock. Literally right now, if you just go Google 3 stocks to hold for 2026, I guarantee you that there are many lists. I'm not going to say the vast majority, but many lists, perhaps a majority of lists, are going to have APLD on there, and Rocket Lab is going to be another one that you'll be seeing pop up there a lot. And in these spots, it's always just really, really hard for me to differentiate between hype and reality, and in turn, very difficult to discern what might be a favorable entry in either direction. Because, right now, if I'm sitting here just looking at this in a chart, if you showed me this chart in a vacuum and I knew nothing else, I would say that looks like a stock that had a hyped run up, maybe a pharmaceutical company that had a bad result, and now they're sliding right back off. And so if you made me trade this just on a chart without any background, I would probably say you need to get short. But then you bring in the background, you bring in the fact that this is so hyped, and people really aren't going to let it get too low. So yeah, it's really, really difficult to pick entries on this one. And it doesn't mean I don't think it has promise, and it could be a great long-term investment vehicle. But as a trading vehicle, this is really scary to me, this type of sell-off, because I just have no idea.
Yeah, it's cheaper underlying as well. I mean, we're trading at $24 right now, and I mean, we were trading at $34 just a week or two ago, so that's a pretty big dent in the stock in such a short amount of time. So
yeah, the last sell-off, it tested 19, which is what you're seeing there on the left. It tested 19 and stabilized at like 21. So we're getting towards the low of literally the only established level that we have. And that's the other thing with these, is that when it runs up so fast, you have no levels at all. And I'm far from purely trading on levels, but I do pay some attention to them, especially as I'm choosing my strikes. It's a nice way to be able to gauge what you think could realistically happen in the time frame that you're allotting yourself. And this one has one level, and it's 20, because that is the only place that it's even had time to bounce in the midst of this run up.
See what we get with APLD. Decent amount of volume, though. I got to say, 26 million. So it's
no, yeah.
We got movement in there.
Yeah, people like it. It was trending this morning.
Okay.
What are y'all trading today? Stuck in the credit spread setup. Big names, your DT on SPX.
I'm
too chicken to try options until I know more. That's totally a valid place to be, Jason. It's options are a scary thing. I jumped in before I knew enough and lost a lot of money at the beginning. So you sound like you're taking the much more sane approach to this.
I think the crypto boys might have been naughty this year, to be honest.
Goodness gracious, yeah.
Golly. We're getting some coal in the stocking. So anyways, 85,000 Bitcoin. Anybody got any thoughts on this? We can check out Ethereum too. I'd assume Ethereum hanging on by a thread with the weight of the overall crypto world.
My thoughts are, do I want to buy more? is where I'm at. I'm already fairly exposed to IBIT, and slightly exposed to Ether.
I feel like such a older person when I'm like, golly. But that's the reaction, just pulling up a lot of these tickers, guys.
Yeah, it's insanity.
Right?
I
mean, Ethereum trading below 3,000 today already. We were trading above 3,400 not too long ago on Ethereum. I mean, the assets are extremely liquid, though, right? But we're getting a lot of volatility, no doubt. Silver pulled back a little bit finally. Silver had a squeeze to the highs last week, if anybody missed out. Gold didn't. Silver did. We got a crack in silver a little bit, but will we take the highs? I don't know. This isn't one that I'm going to be involved in. Silver is one of the more larger futures product that you can get involved with, so just keep that in mind if you want to trade these ones directionally. But I'll be on the sideline on some of these metals.
Yeah, I saw the price of an ounce of silver has passed the price of a barrel of oil for the first time ever, the first time in a really long time.
That sounds like...
I'm pulling up this exact statistic.
That sounds like a 3 standard deviation. It sounds like a 4 standard deviation kind of headline.
Yeah.
It doesn't sound like a headline we get very often, right?
Yeah, first time since the 1980s.
Golly. I just said it again, golly.
Yeah, and that's basically it. The oil price has been higher forever, but yeah, crude has finally passed oil for the first time since the 80s. So
cool.
Yeah, my joke is that we're going to medieval prices. We're going
medieval. I like
silver and gold, more expensive than oil.
I'm gonna have to steal that.
Because who needs oil, right? And then maybe we'll go to war for salt sometime soon. Yeah. We gotta jack those salt prices up. And actually, in response to learning that bit of information I just found, I Googled salt ETF. Yeah. I was gonna tweet and be like, salt is next, guys. The minerals, they're going crazy. Salt.
Hey, let me know. Let me know when I need to start buying some sulfur.
There isn't a salt ETF. Is the short answer.
There's got to be a sulfur, right?
It's a crying shame. Maybe sulfur.
Maybe sulfur.
Maybe cobalt. Is cobalt a rare earth? I don't even know.
I hate sulfur. I'll put it on the record. I hate sulfur. Don't like the smell of it. I'm good off sulfur.
Grumpy Mike, you here? We should be buying argon. Apparently, according to Grumpy Mike, I guess argon prices are going through the roof. But yeah, it's an interesting spot for silver, and yeah, the run just continues. Silver is more expensive than oil, definitely. I had on my bingo card.
I think something's here in silver, though. I mean, whenever we're talking about things we don't see very often, I know we're going to start wrapping up here, but it's interesting. I think it's worth keeping an eye on when we start talking about things we haven't seen before. Not that I know what to do on silver because we've never seen this before, but maybe there's an opportunity there. Maybe we could snag a decent risk-reward opportunity. I don't know. All I'm hearing is these things haven't happened before, so at least we'll watch it. It'll be fun.
Yeah, if anything, I think that silver is going to take some massive correction sometime. I keep saying it.
Oh, yeah,
and I've been saying
absolutely.
it for months now, so I could easily continue to be wrong, but this can't sustain. It must be unsustainable. It is a metal. It is a metal.
Yeah,
this
yeah.
isn't NVIDIA. It's a metal.
Yeah, the question seems to be more of when rather than if, it seems.
Thank you for the kind words, HKMB. Get some helium. Literally floats away. Yeah, helium really light too, so we could carry a lot of it. You know?
Yeah.
Think about how much helium you could carry in your arms.
I'd be down. I feel lightheaded thinking about that. But I'm down to sip on some helium, create some content.
Where we're just sitting here huffing helium periodically.
Well, we could even create some content out of it. I think we could create a quick short form piece of doing what's your thing for the year, whatever. We say the gig, or we say whatever we want to say, but with some helium. That'd be funny.
Exactly. Yeah, that's a good idea.
That's gonna be it on my end, though.
Yeah. That's all I got as well.
Cool.
No, we're getting close to our time here. What do you think of? Here's one. What do you think of following IBIT back up with a short put spread, 32 DTE, 40.45? I love it, ranchers. It's the first thing out of my mouth. I'm sitting here trying to talk myself out of doing something just like that, but that is exactly the type of trade I have in mind. I love it. Gus stamp of approval. I'm going to do something very similar. I might try to get a little more out of the money than that, just to up the risk profile. But yes, that's what I'm eyeing. All right. That's all I got. You got anything else?
No, that'll be it on my end. We'll see how these markets close today.
All right, perfect. That's all we're going to have for today. Thank you guys all so much for watching. We dearly appreciate you taking the time out of your day, and we seriously never take it for granted. Errol and I will be back here same time, same place, tomorrow, 12 o'clock p.m. Central Standard Time. Be sure to stay tuned for Futures Power Hour coming on next, and we will catch you guys next time.
Tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tastytrade, pro-level tools, intuitive design, total control.
Tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tastytrade customers.
Global markets never sleep. Explore them with Forex, now available on Tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tastytrade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
We are back. It's still Monday, December 15th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, how was your weekend?
It was good. Pretty cold here in Chicago. We had single-digit temps. I think they dropped below zero for a little bit, but the Bears won, so, everyone's happy here.
The Bears won, and natural gas, despite these bad temperatures, is 26 degrees here right now, nice and chilly. Got a good bit of snow over the weekend, too, so that was fun. But we turn our attention to a chilly market here on Monday, Thomas. See what I did there? Stocks here is near their session lows, volatility popping up a little bit more. We can't quite clear the range just yet in the S&P 500. That's been carved out since November 28th. Gold trying to break from its range, though ultimately getting sucked back in. To that point, we're seeing crude and natural gas stay within multi-month ranges, but near the downsides ever more. It's an important week here, Thomas, because we have a good deal of economic data coming up around the corner tomorrow and Thursday, especially with non-farm payrolls and CPI due out on each of those days. Thomas, is there something that you're looking forward to the most this week in terms of these data prints? Do you find them to be something that will be considerable market movers in the days ahead?
I think it has to be the jobs report, right? And I don't think I've never seen a Tuesday jobs report before, but that's what we're getting. And, with the Fed still seemingly more focused on the labor market side of the equation, I think it could definitely be a market mover. I think this is a jobs report where slightly bad news is going to be good for the market. So, I'm watching for that. I think it'll boost the rate cut bets and, spur a little risk on movement in the market.
It's so interesting. The headline this morning on CNBC.com was optimism over this week's economic data lists stocks. So, I didn't know that was what we were working with here today. But you know what, Thomas, we can't we can't quite clear these ranges. Before we begin, though, I figured a discussion on multi-time frame analysis might be worthwhile here. I saw a question the other day in one of the chats. Why do you use certain time frames and how long do you let them guide you for? And I don't think I've really explained that process before. Believe it or not, it comes from a 2009 conversation that I saw that took place between Stanley Druckenmiller and Jeff Feig for Citi's FX and local markets team. This was just about a year before he retired. You see Stan Druckenmiller everywhere in the media these days, but back then that really wasn't the case. He never really had gone public at the time with much of his investment styles or strategy while he was still actively managing money. And in that conversation, he touched on a number of things, including about his time at Soros, how he broke the Bank of England, but also how he learned to trade, blending technicals and fundamentals. And it's a really interesting conversation. People should go seek it out if they do have the time. But informed by that conversation where he talks about his specific timeframes, he discusses these particular brackets, how you use daily charts for 8 to 20 days weekly, for 8 to 20 weeks monthly, for 8 to 20 months. And you work backwards there. So you start with your monthlies, then you go to your weeklies, then you go to your dailies. And that's helped inform how I incorporate technical analysis into my charting and ultimately overlay that with the execution and the pricing, the tasty methodology, as it were, coupled with my own fundamental views. But I think starting with that big picture, Thomas, is really important. When you're looking at the monthly chart, as Druckenmiller said, you're looking at 8 to 20 months out. You're trying to identify the dominant trend, the macro regime, the flow of global capital over a meaningful period of time. This is where you do your cycle analysis. Are we early cycle, late cycle? Are we in a bubble? What have you? On the weekly chart, you're thinking about what can work for the next several months, really 2 months to maybe even out half a year. This is giving you more of an actionable setup that if you have a low volatility regime or favorable pricing, you could look to maybe swing some longer duration trades, which is why, for example, in bonds right now, we keep going to that weekly and monthly chart going back to COVID, because if this is a longer term bottom, let's use the opportunity to find some, opportunities that we could express on a more cost-effective basis. And then Druckenmiller really stopped at the daily. He says 8 to 20-day horizon. It's called his execution window. This is where you refine your entries, you manage your position size, and you optimize your risk. You're not so concerned about intraday wiggles. But for folks who are more on the retail bend, Thomas, that's why I also go down to 4 hour, which if you're still applying that 8 to 20 mantra out, 8 times 4 hours is 32 hours. That's just a little over a day. 20 times 4 hours is 80 hours. That's just under like 5 trading days. So when you're looking at that 4 hour time frame, which we can in fact go to right now, it gives us a sense of what we're working with in the immediate few sessions ahead, the key levels that we need to note, so that if we are looking to say, I want to take out a bearish trade and think that we're going to hold it for the next few weeks, what needs to go first? And we talk about ranges not clearing here at the top of the show, 68.50 up to 68.70 or so. It's been in the market for ES going back to November. The bottom side of it now, which is to say that if you are someone who's looking for a directional view in stocks, the moment may soon be arriving.
Yeah, I mean, there's all different time frames. I think you laid it out perfectly. If you're trading like 45, 60 days out, the daily, I always look at that first, then I'll zoom in a little bit. I actually like the 8 hour charts a lot.
Sure.
And 8 times 3, that's what, 24. So you get three bars in a day. But, there's always value in zooming in or zooming out. It's bringing up the daily is what a lot of people do, just because it's the easiest to digest, right? Each candle is one day, and that's just really simple to see. You get price move a day, but it's also time consuming to go through all these time frames, right? So you really have to get a method to the madness there.
And what really matters when you're thinking about the multi-time frame analysis, as Druckenmiller said in that 2009 convo, which again, I listen to annually or read about it. There's a transcript that's out there floating around in the world on someone's Substack where you could easily find it. I think you just Google 2009 Druckenmiller convo. To that point though, right? He mentions that when you have like your weekly chart and your monthly chart in alignment directionally, and you go down to your daily and you see some sort of chop like this, you kind of ignore it and you wait for the moment that the lower term timeframes start to realign with the bigger picture. So if you go to your monthly or your weekly and it's bottom left to top right, when you go back to your daily time frame, you should be looking for bullish entries here. And if you see opportunities to buy dips, that's the goal. And vice versa. If you see that capital's leaving a sector and the market's in a downtrend on its weekly chart, on its monthly chart, when you go back to your daily and you see an opportunity where, hey, this thing has rallied a little bit here, maybe I should be thinking about selling. So for me, that puts us in the position, Thomas, where at least for the equity market this year, dip buyers have been rewarded. Maybe this is another swing that's getting ready to percolate to the downside here. Stocks sitting near the lows, NASDAQ 25,370, a far cry from the near 300 points we were trading at higher earlier in the day, although I'm going to go a little bit deeper into that 4-hour time frame here, Thomas. I do see that this range support or so, right around 25,675. We had lows carved out there December 2nd, December 3rd, here on the 10th, on the 11th. That did flip and become resistance here overnight. So sequentially, as we think about this lower term time frame, you're seeing a path of least resistance all of a sudden, at least for tech, that looks like it's going to be the downside, at least as we get into the middle of this week, right? That's not to say something can't change today, but the way all this is shaping up, going into NFP, going into CPI, traders are maybe not as optimistic as that CNBC.com headline was indicating this morning.
Yeah, it's the headlines, you always look at it and you want to go to the chart and see, all right, did the price react to this headline? The daily, it's going to be hard to do that. That's when I go to the minute time frames, the 5-minute, 15-minute, and you can see, all right, the price is actually reacting to this headline, because a lot of times you get headlines and you expect to go look at the chart and see something, and sometimes there's just no reaction there at all. So, the market, some headlines the market cares about a lot, others, it's brushed off. Sometimes even a little less common, there's delayed reactions and things like that.
There is a headline crossing the terminals right now that Russian Deputy Foreign Minister Sergei Rybakov, I'm saying that right, says Russia and Ukraine on the verge of a deal to end the war, according to ABC News. So we'll see if that's something that moves these markets today. Thomas, we come out of last week with a sell-off, obviously, in the latter half of the week following those Broadcom earnings. It wasn't the Fed that really bothered anyone. It was the Broadcom earnings saying that maybe the demand is starting to slow down in the pipeline a little bit here. Do you think that there's anything that's going to come out between now and really the calendar starts to get short real quick, by the way? This is the last full week of the year. Next week is Christmas. Then we're going to go right into New Year's. And then we're back here January 5th. January 5th, the next 3 weeks, I think, are going to go by faster than people appreciate, right? What's going to resuscitate the AI narrative on the other side of Oracle and Broadcom? Or is that just now the path of least resistance as we go into an end of the year where there's not many more catalysts to change people's perspective?
Yeah, you're right. Full last week of trading for the year, so you can expect to see volumes go down, things like that. Broadcom, the last few earnings, they're important. They'll leave us with what they leave us. But I think the NFP, what I said before, is kind of going to be the last thing that really could possibly change the calculus for these rate cut bets going into next year. Because we get after this week and there's really not too much. So where could that leave the market? And a low volume consolidation state. But at the same time, you can't write off the chance that there's going to be some kind of headline, geopolitical headline, something, the U.S. administration does, things like that. Those are still in play. And when you get low liquidity periods like that, when you get a headline that comes out that can move the market and you don't have the liquidity in there, you could get a bigger move than expected. You could go through these air pockets, which you can see on your charts and things like the volume profile. So, there's still risk. A lot of people, they go into the holidays, they know they're going to be off the desk a lot more. So, they'll lighten up their portfolio. That way you're not trading as much. And that's just some of the things that lead to lower liquidity. But if you have positions on, you still have to be, you have to have some plan to manage those. We lost your audio, Chris.
Sorry about that. You do have to have some plan to manage the positions if you're going to be trading through the holiday. Generally speaking, I find that just kicking out the duration, unless you're going to be actively trading and really just going with the daily flow, it's difficult to say that there's any consistent narrative on a day-to-day basis. I find it to be more or less random, which I hate to say. So it's more about just riding out what occurs over the next few weeks and not getting too worked up. Listen, the money you make or lose is still good either way. But a lot of the time I find that once you get into like that first full week of January, then the real consensus on where the market should be starts to emerge after effectively the inmates were running the asylum while mommy and daddy were out on vacation. And that is a real thing. You don't have many senior decision makers on desks, so not a lot of capital is being meaningfully deployed into the system. The levels are what matters to me here, Thomas, right? We could talk about high participation, low participation, holidays, not holidays. If the S&P 500 is below 68.50, probably a top. Probably a top for a few weeks. If it's staying with 68.50 and higher, if it's holding the lows that we've had all month long that we had last week, then you can't give up on the bull just yet, at least tactically. So as far as it goes for me, I'm leaning long here. I want to see a retouch of the highs that we had last week. Need a little bit more than that before the end of the year. If 68.50 holds, I will keep on pressing the longs. We lost you at this point.
No, I didn't. It's catching up. Yeah, you got me. I'm still leaning long. I'm in an MES call spread, long position in video, Cameco, so do have some long equity exposure. Also long the bonds. So, naturally you see yields come down, you're expecting in a market rally. So when I'm especially recently, if I'm long stocks, and I think there's a risk on, I'm long bonds too, because those rates coming down, you expect to drive equity prices higher. I still have one protective position on, and this is an RTY put spread. It's all the way down at 2,300, 23.25. That's a long put spread. I don't know if I said call spread. So long put spread on RTY. And that's if, this position's actually done okay over the past two trading sessions. RTY seeing a good bit of weakness versus the S&P 500. So, I'm going to keep this position on at least until the end of the week. But I am going to, before the short week, as you said, I'm going to reassess my entire portfolio, probably Thursday, going to go through everything. I'm probably going to pick a few things I want to take off. I'll, keep some things on, but generally I'll lighten my deltas up.
The Russell, here's one for the Bears. I mean, there's a few for the Bears right now in the short term. If we're thinking about these hourly charts, you see a NASDAQ, for example, very clean, setting lower highs and lower lows and treating the former swing lows as resistance. It's tough to argue with that in the short term, Thomas. The Russell likewise gives you something there where maybe that's a little bit of a topping pattern, head and shoulders. And again, thinking about an hourly here. So what does that mean? 8 hours ahead, 20 hours ahead. That puts us into tomorrow morning, right? If we really wanted to think about that, 20 hours ahead is going to be what? 9:50 a.m. Eastern time? That's right after non-farm payrolls. Maybe this is just a market that's getting a little saggy and tired before the data comes out. And then the data comes out and people pick things back up. But at least right now, as we think about the rest of the session and going into the bulk of the data this week between Tuesday and Thursday, the disappointing start to the morning. It looked better overnight. I was feeling a lot better this morning when I first logged on. Obviously not feeling that way now. We'll see how the day settles out. But it's, these are not the best looking charts, but not going to get too worked up, Thomas, because I see my support here. And if the support holds, we change nothing at all. I do want to talk about the sector performance here today, though, because it's not the best. We've certainly seen better. XLK, obviously one of the predominant losers in this market, down 0.6%. It's not the worst performer. That goes over to oil and gas, down 2.26% in XOP. You do have telecom off 1.54%, which is not great. Coming back in after setting a new closing high 2 sessions ago. On the flip side, on the way up, your leader is healthcare. Oh, that's a little defensive looking, Thomas. And then you have utilities up by about 0.5%, which is likewise a little defensive in name. The 2 silver linings, discretionary, which up here would be a new all-time closing high. So I don't want to ignore that. And then semiconductors, which are picking themselves right back up at the 1-month moving average. So there's something good, there's something bad. Most sector ETFs are off today. I have 15 of the 25 that we track down in the red. So overall, obviously a lot to be said about what could happen here. I don't know if you look to the sector performance as any sort of alarming or optimistic view on what's occurring here today.
Yeah, I mean, always good to glance at the sectors, see how things are rotating. One thing I've been meaning to get long on is SMH, but I just don't know if I'm going to do it yet. I would like to see it get down around 340, 348, and take a stab there. So I'm probably close to doing that because I do want to stay positioned to the long side. And I think this is something that can come back into the game, so to say. We did make that higher high there back in December 10th, breaching the previous swing high from late October. And if you really expect the market, the bull run, to pick back up in 2026, I think SMH, you would really want to see that participate.
You really want to see that participate. It's a necessary part of this participation. Thomas, before we quickly turn the page over to bond markets here, VIX is up today about 85 cents or so, 90 cents almost here, 1661. It does give you a bit of an inside day for vol after gapping open higher. There's anything to make of that, which not sure I do because we don't do technical analysis on volatility products. They're not continuous time series, so it's not appropriate. Nevertheless, we do see here that we're not really making much of a difference between Thursday, Friday, today in the market vol-wise. It's OPEX week as well. All right, we got expiration here, folks. The fact that we're having this shakiness and weakness in the markets, it's what I said on first call. Why isn't vol doing more? That to me is one of the core reasons why I feel comfortable saying I'm not going to fret about short-term jitters and gyrations in stocks until we see some levels broken and volatility pop. Because until that occurs, Thomas, it's all just noise to me.
Yeah, I think that's a perfect way to put it. It's all noise, until something is, till something isn't, So you've to try to look through it. It's hard to do, but
it is difficult to do. Thank God I have the misery of my New York Mets fandom to distract me, given recent events. What's going on in the bond market here, Thomas? We are off the highs slightly. We were briefly poking above 115 earlier, but you could see here in ZB with that super low vol, 2.3 IVR. It's another day where we get that long upper wick. So it's an inside session, but gains are eroding. You could see it in notes as well, which please just get away from 112. That's all we're asking for Christmas. I don't see anything on the calendar this week that's particularly moving, although on Wednesday we will have a 20-year bond auction. So focus will be on ZB once more come midweek. What's your feeling on this part of the market now in the wake of the Fed meeting last week and having had some time to digest and think about everything that's going on in that portion of the world and its influences on the broader market?
So we got a lot of different things happening right now. The market, Kevin Hassett coming in next year, whoever it's going to be. The Fed has a lot more influence on the shorter term rates. Warsh is in the running. I mean, is the betting markets changed much for that?
Yeah, it flipped today.
Oh, wow.
It flipped in the last several hours. So, yeah, looks like it flipped this morning at 1 p.m. Today at 1 p.m.
Right.
Kevin Warsh is now the front runner.
I mean, maybe from the way that bonds reacted when they did the soft announcement on Kevin Hassett, which I guess is in doubt now. It seems like the market thought maybe we'll get a Fed that isn't too concerned about inflation. Because the long-term rates, they're a lot more market force controlled. The Fed, has more influence the shorter you get, especially the 2-year, the 5-year, and you could make a good argument that the 10-year, right? 10-year, I think, is kind of a mix of it, in my opinion. I'm still long ZN, ZB. I'm near these levels where I'm hesitant to stay long, but we've been holding them just ever so slightly. And I'm going to stay long. I think if we get a slightly weak jobs report, or just in line with expectations even, I think we do get some upside in the bond market. It's hard right now. I feel like my confidence in the outlook for bonds has weakened considerably over probably the last month.
I'm starting to feel more strongly that this is something that's topping out. If we look at it from the yield perspective, it looks like it's trying to turn a corner and bottom here, even today, right? Are we going to break out? We tried getting back in below that neckline, and slowly yields are creeping back up as the session goes on. I just want this thing to move, Thomas. That's the whole point of the reverse iron fly position that we put on here in notes last week. When volatility is low, playing for realized vol to be less than implied vol is incredibly difficult. And quite frankly, you're kind of picking up pennies in front of a steamroller as far as I'm concerned. So I look for trades that would effectively look for a realized vol to outpace implied vol. And that just means I need to see something happen here. So long the 112 at the money call and put, short the 110 out of the money put, short the 114 out of the money call. That's still yielding a little bit better than a 2-to-1 risk to reward at a 65% probability of profit. And there's 67 days for that to work out, Thomas. So if we are beginning to see signs of a market that's turning a corner, I actually don't need it to break down. I need it to just go up or down. And I think that's a directionally agnostic expression of what I'm trying to achieve here. Just get away from 112. That's it. Just get away from 112. But if it is going to break down, right, then I have a trade that's going to work out that way too. I only get stuck here as if over the next 2+ months, this thing doesn't move off of 112. And I know I've been talking about this on Futures Power Hour and Overtime and all the other shows a lot in recent days, but it's kind of like we talk about staying mechanical. There are certain trading strategies that you put on when markets have high vol. There are certain trading strategies you put on when markets have low vol. So for bonds, unless you're taking a directional swing here, you have to look for a longer term vol expansion. And, it might be tough sledding here the next few weeks, Thomas. If there's not many influences on this market, I may have to just whittle away 2 or 3 weeks of watching this thing bob around near 112 until we get into the new year.
Yeah, and that's exactly what can happen right after this week. Things slow down. You totally have that possibility. Because it's not only traders. Going on holiday. It's people in the White House, people in Congress. They slow down. They're back home, their families, at least some of them. So there's also the possibility for less headline volatility from that angle as well.
So we have bonds breaking down potentially. We have notes breaking down potentially, or they're at support. That's nowhere to trade from, Thomas. So scalping intraday, incredibly difficult. Not that many people are using bond futures to do that. But the IVR, right? We're not doing your typical looking to harvest the vol market right now. It just doesn't work when volatility is this low. There's better uses of capital as far as I'm concerned, like the metals. There was a question that came in, and even Josh wanted me to address it. Is silver a significant component of AI? Is this all a knock-on effect from the AI trade, Thomas? From my understanding, that answer would be no. If you're looking at something like an NVIDIA H100, there might be 5 grams of silver in it at the high end. And sure, across millions of GPUs, it's going to add up. But broadly speaking, that's still incredibly small in the broader ecosystem and sphere. And even in terms of the CAPEX itself for like building out the data centers, copper, steel, aluminum, far more important. Silver in the GPUs is mostly used for like a thermal conductor in some of the epoxies, to my knowledge. It's not a hardware component. So no, I don't see silver as a knock-on effect from AI as far as I'm concerned. I don't think that's the story that we're telling ourselves here.
Yeah, I mean, it's more than gold, but gold isn't anything, right? So silver, maybe a little bit of a demand bump from all these data centers, like you said, heat sinks, et cetera. But yeah, if you're looking for an AI-induced or data center-induced metal to get long, it's definitely copper. I mean, because these data centers are pulling so much energy that you need these massive cables, all this copper, this wiring. And, copper is already looking like the demand from electrification, even without data centers, right? Electric cars. Copper is the thing to look at, in my opinion. If you're long data centers, and you want to stay long in 2026, copper is the way to play this. And we've talked about this before, but industry groups like the International Copper Study Group, they're forecasting a supply deficit for 2026. You look at the miners, they've warned over disruptions. There's been several large miners that have explicitly said, we will not be able to meet contractual obligations over the next 1 or 2 years. That is saying they're not going to be able to deliver as much copper as they previously promised. Right. Because there's labor disputes, there's environmental things that have happened, there's been mining accidents. The mining outlook for 2026 is pretty bleak for copper. At the same time, if that demand rises while supply is lowering, of course, that puts the market into a deficit or going into a deficit state, a lower surplus. So you expect higher prices, and copper, is, I think, the perfect way to express a view where you're long data centers or just generally electrification in the world.
Yeah, I mean, so silver is important for the electrification. If you want to talk about it in conductors, that's one story. But in terms of the GPUs themselves, that's just not right. That's not the primary motivation right now. You mentioned copper. We had drawn up an FCX chart weeks ago. Looks like that triangle started to break out here. Copper is a position that we currently have on as well, the 570, 580 call spread, which is persisting at 43 days to expiration. So plenty of time there. Volatility was a little bit lower when we put it on, but still in the neighborhood of a 4-to-1 risk to reward, which is exactly what we're shooting for here if this is a market that's breaking out. With respect to silver, still maintaining the position at 43 DTE. Really like the long in here, Thomas. We have this up channel that's in place, and we got flush close to support the other day. We've since bounced from Friday, slowly but surely. We're up nearly $3 again, getting closer to the top of the recent trading range than the lower part, but maybe that was the break we needed. I still have 67.80 as a potential target here during this breakout. So again, thinking about the time frame analysis here. What does the daily show? What does the weekly show? These aren't charts that look like there's any significant weakness right now. The trend is still very much bottom left to top right. And the volatility is back today. That's the good news. That's the great news about the uptrend here, Thomas. During the sell-off that we had last week, we had even pointed out on the show that you weren't seeing vol come in all that much despite that weakness. And now what are you seeing here today? IVRs are ticking up to a new relative high. We're actually higher than we were at the highs last week in the SI futures market. This has been hand in glove. Vol goes up, price goes up. If vol's staying up, any corrections of price are probably going to be short-lived. When vol goes down first, that's when price peters out and the rally either slows or reverses. So, consistent with this observation, we're at session highs. Volatility is near session highs. Sticking long. Stay long the metals.
Yeah, I wish I was long silver. I'm just, last week I picked gold. My view was a little based on the gold silver ratio being the lowest since 2021. And I guess I'm still expecting that ratio to come back up a little bit. So gold, that would mean gold outperforming silver at this point, but looks like silver, it's still got a lot of these up moves sometimes are pretty large, and compared to previous years, we haven't been seeing these kind of moves in silver, nor have we with gold. So it's an exciting market. Silver, this is one I think where you buy the pullbacks, you buy any big dip. You take your positions when you get to a technical level where you like a pullback. I think it should be a high confidence one. This trend is still well intact. The next silver pullback, I'm just too tempted. I'm going to get in because I've been kicking myself for not being involved in this most recent pullback.
Gold, silver, copper, all on the up and up today. Gold's bouncing back a little bit here. It looks like we have on this very small time frame, perhaps a little bit of a consolidation coming together. Thomas, consolidation into a triangle following a breakout. Sign me up for staying long. I think that we have a move here into 4,400. I'm playing this twofold, riding this a little bit close to the sun right now, along the 4,350, 4,400 call spread, which I've had on for a few weeks, which was out of the money and potentially closer to in the money. If we get a pop up to 4,400, I'm going to take this off and roll out more exposure because I do already have 43 days here at 44, 44.25. And I would layer in another one at 44.50, 44.75, a little bit further out in time because they keep working and the vol is going back up. And when vol goes up in the metals and price goes up, it's usually a sign of strength. So we're not going to fade or doubt it. Thomas, I do want to talk about soft ag and cattle quickly before we get over to energy, although energy is softer on today's session. You have been a lean hog kind of guy or a lean cattle kind of man in recent months. I know that you put some decent trades on here, and I did see questions come in to the chat. Ellie is the futures product here, Thomas. I don't trade this much, if at all, but you have. Can you tell the good people what's going on in this market? And quite frankly, is it worth looking at as we look for maybe alternative options to trade during a window with which equities could be quieter? Muted again.
Yeah. Cattle is one thing that I was long most of the year up until October, and that's because of what was happening down in Mexico. We had this pest called the New World screwworm, and a very disastrous thing if it gets into your cattle herds. So this thing was traveling up from Central America up into Mexico, got pretty close to the Mexican border. And then October rolls around and, Trump starts saying they're going to start doing things with cattle prices. The USDA started to appear to get a lot more concerned about the problem. And then, now the winter started. So what happens is this screwworm, which is kind of like a bot fly, it doesn't like this cold weather. So it kind of mitigates the threat for now. And that's kind of when we saw, the prices started to sell off in late October, November, prices sold off. And it made sense that the move was kind of drastic because you had all these people on the ride, up until that point long. So there was a lot of profit takers, right? And now it seems like, late November came, we got down around 205, 204. All the profit takers, they stopped taking their profit, and then we repositioned back to the upside. And now we're near this 50% retracement between the recent swing high and now the recent swing low. So where do you go from here? This is something that happens in markets when you have a big force driving prices higher. And in this case, it was the screwworm, because it was threatening all this supply when we already cut off supply from Mexico. And then, this driving force disappears. All the people that were in the trade take their profits, you sell off. and then you get a retracement higher. So at this point, I haven't been trading it. And I made a Reddit post around October saying I was getting out of the trade. I didn't want to be involved in a trade where you're kind of fighting the government, so to say. And for now, I'm out. I think if you want to play this, carve out some ranges, do something like an Iron Condor or something, that might be the way to go. Or you could say, there's now a sustained uptrend again. But once you retrace half the move for me, like I said, the driving force that was in place before, it's kind of over, at least for now. So I'm out of this trade. I don't know if there's too much left on the upside for this. We're kind of passing. There's a seasonality to live cattle.
I was about to bring that up next. Yeah.
There's a seasonality to lean hogs as well. And that is once the holiday passes, people are less likely to go out and buy those really nice, expensive cuts of meat. You're having a big party, you want to get a prime rib or something like that. Once you pass the holiday, excuse me, once you pass the holidays, that seasonality kind of gets weaker. January, February. And then, you don't really see strength and seasonality for hogs or cattle until around May. I think it starts to pick back up because all your packers, everything, they're preparing for the summer, for people barbecuing, buying the meat again. Everyone's excited to get back outside, fire up their barbecues. So yeah, for this trade, I'm out of it now. I'm not participating. An Iron Condor. A long doesn't look too good to me actually, because you have the prior support from those moves back in September coming into play as possible resistance right now around 230 to 235. So if I had to take a trade, it'd probably be an Iron Condor with more room on the downside.
Interesting. Yeah. The December seasonality is a little bit weaker. I'm looking at 30 years going back to 1995 right now. Typically, the winter months do produce gains most of the time. For example, November lean hog since 1995 has rallied 74% of the time in November and 60% of the time in December, 68% in January. But then you make your way into those spring months, March, 19% time rally, April, 42% of the time rally, May, 48% of the time rally. So we're coming to the, we're in the thick of and coming towards the tail end of the seasonal window for lean hogs. It's not something that I trade, but I know you've had your hands in it over the course of this year. So figured to be a good interlude before we actually do go over to our energy products here. And ultimately, Thomas, there is some news that maybe Russia, maybe Ukraine, they're coming to some sort of agreement. 5-minute chart, has been quite volatile here. And volatility has been picking up intraday for what it's worth. So 21.3 IVR, sitting near the bottom side of a range. It doesn't matter what headlines are coming out of Venezuela. Thomas, this is a tough market. I mean, it's nearing the downside of some of the stuff that I've been trading in recently, including the short iron condors here. I'm kind of running out of patience to look for a bounce in this market.
I'm in the same exact place as you are. My iron condor, the put side is at 57. So, now it's now we're about 43 cents below that. I've got time. If you're looking technically, you got support from October in crude oil, where we got as low as right around 56.11, right around there. There is some possible technical support, but again, it's a commodity. The market is driven by supply and demand forces ultimately. It doesn't have to respect those levels, and prices never do with technicals anyways. They're just, one of the methods you can use to increase your confidence.
Okay, but hold on a second. Oil at 56. Historically, when oil's this low, is this not consistent with kind of recession territory? Like work with me here. Aren't you making a bet if you're going to be short oil from here henceforth? You're putting a position on today. You're leaning into a recession call.
Absolutely. So if oil's at 90 and you're betting for it to go down, it doesn't mean you're betting for a recession. You're betting for something like, OPEC to start throttling supply or something.
Right.
When you're in the 50s, if oil's trading at 45, 40 a barrel, it's almost guaranteed you're in some kind of recession, right? Because it's a commodity that is just so, driving cars, driving boats, driving anything. The world moves on oil. And that's why you use it as a barometer for the economy, just like you do for copper to a degree. So, yeah, I mean, if we get lower, I mean, low 50s even, it shows that you have a weak economy. OPEC has brought back some oil to the market. We're getting weakness today, or not weakness, but we're getting weakness despite Venezuelan crude exports dropping immensely since the U.S. seized an oil tanker over the weekend or last week. And, they released that very high-speed video that everyone has probably seen. But yeah, I mean, you got the Dallas Fed energy survey up, the shut-in prices where you have to, probably shut down a well because it just becomes a drain, a money drain. You could look at things like that. You get down into the 40s, mid 40s, Permian, some of the places in the Permian, you have to start considering shutting those off. So, a commodity like this, it's self-correcting to a point, because you get so low, then you start taking off production, but it takes a long time to do that.
Well, that's one of the, thinking about that particular facet of this heading into 2026. This wasn't really an issue we had to consider in 2025, but knowing that there's a floor, so to speak, right now it's not feasible to open up a new well. Okay, the break evens, according to Dallas Fed, we need $61 a barrel at a minimum, 70 at the high end, depending upon where you are in the Permian and other places around the country. But keeping these open, $26 to $45. If we start to see a sub $50 a barrel oil, Thomas, you're getting into that zone where production would have to slow down. And then you kind of get this supply coming out of the market that even without anything else changing in terms of demand, that supply-demand imbalance starts to correct and oil prices can bounce back a little bit. I would consider thinking longer term, not at these price levels, not right now, but as we look out over the next few months, you start to see something like, okay, we're at 57 here in this contract. So if we were $7 lower, if we're at $50, we're talking about something that's short at 45. Okay, so, equivalently, we'd be looking at like 52. This would be the similar pricing, like 52.50. If we go out into the future, Thomas, and we're trading at $50 a barrel, right? Whatever happens, and we want to put on something that's going to be short the put, that's $5 below there. We want to short the 45 put, get long the 43 put. Okay, short put spread. You'd be looking at something in the neighborhood of 3 to 1, sitting probably around a 60% probability of profit when we cross that bridge. If volatility is any higher, you might get compensated for it more. But there are some of those fundamental structural things about some of these commodity markets where, like, if X happens, then Y will occur. The companies will stop pumping oil. You have to start to think about maybe selling some puts into those areas as they get closer by. Not today, but an idea to keep in the back pocket going into next year.
Yeah, I mean, selling puts down there, that's a good strategy because like we said, those the rigs start shutting down. Baker Hughes, they do release a weekly report. The latest week, oil rigs in the US, 414. Compared to a year ago, it was 482. So over the course roughly this year, we have lost about 68 rigs. Around there. So it's rigs have been going down, but if you see prices drop any lower, then start looking at those rig reports. If you start seeing 3, 4, 5, 6 rigs going offline per week, that means there is a problem with the US producers. And the graph we showed, that black line, that was an average. The smaller producers have a higher cost per barrel, and they will start shutting down first. So you could start looking at something like earnings reports for smaller oil producers. and they could start getting bearish. They start saying we need to shut down some of these wells. Headcount is going down, things like that. But
Well,
in
no doubt,
the
XOP
economy
today, big leader, big to the downside, is the worst performing ETF.
Yeah, exactly. And the exploration and production, it's going to follow oil prices. A little different than if you're looking at process like USO that tracks more crude oil barrels. And now we got, you're bringing up natural gas. This is a trade I'm long. I've been long natty gas most of the year, buying pullbacks. This is a pullback I bought a little prematurely. The weather is not cooperating with the outlook. It looks like a very warm Christmas for almost anyone. Even though,
Except for
like you
me.
said, very
I'm right
cold
over
out.
here. I'm like right here, so I'm getting still below average temperatures.
Yeah, you're not going to participate, but Chicago will be getting warm temps, and like I said before, I don't like that this time of the year, but this is just going to create less demand. A lot of this nat gas demand is concentrated on the East Coast. So, even most of the East Coast, we're seeing higher than normal temperatures through December 28th. So if you're long nat gas right now, and I've given myself plenty of time, the position I'm in is, I still have about, where's my nat gas position? 71 days out. So, I gave myself plenty of time to work with. So I'm not expecting nat gas to really make a big comeback until probably late this month or January, because you do need time for those weather forecasts to become supportive again. And in the meantime, now we got a peace deal back on the table with Russia, Ukraine. That is also bad for natural gas. So it looks like the natty gas bulls we're not having a good time right now. You have some supportive possible levels coming up, 3.8, 3.9. It looks like decent places to take a stab at if you do want to get long.
Esther's last stand.
Yeah.
Thomas, some of these charts, 71 days, if we wanted to look, this is the H6 contract. Oh boy. That's the pick your poison, right? This is why I bring this up. If I'm looking at January natural gas, okay, it's coming into the lows here. It's starting to break down. When I go over to G6, we're already at those lows. Okay. But we punch through today, and then I start to go out to March. Oh gosh. These charts are just getting uglier and uglier as we move along the curve, Mr. Westwater. Not great. You can see some of the bounce here occurring at the lows that we had in August. So perhaps that's the silver lining that people hang their hat on. But that weather pattern coming in does not look good for the gas. Dollar mixed at best here today, Thomas. The euro, when I last checked, was up by 0.01%. It's down by 0.02 now. British pound is off by 0.03. Much ado about nothing there. The Canadian dollar is a touch softer. Inflation today, 2.2% versus 2.3% anticipated year over year. Slightly softer. The big focus this week, though, yen. BOJ rate decision coming up on this Thursday. Thursday is a big day for the banks, the central banks, that is. We're going to have the BOE in the morning, then the ECB a little while later, and then the BOJ at night. So if I'm trading currency futures, look, these volatilities are not that high compared to what we're seeing in other pockets of the market. Okay. The end of the week could pose some fireworks. The BOE is expected to cut. The BOJ is expected to hike. The Fed is somewhere trapped in the middle trying to figure out what the heck is going on. Maybe we'll know more by Thursday, Thomas, but by the time we get some of these central bank decisions, we're going to have had all of this data that the Fed cares about, the non-farm payrolls, the CPI. And so it's not just that we have these rate decisions. They're going to come after the market contextualizes, is the Fed late? Is the Fed early? Does the Fed have more room to cut? If all of a sudden it looks like the Fed's running way behind the curve, let's say non-farm payrolls is minus 100K and inflation comes at 2%. It comes out basically a full percent lower than people feared. Do you think a BOJ rate hike is going to be viewed in calm terms, or could dollar yen collapse, 6J blow out to the upside? So narratively, these central bank decisions, I mean, I see a 10 IVR here in the yen. Holy cow, that looks misplaced. I want to go back to that same bond idea that we had before about the reverse iron fly. If we go long the at the money call and the put, we sell an out of the money put and we sell an out of the money call. This is looking for something, again, risking 3 to make 2. Pretty close to that, not quite. At a 60% pop. It's a big contract, though. So maybe not for the faint of heart, but the yen sticking at 65, I don't know. That doesn't seem right to me, given the balance of risks over the next few days. And this also kind of serves as a proxy backdoor way to get exposure to a yen intervention if it were to occur, because then it probably bounces and then you make money as long as it gets away from 65.
A yen intervention, yeah.
God,
I agree. The IV is it does seem a little too low considering the events that we have over the next few days here.
Smaller position here, 4 to 1. Not a fan of that. We'll work it out more. We need to wrap though here, Thomas, because we've come to the end of our session. Tomorrow is day 1 of the big calendar releases that will be impacting many of the futures products that we discussed here on today's show, including that U.S. non-farm payrolls report, 8:30 a.m. Eastern, 7:30 Central Time. A reminder that we're not getting full data because of the government shutdown. So what we do see tomorrow, that's the employment situation that's coming out for the month of November. We will have non-farm payrolls for October, but no unemployment rate, if that's something that matters to you. Other than that, retail sales as well. What's the consumer doing throughout all of this? Important day Tuesday, Thomas. Maybe this volatility perking up for a reason. We'll talk more, though, in about an hour. I'm stepping in for Nick today on Last Call, so I'll see you there with Jamal. Then, of course, overtime with Ilya immediately afterwards. So stick around, grab a sandwich, get some coffee. You're watching Tasty Live. Up next, Dr. Jim Schultz with From Theory to Practice.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
tastytrade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Why do you want high IV rank when you sell options? Because you get more money when you open your trade. People get all tweaky when they don't know how a stock is going to act. They'll pay more for guarantees that are written into options contracts. And if they're getting super scared about it, they'll pay a lot more for the options. If you're selling those options, that means there's more credit you might keep at the end of the trade. Since IV rank measures today's IV against where it's been in the past, high IV rank tells you if people want to throw more money at you now. So look for high IV rank when you sell options. Pretty simple.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tastytrade and Tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Understand I got a plan.
from Theory to Practice. Welcome to the show today. Welcome to the broadcast. Man, welcome to the Monday edition of what it is that we are trying to do as the voice cracks a little bit there going into the show. So I was at the dentist a couple of hours ago, and my mouth is still a little bit numb. So I may not sound exactly the way I normally sound. We may get some this, that, and the other thing. There might be an added sultriness to the voice. Maybe we took some away. I'm not exactly sure, but this could be a show for the ages here, as I can only enunciate about 70 to 75% of the words that I would normally be able to enunciate. But you guys are still here, man. You're here. We're doing it together, and so I appreciate you guys so much. If you're watching over on the Tastylive network, then I would actually bounce it over to YouTube. If you bounce it over to YouTube, then you control my enunciation in real time with your brethren who are also watching the program. It is indeed a good time had by most, especially if you're a bear today. You got even S&P's down 10. You got the NASDAQ down 80. Man, the crash has returned. Today is day number 1. So Josh, bring us into the market. Let's take a quick little look at what's going on. S&P's down 9 on the day. Okay, NASDAQ, risk-free instrument, extremely high-risk product, actually, down 77 on the day. You got the boomers down 66. And you've got the Russell 2000 Futures Index down 13. You got bonds up a titch. You got notes up a titch. You got oil down 50 cents. You got UB40 up a titch. You got the Shifties are celebrating, not like the Swifties, man. The Swifties. Whew, man, so I know it's a Monday. I know it's 2:30 in the afternoon. But it's a 40 delta that you've got a banana daiquiri in your hands right now. It's a 35 delta that you've got a natty light ice somewhere near you at this very moment. We'll pour one out for the Swifties that are out there because, man, Mahomes went down. KC eliminated from the playoffs. I mean, that's some brutal, brutal stuff, man. And so definitely pour one out for your neighborhood Swifty. But the Shifties, on the other hand, are actually doing quite well. Gold up $8 today. It was up a lot more. And then obviously you got the Hunt brothers up $1.90 today. So silver looking pretty good. Gold looking, it's seen better days, but silver's looking strong. Gold only up 9 points, but it was up a lot more this morning, I think. So let me see if I go to, let's go to something. Is that a daily chart? That's a monthly chart? What are we? Are we long-term investors now? What are we? Are we just buy and hold guys now? Man, let's get off this monthly chart. Give me a 2-minute guy. Let me get those Errol Coleman settings up on the screen. So let's do a 2-minute, like a 2-day, just a little something. Yeah. So this morning you can see that, right around early in the morning. That, I don't know if that was the exact high, like overnight, but early in the morning, gold was up around, 43.80, 43.85 or thereabouts. Obviously silver, I think actually is around the highs of the day, right? 64 is around the high of the day, I think. Yeah. You can see that right here. So silver has brought it back up to around the highs of the day. It was a wee little bit higher this morning when gold was also really strong. And silver has come back. Gold not quite so much, but the metals continue to show unbelievable strength of body, of mind, of spirit. Just like my guy Philip Rivers. Been telling you all about Philip Rivers. I've been talking about for 9 years now. 9 years been talking about Philip Rivers, and my man came to play on Sunday. Almost took down Seattle, in Seattle, like 14-point underdogs, and they really should have won there at the very end. But anyway, I'm all in on this Philip Rivers thing, man. Like, it's so cool to see him go out there. Like, he literally just got off the couch. Like, homeboy came out of Home Depot and then went right onto the field. Like, he looked like every single one of us. I'm like, that's my guy. That is 100% my guy. Now, it's a little bit different, I suppose, since he does have, 60,000 passing yards in the NFL. So it may not exactly be like you hopping out there, me hopping out there. But I'll be darned if it doesn't feel the exact same. And so I am all in on Philip Rivers for the next 3 weeks. So anyway, I digress. Let's go ahead and let's do, let's see. So number one, if you have a question for me, drop it in the chat box. If you just want to throw something in there for the love of the algo, man, I don't hate it. I don't hate it at all. Put it in there, pump the algo, and I appreciate you very, very much. Let's go through the portfolio. Let's do a little bit of a State of the Union to just kind of see where the wind blows us, and then we'll see if there's something to do. Oh, wait a second. Wait a minute, guys, come back to me. If you're multitasking, come back to me because I need you for a couple of minutes. If I'm not mistaken, and I'm pretty sure I'm not, tomorrow morning there's an NFP print. And this is all I can say. Tuesday jobs number, I'm scared. I am afraid. So if you have any words of comfort, if you have any words of solace that you could share with me to kind of appease the anxiety, the nervousness over tomorrow morning's jobs print, that's going to be unlike any other jobs print that's come before it, please drop it in the chat box. I would really, really appreciate that. And the algo would appreciate it too. So tomorrow morning, all I can say is, guys, this is not good. But let's go ahead and work through a couple of positions that are happening in the portfolio, maybe even every position in the portfolio potentially, and then we'll see where the wind blows us. Maybe we'll do a little something for SPX tomorrow. So let's see, MES and MNQ. We have our ratio spread on the MES. So this is a very standard Betty Crocker 1x2 ratio spread in MES, and we put it on for 107. Remember, with the futures options, it's not $107, it's 107 points. And then you have to obviously apply the multiplier, whatever that might be. For MES, it's $5 a point. For MNQ, it's $2 per point. You know, for the Shooter McGavins that are out there, you guys trading ES, that's obviously 50 a point. You're trading NQ, that's obviously 20 a point. And so it's a 10x multiplier on the actual multiplier of the micro itself. And so for us, though, for MES, it's $5 a point. So we're doing quite well in the position. But I don't want to do anything just yet because there's still a lot more credit to be had if the market does rally or if time just passes. This is obviously a significantly positive theta position. And so we're in a pretty good spot. I mean, the risk is all to the downside. I mean, if it crash boom bangs, then that's going to be where we're going to take on the majority of the risk in the trade. But for right now, let's sit tight. Let's not do anything. There's 32 days to go. I don't see any reason why we should go in and kind of usurp the process. I think we're in a decent spot. So for MES, we're going to do nothing and we're going to sit tight. For MNQ, it's a different strategy, but it's actually going to have the same result. So we have a short put on at the 24.9 strike. We sold this guy for 381, and it's currently marking at 370. Again, those are points, and the multiplier in MNQ is $2 per point. So when you look at the P&L open over here, shout out to the P&L open bros, which they don't have too much to work with these days. They got a little something because Costco apparently is going out of business. But that's pretty much it. I mean, you've obviously got Starbucks. That's been a staple for the P&L open bros, but that's it. I mean, they used to have Chipotle. Like, do you guys remember back in the day when they had Best Buy? Like, this was what, 6 months ago, 9 months ago? We had Best Buy in the portfolio just bleeding red, just hemorrhaging cash left and right. And then finally, we decided to just call it a day. What is Best Buy doing? Hang on a second. They can't still be in business, can they? 73, so they're pretty close to being out of business. Because did we get out of like 80 or something? Like, I think we got out. Hold on, I got to know now. Hold on. I don't want to give you guys misinformation. I mean, I usually do a pretty good job of giving you guys a whole bunch of misinformation. But for this one, I want to be kind of tidied up and buttoned up. Let's go to Best Buy. And let's see. Okay, so we got out. Okay, so it wasn't as good as I thought. We got out on October 8th. So it was a couple months ago. That definitely I remember. But we got out at 76.73. So we got out at 76.70, and you've got Best Buy at 73 right now. Now, we got out on a market order? Wow, that's bad, man. We're doing market orders now? Wow, we're long-term investors doing market orders? Man, what has this show become? Can you guys even imagine? Can you guys even believe that it'll be 10 years from theory to practice now in January? I think it's January 16th is the actual official start date. January 16th of 2026. I did my very first show for the Tasty Network. I mean, I'll never forget it. I mean, I can't remember what I talked about, but I'll never forget it. It happened like it was 15 minutes ago. And so January 16th, 2016, we did the very first show. And then obviously that's going to be 10 years here in a couple of weeks. So maybe we'll do something special. I don't know. I mean, I don't think we'll do anything too different from what we normally do, but maybe we'll do something. And so, yeah, so we got out of Best Buy. Thankfully, we dodged a lot of stuff. And so, all right, let's see if we do oh, Josh is trying to troll me, but I'm gonna throw it off the trolls. I'm just not even gonna pay attention. It looked pretty mediocre, even at first glance. So if I go to MES and MNQ, so we did MES, MNQ, we do nothing. Okay, beautiful. Let's go to Costco, man. Look at this. What's going on with Costco? There's something out there. I mean, I got to imagine something came out. Like, did Sam's Club do something? Like, is this a competitor type of thing? Like, man, I don't know. Now, the good news is, the bad news is it's down a ton, right? The good news is, and we have an 890, 880, 880, 890 long call spread. So we need Costco up above 880. The fact that it's down around 855 is not super amazing. But we've got 32 days to go. So 32 days to go is still a pretty long time in the options world, especially with NFPs. I mean, there's probably inflation prints next week unless they cancel them, which, I mean, it's 50-50 these days. I mean, who knows? You've obviously got, wait, that's not next week. See, I'm all thrown off because the typical flow is jobs numbers and then the inflation numbers, and then you get all the other made up stuff later on in the month. But because it's happening like December 16th, like nothing is less feng shui than jobs numbers dropping on the 16th of the month and on a Tuesday. Like nothing could possibly be less out of whack than that. And so I don't know what's happening, but I think next week is Christmas. So we've got Christmas, obviously. We've got the New Year's holiday. So lots of days off for the market from that standpoint. A little housekeeping. I'm going to be out on Wednesday, so there will be no live from Theory to Practice this Wednesday, but I will be here tomorrow. I will be back on Thursday, but we just had that one little day there kind of stick in the mud. And so Costco, I'm going to sit tight, and I'm not going to do anything now because there's a lot of time to go. Gold, 88 cents. It's up 88 cents today. We're short a put spread, 393, 383. You've got the stock at 396. And let's see, I'm up about 20 cents on the trade. And so that looks pretty good from a sit tight and do nothing type of standpoint. Again, just playing gold to the upside, right? Because if you can't beat them, you join them, right? If you can beat them, then you beat them. But if you can't beat them, you join them, right? And we rarely can beat them, so we join them. We just fall right there into the back file of the ranks there, and nobody knows the wiser. Nobody's none the wiser. Nobody's none the wiser. So we do GLD. We're short a put spread. We'll sit tight. There's no reason to do anything. Today's going to be very much a do nothing type of day, just kind of combing the streets before the show. I'm like, there isn't really much to do. And again, remember, guys, like doing nothing is a strategic maneuver that's in your back pocket. Like this is something that you can do, should you choose to do so. Right now, again, when you're just starting out and you're just learning how to trade, you're going to make a lot of decisions and you're not really going to know why you're making that decision. And that's part of learning. Like that's part of getting better, part of growing, and part of maturing and all those things, right? But once you get to a point where you have built up your skill set, now you're going to start making decisions and you're going to understand the why behind the decision. Like you're going to understand that, okay, this is what I'm trying to do, right? These are the gimmies. These are the gotchas. Here is my game plan. Right? This is what I'm trying to accomplish. And one of the things you can do within that framework is absolutely nothing. But instead of doing nothing because you don't know, you do nothing because you know what it is you're trying to accomplish. It's not really you're trying to move along the learning curve and gain experience and reps and whatever might be the case in terms of, just getting more market exposure. You're actually doing nothing because you're choosing to do nothing. And so that's kind of the situation that we're in right here and right now. But Starbucks, it's basically an unstaying Starbucks, so we do nothing there. SLV, up $1.99. So our strangle is just kind of meandering along, right? We're down a little bit on the trade, but it's not too bad. And then lastly, we've got our Iron Condor in SPY, our little $15 guy. And it's doing okay. We're actually up a few shekels on the trade, up about 30 cents on this guy. So we'll sit tight. And it's been kind of interesting having an Iron Condor with 15 points wide. That's a much wider Iron Condor than we would typically do. And so my hope is that this is going to be it's going to have a little less friction than maybe your more standard Iron Condor as we go from start to finish. Like as we kind of, go from trade entry to trade exit, whether it be 21 days to go or not, because it's still a defined risk strategy at the end of the day. So if you have to take it inside of 21 days to go, that's okay. You don't have quite the gamma risk exposure that you would have with something that's undefined risk. But I'm still hopeful. I'm hopeful that this might be a bit of an easier trade than something like $5 wide or $10 wide. Oh, I can't believe I didn't lead with this. Wow. So it's Christmas season, right? So obviously my wife and I are watching, we love watching Christmas movies with the kids. We love watching Christmas movies, just her and I. Like it's really, really, really fun. So last night I got the call. Last night she turned to me, she said, whatever you want to watch tonight, let's watch it, as long as it's a Christmas movie. And so I said, okay, we're watching Die Hard. Obviously, you know what's amazing? We started watching the movie and she's like, I've never seen this movie. And I said, what? I was like, are you serious right now? She's like, yeah, I don't remember any of this. I've never seen this movie. I've heard of it, obviously, but I've never seen it. I'm like, this is unbelievable. And I said, Autumn, you should consider yourself very, very fortunate right now because we dated for 2.5 years. 2.5 years. Had I known this information at that time, I don't think things would have played out the way that they played out. I don't think we would be in the same spot that we're in right now. And so she is very, very, very lucky that I did not know this earlier. And I'm like, man, who are you? Like, how can you make it through America, right, as a 44-year-old person and not having seen Die Hard multiple times? Christmas, right? It's a spring season movie. It's obviously a summertime blockbuster. And so I was absolutely blown away by that information. But I had to share that with you guys because you guys are my people, man. You guys are 100% my people. So, all right, let's get to you guys, though. Where are you guys at in the chat, man? Let's do it. I see you guys in the chat. And I see a couple people... couple people saying I took them down in Costco. That's pretty funny stuff. And I did. I absolutely did. And if you think that's the last time I'm going to take you down, boy, do you have something coming. Like, it's going to be very regular and very frequent. So I would plan accordingly. And so, like, if for those of you out there that like do like a family budget and like you're going through like your budget, like you've got your groceries, right? You've got your light bill, right? You've got your miscellaneous, whatever. You got to have a Dr. Jim took me down line item. Like, you could just put it right in there, man. A couple $100, $80, $1,000. It all depends on what kind of account size you're trading and just how often you want to let me take you down. But it's coming. Like, it's coming for us all. And so let's see. Who is oh, here we go. I see the Southern Show is in the house. What's going on, the Southern Show? Says, I don't recall you having been in the stream before, so thank you so much for being here and being a part of what it is that we're doing. It's only because of you guys that we can do what we do, so thank you so much, my friend. I appreciate you. The Southern Show says, hey, Dr. Jim, I love the Dr. Jimisms. Can you explain the shifties and the Hump Brothers to me? I can't connect the dots on those ones. I got you covered, man. And I know the chat could also jump in and get you covered, but I'll go ahead and square it away really quick right now because we're on the topic. So the shifties, it's actually a perfect day to talk about the shifties because I also talked about the Swifties, right? So the Swifties are all the Taylor Swift fans, right? Which, I mean, everybody knows that. It's, if you don't know that and you've never seen Die Hard, it's like, man, I don't know what to tell you. Like, you're a lost cause at that point. Like, you can't be helped. Like, the stop loss, you're way beyond the stop loss at that point. The position cannot be remedied. But the Swifties are all the Taylor Swift fans, of course. Well, all the, who is the leader? And she's the leader of what? Pop culture, whatever you want to call it, right? She may be the leader of nothing, whatever. In the financial world, though, who's the leader of the gold world? It's Peter Schiff, obviously, right? Peter Schiff is the guy. Peter Schiff is the leader. Like, he's the Philip Rivers of gold investors and gold traders. And so Taylor Swift has the Swifties. Peter Schiff has the Shifties. So there you go. It's everybody that's interested in gold. And of course, the Hump Brothers are not the Hump Brothers. They are the Hunt Brothers, who they're actually real people, and they cornered the silver market in like the late 70s or the early 80s. I don't know if they ever like went to prison or anything like that, but they cornered the market. And go back and look at like some historical charts of silver, and you'll see it run up from like 10 or 20 all the way up to 50, very similar to kind of what it's done recently, honestly. But a lot of it was attributed to the Hunt brothers back in the late 70s and early 80s. And so they have clearly resurfaced here with this recent run up in silver. And so, but now they're selling pizza. You've got Hunt Brothers Pizza and stuff like that. So they've really branched out and kind of not really like a vertical diversification. They're kind of doing more of a horizontal diversification, which is impressive in my opinion, because the vertical stuff is kind of easy. And so hopefully that helps you there, the Southern Show. But let me see here. Man, I see Tomas Chazaretta says, you're the GOAT, Doc. Man, I appreciate you, my friend. Philip Rivers is the GOAT. Philip Rivers is 100% the GOAT. And so I'm just happy to be here, man. 100% happy to be here. And so let's go back to the beginning. I see you guys, though, with some of the Die Hard comments at the very end, talking about Nakatomi Plaza and saying some stuff that I will not repeat on air. And so, obviously, some very famous lines from that movie, of course. We're only like 25 or 30 minutes in. So they like just took over. And it was getting late. We had to go to bed and stuff like that. And so I'm all like jazzed up. I'm like, man, I'm all fired up. I can't go to sleep. I was just laying there thinking about Die Hard, thinking about Die Hard 2, thinking about Die Hard 3. Thinking about Die Hard 4, thinking about Live Free or Die Hard. I'm like, man, we are on to something now. Like, we've got the momentum built, and it's going to be a really fun couple of weeks. But anyway, let's go back to the beginning. Where are you guys at? Man, I see the Preston in the house. What's going on there, the Preston? The Preston says, Dr. Jim, after a few 5-digit mistakes, I think I have a case of the yips. You seem to take it all in stride. Any tips on the yips? Merry Christmas, brother. Man, Merry Christmas to you too, my friend. I mean, so one thing that has rung true for me, for my whole trading career, like the entire trading career that I've, that has now spanned almost 20 years. I started in 2007. I started investing before that, but like actually trading and trying to make money 2007. So it's been almost 20 years for me. I can say with confidence, every single big mistake that I made was due to size. It was getting over leveraged. It was getting overconfident. It's the same story that many of us experience. And I would actually say every single trader experiences at one point or another. Like if you haven't experienced it yet, you're going to get there. Like when the greed kicks in and the overconfidence kicks in and the pride kicks in, when it all kind of congeals together and makes this jambalaya of really, really bad emotions, this emotional cocktail inside of you that's going to lead you to make some really bad decisions, you're going to be there. And I feel like every trader has to kind of go through that as a bit of a rite of passage. So anyway, every big mistake I've made has been a result of sizing. You're talking about just making like ho-hum regular mistakes. For me, if I make ho-hum regular mistakes, which I still do, of course, all the time, I do kind of take that in stride because I'm just kind of like, all right, was my size in check? Check. Like, did I have a plan moving forward? Check. Like if all these things are like in place and I'm like, all right, I made a mistake by layering in a second tranche too quickly, or I made a mistake by, I bought when I should have sold. I mean, that's a common one that happens to all of us, right? Like these things just happen to all of us at one time or another. I'm able to take that in stride because I'm like, all right, no matter what happens, because my size was in check, I'm going to be able to recover from this. Now, I may not recover with a positive P&L. I still may have to take some type of red P&L on the day of the week, the month, whatever. But it's like, all right, as long as my size is in check, like I'm keeping the lights on, man. Like as long as you're keeping the lights on, and I mean they're actually on. I'm not talking like Joe versus the volcano where they're flickering and like you can't see anything in front of you. Like that's not good. You want them to be on. Even if they're like the crappy Home Depot, Walmart light bulbs, just keep them on, right? But when you have the lights on, then you live to fight another day. Like you really do. You can come back tomorrow with a clean slate and just say, all right, like, let me get back to business as usual. Let me go BAU, man. Let me go business as usual. And that's what always helps me is I trace it back to the size. I trace it all back to the size and I'm thinking, all right, was my size in check here? Like, did I do a good job of sizing from trade entry? And then, of course, with anything else I did on top of that, with premium, tranches, whatever. And once you trace it back down to that source code, it's very helpful for me. And if I wasn't sized correctly, if it was too big, then that's fixable. It's fixable, and it's also 100% my fault, right? And so when I think about it that way, it's kind of like, oh man, like what am I doing? What am I this? What am I that? And so I would encourage you, the Preston, to go through a similar type of sequence and take it all the way back to the very beginning with position sizing. That's why we talk about it so often. That's why everything we talk about, I feel like, can be traced back to position sizing because it really is that important. So hopefully that helps a little bit. Samuel, happy Monday, Doc. Starting the week with the most underappreciated asset in the market, your B- wisdom. The wisdom is probably about C+. No ghost or LMNT needed. This show is the stimulus. Man, I appreciate you so much, my friend. Man, I appreciate you very, very much. As you can see, Autumn's got me stuck with just water. She lets me put some electrolytes in my water from time to time, but they're like the Walmart brand electrolytes. And so I'm pretty confident there's nothing in there. But Wolf in the house. What's going on there, Wolf? Happy Monday, Dr. Jim. Thanks for all that you do. And I appreciate you, my friend. Thank you so much for being here and being a part of what we are all trying to do, whatever that might be. And then, look at Tastylive show hopping in the chat. All right, that's some good stuff, man. Pumping that algo. I appreciate that. Is Costco going out of business? Why all the sellers? Yeah, I don't know. It seems they've rallied a little bit, though. Costco up to 855 now. If I bring up a chart of Costco, yeah, you can see they bounced right off the bottom there. And so a little double bottom in Costco right there on the 2-minute chart. I don't know if you're allowed to put a double bottom on the 2-minute chart, but we just did. So there you go. And so Costco looks like it got to a low of about 852 or so. Costco was down to 851 and some change. And so 4 points off the bottom. So I'll take it, man. I mean, the longest journey begins with a single step. And so here you go. But let's see. Orgdenu's in the house. Hello, Dr. Jim. It seems Santa is not coming this year. Yeah, I mean, it's, NASDAQ down 90. Is like, this is kind of what I was joking with Tony and Nick about this morning. It's like, man, can you even imagine like if the NASDAQ went down, 10% from here? Like if the NASDAQ dropped to 2,000 points from here? Not in one fall swoop necessarily. It could be kind of a methodical thing. But man, I mean, the internet would lose its mind. I mean, 90 points on the NASDAQ, not just you, Daniel. I'm talking about like writ large, like, all over cyberspace, man. It's like if the NASDAQ goes down 110 points, like it's over. It's over. All the bears come out with the I told you so. All the bears come out with the Warbrooks like today's the day. It's day number 1. It's all these things. And then of course they just rip it right back. And so I have no reason to believe that the Santa rally is still not on. Like I have no reason to believe. I mean, the Halloween rally was spot on. The Thanksgiving rally was spot on. The week 1 of December rally was spot on. The Santa Claus rally is going to follow suit. Why would we believe anything other than that? I'm like 34 to 35% sure that the Santa Claus rally is all systems go. Trader Scotty, yes, in the house. Dr. Jim is taking me down to Costco. Yes. Andrew Cortado says Costco is bleeding. That's right. I took you all down. Paul Heyman says $4.99 chicken there, not making any money. Maybe not on the chicken, but that may be a lost leader for Costco. I'm sure they're making some nice sweet coin on that drip that they got at Costco. I have no doubt in my mind. And so let's see. Danish Dynamite's in the house. What's going on there, Danish Dynamite? Appreciate you, my friend. Ranch. Oh, shoot. I went with the cash you could put in Nike. I wasn't going to do those anymore, but it was too tempting. Ooh, what's going on in Nike? I don't even want to look. It's up 78 cents. Come on. Ranch, what's up, my man? Nike's looking good. Like, where did you get in? I mean, this is a 2-minute chart, but let me look at like a daily. Let me look at a daily deal. Going back we'll do like a few months. Yeah, I mean, any put you sold here, you'd be in a really good spot, unless you sold it back here, of course. Like if you sold it up here or even up here, it's not that amazing. If you sold it up here, that's obviously not that amazing. If you sold it here, like you're right back in business, man. So you should be okay. You should be okay there, Ranch, on any puts you may have sold in Nike. And so, and again, the short put is a great strategy. I'm a little bit biased, I suppose. But Sam L in the house, just here to confuse the algo. Costco, Iron Condor Crash, Pecan Pie, Dry Scooped Creatine, VIX at 12, Dad Bod at 18%. Man, I'm not even about the Dad Bod anymore. Like Philip Rivers has me so fired up. I'm all about the Granddad Bod. Like, I mean, did you guys see him walk in the field? Did you guys see him walk in the field? I mean, he looked like a high school coach. 100% looked like all my high school coaches. And I'm not saying that as like a negative thing. I'm just like, he fit the profile of the high school coach, like 1,000,000%. And I'm like, my man is starting for the Indianapolis Colts today. And he almost won in Seattle. It's like, man, it was just crazy stuff, man. I'm very excited to see next Monday they play the 49ers. And so I'm actually I really don't have time to watch too much football because I have so many other things going on in my life and, with the kids and the wives and whatever. I mean, there's only one wife, but man, I'll be, if it doesn't feel like multiple, on many, many days. So I don't have a chance to watch too much football these days. But I do want to get a chance to watch my Colts live next Monday night. And so I'm going to clear my schedule so that I can do that. But let's see. RZX in the house is digging it. I appreciate you there, RZX. Appreciate you. Shawshank is in the house. Good afternoon, Dr. Jim. What's going on there, Shawshank? Appreciate you, my friend. Ranch back in the house. Good afternoon to you too, my friend. Scramble everything. Welcome to the Monday edition of the Dr. Jim Power 3/4 of an hour. He said power half hour. That's not correct. Power 3/4 of an hour. Good to see you all on the YouTubes. Yes, that's correct. The YouTubes is where it's at, because you all can communicate with each other. I mean, there's 500 people watching. They're all trying to do the same thing that you're trying to do, right? So you guys should be forming friendships. You guys should be forming alliances. Like, come together, man, and like take it offline. Like, get a Zoom thing going, get some other thing going. Like, I mean, I know that trading, man, it can be so isolating. It can be so lonely. It can be a very lonely endeavor because oftentimes in your world that you live in, like day to day, you might be the only one doing what you do. You might be the only one that like truly, is trying to do what it is that you're trying to do. And I don't know what it is I'm trying to do. I say it on the show every day, but we haven't figured it out. And it's almost 10 years in, right? And so I would find other people that are watching the show, and maybe you guys can come together, bounce ideas off of each other, and just kind of have somebody that's kind of in there in the foxhole with you. I think it can be incredibly, incredibly valuable. And so Steve Aguilera, I love anything that is red automatically crash. Yes, I love how anything that is red is automatically crash. That's correct. And I'm just telling you, I am just verbalizing the internet's emotions. Again, you've got the NASDAQ down 82, right? Watch what happens. If this thing closes, let's say it goes down 160, right? Not even a full percent, barely over a 0.5%. Read through some of the comments on the internet. Go to your favorite source, scroll Instagram. Get on Twitter, X, right? Like do a Reddit subreddit, do a Reddit forum. Hey, even hop on Pinterest, right? You're going to see people posting the saddest pictures you've ever seen. I can assure you, NASDAQ down 160, it's over, man. Like it's 100% over. And by that, I mean, hasn't even got started. So Samuel says, well, iPod Touch didn't warn us. That's true. Where's our risk management oracle when we need him? He should be here somewhere. He lurks a lot. I think he's here. iPod Touch, where are you at, man? With the Event Horizon. Like, we need the calls, man. Like, that's why we're here. You think we're here to watch me? You are wrong. We are here for your Event Horizon calls because nobody calls a 38-point drop in the NASDAQ better than you. And so we need you, man. Like, we need you. Somebody put up the iPod Touch Event Horizon signal in the sky, and I have a feeling he'll come. And so Brian Dowdy in the house, what's up? Dan Ducarn in the house, what's up? Woof, woof. Just an extra algo pump. That's what I'm saying. I appreciate you. There's the Southern Show. I made it back to the surprise and delight comment. There you go. That's good stuff. Rex Kramer 22. Dr. Jim, we were talking about you this weekend. Good things, of course, man. I hope so. I appreciate you. Probably took you a while to find those good things to mention, but I appreciate you very, very much. And so thank you for spreading the word about the network and about my show or whatever the crash course is. I appreciate you, man. This is how we change the world. Like, honestly, this is how we make a change in the financial space. And so thank you there, Rex Kramer. I appreciate you very, very much. Let's just grab everything. Dr. Jim, it means you got a chance to get that call up back to the Dad Bod Natural Senior Classic at the local community center. Yeah, I'm gonna have to do something, man. That's right up my alley, though. I'd rather sign up for the Granddad Bod, but there might be some, there might be some rule. They might be checking. You might be needing to bring like birth certificates and stuff to get in the Granddad Bod Classic. But maybe I'll give it a shot. Samuel Phillip Rivers retired but stayed undefeated in dad reps. Elite consistency. I agree, man. I agree. And he threw a touchdown, man. Like, that's crazy. Like, I know it was just a little dunk over the middle that obviously I could have thrown it. You could have thrown it, of course. But we weren't out there. He was out there, man. Like, that's really, really wild. And so Arn is in the house. Hi from Dubai, man. Arn, what's going on? Appreciate you, my friend. Thank you for being here. Old Two-Face in the house. Always make sure to like the stream while Dr. J is on for the algo. Yes, thank you so much there, Old Two-Face. If you haven't done so already, please drop a comment in the stream. It doesn't even have to make sense, right? Just drop it in there. Hit the like on the stream. And of course, subscribe to the channel if you haven't done that yet. All of these things help all of us. And if you do it during my show, like, it helps. It helps your boy out. And so I appreciate you. I actually don't know if it does, but do it anyway because it can't hurt. And so Ranch says, how about selling a put spread in Nike, Dr. Jim? Or if not, a straight up cash secure put. What do you think? Yeah, you brought this up earlier. I've still got it on the stream or on the screen here. Yeah, Nike's at 58. They have earnings in a few days? All right, I'm going to wait. Remind me, though. Remind me let me think. That's Thursday, right? Yeah. Remind me on Thursday. We'll do something on Thursday for Nike. I'm not going to do it now because they have earnings in a few days. But like I said, I'll be out on Wednesday. But I'll be back on Thursday. So just remind me on Thursday, and maybe we'll do a little something. And so that'll be good. John Covington in the house. What's up, tasty bros and gals? Hey, Dr. Jim, what's going on there, John Covington? Let's see. Rex Kramer says, what's going on with Costco? I'll be stuck in this put spread till the next administration. Yeah, that's possible, my friend. Again, it looks like Costco. Yeah, I mean, they're finding a little footing right now, but I don't know what's going on. Or apparently it was an analyst downgrade. I see a couple comments about that. Josh put that in the chat, so thank you there, Josh. Yeah, maybe some analyst downgrade, which, I mean, I don't know what's more imaginary. The NFP print that's coming tomorrow morning or the analyst upgrades and downgrades and opinions. I'd say they're about equal. But I digress. Scrum everything. He went over 1,800 days without throwing an INT. That's correct. He certainly did. Sam L. Doc dropped the imaginary NFP number for tomorrow. The real one will obviously do the opposite. Well, everybody knows that only the suckers take the first 19 moves tomorrow morning. So don't be a sucker, right? It's that 20th move. That 20th move in the market is the actual move. And so just keep that in mind as you see the market react to whatever comes its way at 8:30. Let's see. Scrum everything. Is that a new NFL record? Oh, the time between INTs? It might be. See Tomas back in the house. The other surprise and delight. So I appreciate you, my friend. John Covington, January 16th. Congratulations if we make it that far. I checked Polymarket this morning. It's only a 55 delta. So it's basically like when you buy an at-the-money vertical spread. Like when you buy an at-the-money vertical spread, how do you feel? You shouldn't feel great. You shouldn't even necessarily feel bad. You're kind of like, I don't know. You're kind of like, this could go either way. 55 delta that we make it to January 16th. And so, and I'm just telling you what Polymarket says. And Polymarket is truth, man. Like Polymarket is objective truth. And so there you go. Rancid Viper in the house. What's going on there, Rancid Viper? Sam Mel says, Doc, 10 years of the show. That's a full market cycle. It sure is. 3 bubbles, 1 dad bod. No, definitely more than 1. An unlimited B- humor legend. Man, I appreciate you, my friend. Very, very much. And then, Cynthia says Costco is downgraded. I see that. Let's see. Harsh is in the house. Dr. Jim, a Broadcom put spread 330, 300 for January. Broadcom, a little Avgo. Yeah, down $19. Ivy rank is 16, so that's not great. Didn't they just have earnings? They did, right? They did a couple days ago. Go to January, 32 days to go. I don't really mind this trade actually. Let's see. If I sell a 330 and I buy a 300, we're not quite collecting enough, and that's a pretty big spread actually. Now that I look at it more closely, you're risking $23. Excuse me, you're risking $22 to make 7, 20 or 22 to make 8, a little over 22 to make a little under 8. It's going to behave a lot more like a naked strategy, and so this could be kind of a hybrid between defined risk and undefined risk. And so, how do you size this correctly? I don't know. You're kind of in a gray area, right? You're kind of in no man's land to some degree. I don't think you should apply standard defined risk position sizing to this if it's intended to be, hey, I'm just kind of buying this wing to control my buying power and give me more of an undefined risk feel. Because I would say a $30 spread, even in a $300 stock, is going to give you a little bit of a undefined risk feel. And so I don't know. I mean, I wouldn't put this in the 1 to 3% bucket for a defined risk. I wouldn't necessarily even go all the way out to the 3 to 7% undefined risk bucket. I think you're somewhere in the middle. So probably somewhere in the middle is appropriate for the position sizing. So maybe 5%, like maybe something like that could make sense. I'm going to pass on this right now. Just because it kind of took me by surprise in terms of the buying power that would be required for this. And I haven't done like a synthetic short put by buying the wing in a long time. So I have to think about how I would really want to structure this and just how much size I would be comfortable with. And it's not necessarily apparent to me at first glance what that number would be. I don't really think, this is only, that's only about 6.5% of the account. So, about 7% of the account. So it's, it's right there with like undefined risk, but it might be a little bit too big for like this hybrid risk. Like you've got defined risk, you've got undefined risk, and then you've got kind of this hybrid risk, which that's not a bad name. That might actually stick a little bit. But I'm going to pass on this for now there, Harsha. But again, as long as you know what you're signing up for, go for it, man. It should behave more like an undefined risk strategy than much tighter defined risk spreads would do. And so hopefully that helps you a little bit. Steve Aguilera says the power of theta and chill. Yes, it's a very powerful thing. Very powerful thing indeed. Ranch says, I sold the 64.59 put spread in Nike, the January 9th expiration. Yeah, you're okay for now. With Nike up to 68, this is very much a wait and see type of situation. So you've got Nike up to 68 and you're short a 64.59 put spread. Yeah, you just sit tight. Like you sit tight 100% and you just kind of let the calendar roll forward. Now we're already down to the diehard comments. Man, wow, I really overachieved today. Man, look how far we made it down. That's crazy. Hold on. Describe everything Nakatomi Plaza. That's what I'm saying. Rand says, I've been at this for over a year and I'm just starting out. Yes. We're kind of all like that. I think in a lot of ways. Darren Munson in the house says the best Christmas movie ever. And you know what's awesome about? I'm pretty sure, now somebody correct me if I'm wrong, but Die Hard 2, is Die Hard 2 not also set in the snow? Is it not also set around the holidays? And so I'm thinking, man, we have a very natural parlay on our hands. Like we go Die Hard 1, okay, that was amazing. That changed my life. This is Autumn talking, of course, because she's never seen it before. She's going to say, where can I get more of that? But it has to be a Christmas movie. I'll be like, well, you are in luck, madam, because Die Hard 2 is also a Christmas movie. Now, do they mention Christmas in the movie? No. Do they say anything about gifts and Santa? No. But do I see snow? I see it with my own two eyes. And so this is a Christmas movie if I've ever seen one. And so I'm pretty sure that's right. That might be Die Hard 3. I think it's Die Hard 2. And so somebody help me out with that one. Let's see. Anderson Holmes, I can't believe it. I can't believe it. Let's see. The Preston says, but Carl's up, sir. Carl's, are you talking about Carl Winslow? The cop that helps him? Is that who you're talking about? Like he just showed up on the scene and then we had to stop the movie because it was getting late. But yeah, Scramble Everything, Winslow at its finest. I agree. Like it's just such a great movie. And so let's see. Mr. Pillow says, I'm planning to rewatch Lord of the Rings this Christmas. Oh, man, that's a tough pull. I didn't love it, man. Autumn made me watch those movies, and I fell asleep during most of them. I couldn't really tell you anything about the plot. I know you've got what's his face? What's the gremlin looking dude's what's his name again? Not Dobby, that's from Harry Potter. Smeechum or Gleechum or something? Preachum? I don't know. I remember the goblin looking dude, and that's pretty much it. And then of course you've got what's his face, and then the other guy. Yeah, you got the goblin looking dude, Smeechum. You've got what's his face, and you got the other guy, right? That's Lord of the Rings for you. And then they look for a ring, and it goes on for about 17 hours. When the ring was right there the whole time. And so I'm like, why are you looking for it? It's in your pocket. But anyway, I digress. And so, we're almost out of time. Let me see if I get to one or two more. Let's see. Viggy or Vigi Zags. Man, you guys got some usernames that are some straight power moves, man. I can't read them live. I'm gonna go with V Zags. So V Zags says Jimbo always taking you down. That's the truth, man. That is 100% the truth. And then Sam L says, Doc, finding out your wife hasn't watched Die Hard might be the biggest plot twist of the year. Yes. I couldn't believe it. Like, it would have been one thing if it was like I hadn't seen it in a while, like I forgot the plot, but she was like, I've never seen this movie before in my life. I am quite sure of it. And I'm like, this is a problem for us. Like, we are going to need counseling when this is all said and done. But anyway, I got to run. I appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Hello, everybody. Welcome to the last full trading week of the year. And we've got kind of the last two big data points of the year, too. Tomorrow morning, an hour before the open, we get the unemployment report. Who knows what month it's from? I've lost track, but something that's due. So we got the unemployment report, which is always a big deal, and retail. And then on Thursday, an hour before the open, we get the CPI. So unemployment, CPI, both very important in terms of FOMC stuff, interest rates, retail, kind of an economic measure of health. So and that should be it for the year. There's some dribbles and drabbles here and there, but of course, next week gets interrupted. Sounds so negative. I don't mean to sound that way, but next week is not a full week of trading because of Christmas, and then the week following, of course, New Year's breaks that. So this is it. This is kind of the big full finish. It's a pretty good day. A lot of red on the screen. We started off very green, but that fell to pieces. It's nothing massive. I mean, like the ES is down 0.05%, but I'll take it. I'll take red over green. And we're getting some interesting movements out there. I've got a little bit more than normal quantity of symbols, so I better jump right in. Here is the spider. And just to recap, last Thursday was the best effort it made to get a new high, which it did not achieve. We fell nicely on Friday, and we're falling again today. Net from Friday close to right now, a tiny loss at the moment, but a nice big red bar because we did have such a strong open. So that's going the right way. The diamonds, also another red bar, and also a extremely minuscule net loss right now. We caused on Friday and today just the tiniest bit of damage to that breakout line, got a little bit below it. So no real follow through here from Thursday's big rally. It's just sort of stalled. And one market in particular, way overseas, which is looking way more vulnerable, is China. FXI is down 0.82%. We had a nice tumble on Friday and today. And what we're looking for is a failure of this entire zone here. So to get below, there's around 38 or so to complete this, because it's been banging within this pattern since August, and it broke its trend line a while back. So what we want to see is a completion of that entire pattern right there. I don't tend to touch FXI because I prefer US stuff, but it does look prone to a break, which would help in general for the weakness. Getting back stateside here, we've got the cubes, which is another nice red bar. This is the first pair of decent down days we've had in months, it looks like. And as I said, it's very subtle, and the so-called Santa Claus rally doesn't seem to be materializing. I think any seasonality at all should be dispatched, good or bad. I mean, they had talked about September being a big bad month, really down hard. No, it was like lifetime highs all over the place. And likewise, the Santa Claus rally, where? I don't see it. There's so much distortion, and so many trillions of dollars of excess cash sloshing around from the Fed. The quaint old seasonality from like 1975, no, it doesn't mean anything anymore. So forget it. Within tech, though, the whole AI trade, the bloom is way off that rose. Whether it's energy, whether it's chips, whether it's software, databases, anything that has the stink of AI on it right now is getting hurt after it was nothing but glorious until some weeks ago. Quantum is another example. Here's D-Wave, QBTS, which is down at the moment, almost 9%. As you can see, this has been, that's a little too close. We've been kind of bleeding off here, kind of waterfalling lower over the past 8 days or so. You can look at almost any quantum stock, and it looks something like that. Here's Rigetti, RGTI, down also about 8%. And it had this tremendous run late last year, early this year. And then we had another pop higher. And that breakout failed, and now it's starting to slump. So this doesn't look like a big deal, but the thing is that on October 15, just weeks ago, it was around 60, and now it's about, it's in the 20s. So we're talking about 50 to 60% losses here in just a matter of weeks. So easy come, easy go. And it's not just little pipsqueak companies. Oracle continues to be a shining example of how hard this is reversed. The top of that was in September 10, got up to over 345, and now we're banging around at 184. So getting close to a 50% loss, 50. Pretty eye-popping stuff for one of the biggest companies on the planet. All right, let's switch gears. Let's talk Precious for a little bit, because I'm a big fan of Precious. But I've been with increasing skepticism glancing at Precious, because I think 2026 is going to be another good year for metals. I think we're going to have lifetime highs in gold, silver. I don't think lifetime highs in palladium, it would take too much. Miners, all that good stuff. But we haven't had a really good, scary sell-off in months in this. And some items, including my old favorite palladium, have continued to do well. Palladium at this very moment is up $72.80, 4.72% gain just on the day. So palladium has been a sensation. But as I look at these various charts, it just says to me that it's time for a break, maybe. It hasn't seemed to come yet. But, because the debasement trade has been working for a really long time, and considering Powell announced last week yet more hundreds of billions of dollars of money hurled left and right to try to keep this house of cards erect, that the debasement trade looks better than ever. But just take a look at a couple of charts here. And we can look at it from the perspective of what do they have to do to dispatch with the idea of even a short-term slump. One would be gold really has to push past this lifetime high. It's working its way there for months, and we're very close, but it's got to cut past this level, because it was like uninterrupted here almost, and it's been struggling since then. So if this starts to peel away, turn away, J-hook, whatever you want to call it, that would be a big warning sign. You can see this in GLD. Here's the lifetime high. We tried very hard on Friday. We tried again today. It's just kind of sputtering out. If we start to sink away from that line, then that should set off alarm bells. Silver futures. Intraday lifetime high just on Friday, the prior trading day. We are up now. We're up 2.9%. But the past 3 trading days, we're just kind of hanging out in that kind of mid-60s zone. And the miners seem to be getting a sniff of something they don't like, because we're actually down on these. Keep in mind, gold green right now, silver green right now, palladium very green right now, and yet GDX is actually net down for the day, even with a lifetime high on Friday, which, remember, that was the open. It opened really strong and it sold off for most of the day. So some profit taking going on is the kindest way to put it, I would suppose. And speaking of just palladium while we're in the neighborhood, this was sort of the thing that really kind of made me wonder. This gap was created way back here on October 16. And for many weeks now, we've been skirting under that. And in the past 3 or 4 weeks, it's been a very strong market. And so we bottomed out here. We hit the bottom on November 21, and since then, almost every day, it's been making its way higher. And today, it finally sealed that gap, and a little bit more, just for good measure. Then it started to weaken way some, because it was getting up to about $100 an ounce gain today. And it's up 71 right now. Still perfectly respectable, 4.62%, but there is some weakening going on there. So I'm not being aggressive about this. I'm not buying dust or anything like that. I'm short of some GLD, that's it. If I could short palladium, I might short a little, but it's the bid-ask spread's monstrously wide. So yeah, short GLD, small position, see how it goes. Okay. I often like to follow real money with digital money. And here we are. Here's Bitcoin down almost $4,500. I don't know what to say. It's, it's like religion and politics. You're not going to change anybody's mind about this. The crypto bros will celebrate this thing until who knows how low it could go. But no one can argue that it's having a good year. I mean, I can't think of any other asset class that's gone down for the year except for crypto. Kitty litter, you name it. Everything's up except for this. And today's not helping. So we're down about another 5% on this. And as I've said again and again and again, my top ceiling on this was 98,000, but we didn't even get to that. It was more like 94, 95. And now we're starting to slump away. And we can see that expressed with equities that are tied in some fashion to crypto, like BLSH, down 2.5%. Once again, the gift that keeps on giving, DeFi development, down again, almost 7%. This was a short back here. This is when I signaled the alarm when it broke this right triangle. That was about 100% ago, above from where we are now. Circle Internet, the stablecoin company, down almost 10% just today. And then, of course, the biggest of the big, far and away, the monster in the space, Strategy. Michael Saylor's company, down 8.59% for the moment. For the year, about 50%, 50, percentage change year to date. And it seems that with every passing day, the man's declarations get more effusive, let's just say, talking about just how many trillions Bitcoin will be worth, the market cap. So, it's leave it at that. Okay. On a little bit of a brighter note, Rivian had a great Friday and is just padding those gains a little bit today. It's been such a weird stock that it's hard to say that, this is a great long-term hold, but it's definitely hammered out what looks to be a good rounded bottom, and there's some good press coming out of it. And unlike, say, Lucid, because almost every EV company that isn't Tesla has done dreadfully bad, Rivian seems to be kind of a pretty cool distant second at this point. So as a public entity, so that's showing up nicely. What else is cooking out there? Oh, just real quick. Just some odds and ends on the short side. Bath and Body Works, BWI, beautiful gap trade there today, down 1.45%. I hadn't really thought about Robinhood until Liz and Jenny brought it up some weeks ago, but short that, and that's looking pretty good, down over 4% on this, and some nice consistent performance here over the past 3 days. I'm sure there must be a candlestick pattern made after that. 3 dead soldiers or something. What else? Oscar, OSCR, is resuming its weakness. Got about a 2.75% slip on that one. And Vistra, VST, down a little more than 1%. I'll just real quick rough out the distribution top on this one. Something like so. Yeah, now you can see a little bit more clearly why it looks bearish. So, okay, half a minute left. What shall we do? Real quick, just super quick. Just a couple of others. HIMS, HIMS, looking good, down 3.2%. These are all short. Oklo, again, related to AI, so it's having a weak time. 5.36% negative on that one. Just about any of the kind of hot nuclear and energy companies sinking on the day. And one last one, Sophie, always a very popular instrument. And this is down almost 5% on the day. And itself is hammering out what looks like a pretty impressive diamond reversal pattern, something like so. And I'm out of time, but just one last thing. TLT, bonds. It's net up for the day, but I really must emphasize again what an interesting looking reversal pattern that is and how it may portend weaker prices ahead and higher interest rates ahead. We'll see how that economic data shakes out this week. So tomorrow we'll know more. Okay, thanks. I will see you on Tuesday, and good night. Bye-bye.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tastytrade, pro-level tools, intuitive design, total control.
Look who's back testing. Tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tastytrade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Global markets never sleep. Explore them with Forex, now available on Tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tastytrade.
Grow a strong community with Tastytrade's referral program. When your friend joins Tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tastytrade.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Jamal, we're back. It's Monday, December 15th. Still 2025, only for a few more weeks. We're here for the last call. Jamal, how are you?
Doing well, my friend. How you doing?
I'm doing all right. It's an interesting weekend, of course. You and I both got knocked out of the fantasy football playoffs, so we're squaring off for that third place consolation prize, which is to say that I did not set my lineup this weekend. I don't even know if I'm winning or losing to you. So,
yeah, I know.
That.
Yeah, I know. I actually didn't pay that much attention to my lineup, but I don't know if it really would have mattered because one, like you said, you didn't set yours, and I did have Trevor Lawrence as my quarterback, who absolutely went off this weekend. So that worked out well, I would say. I don't even know. Is there a third place prize? Is there a third? I think there's a third place prize.
Yeah. We don't have to get the tattoo that I think Glenn Freiberger is getting for coming in last place. But it's
rough for him. Not only did he come in last place, I don't exactly know where Glenn's mom came in, but that probably didn't go well neither, which is one of the names in our league, Glenn's mom's favorite team, something like that.
That's Frank. Good for Frank.
Yeah, I know. It's rough. It's rough.
It's rough. Rough day here-ish. I don't know. It depends where you're looking. Crypto's not having a good one. We can go to the charts. Stocks here slashing on this Monday. We're still in that seasonally weak window, December 10th through the end of the day on the Well, today, the 15th, and then 16th onwards since 1950, stocks have tended to rally into the end of the year. Santa Claus coming this year, Jamal? Not on this Monday. S&P up by 0.2%, NASDAQ down by 0.4%. Russell's the loss leader up by 0.7% here. Crypto continues to trade heavy with Bitcoin off nearly 5%. Same thing for Ethereum, off nearly 5% right now, undoing any of the gains that we've seen since the start of December. Cryptocurrency may be sluggish, but the metal currencies, not so much. Gold still positive. Silver back on the up and up, 2.8% higher. Copper close to a 1% gain, although off session highs. In energy, crude a touch weaker. Natural gas weaker again, 2% lower. Is Russia getting ready for a peace deal with Ukraine? That certainly seems to be a news item today, as Josh has reminded me of several times in the chat. Otherwise, it's a mixed day for the US dollar. We could turn our attention to the single equity names. We head over to the high options volume tab here on the platform, and Tesla, top of the leaderboard. And I think that's a good place to start here, Jamal. Something positive on this otherwise red, gloomy Monday. Highest levels that we've seen of the year here for Tesla. AI names are struggling otherwise. Oracle, NVIDIA, Broadcom. Tesla's doing everything in-house. 477, 10.3 IVR. What do you make of this market? Because it seems to be the lone standout on a otherwise bad day.
Yeah, Tesla, I assume that's coming from the FSD discussion throughout the weekend, but it is definitely the bright spot in an otherwise somewhat gloomy market. It's and the thing is, you can't even say this is one of those situations where we're waiting for data and it's low volume. We had like 1.2 million contracts at 11 a.m., 12 p.m. Eastern. That's very early. So this is not a low volume day. It's just one of those where, Chris, it seems like there's still an overhang of the negativity surrounding the AI, portion of the market and Bitcoin, which again, I think it's a lot of the same money trading those high beta things. So that seems to be the overhang, and it seems to be the one thing that's keeping us down to end the year here. And I think a lot of us are looking to see if we're going to get that Santa Claus rally, or at least the remnants of it starting. But so far to start this week, it's kind of negative, and we do have data, albeit not many of us know what that data is going to mean to the market. But nevertheless, we do have data coming out. And then there's also obviously a December expiration, which is not tiny. I think it's about 5 trillion, and I can't remember. It's been so long since I paid attention to some of these sizes of expirations. But nevertheless, it's an expiration coming up, and we know how things can get weird around that. So that's the week that we're starting in so far. And there's not really, I think the one thing I tried to do today is not really kind of chop myself up in some of these trades that, I feel pretty good in most of the things that I have on. And I really tried not to add to any potential, any ways of running myself over by the end of the week by making a trade in an otherwise dreary day.
Dreary day, volatility perking up a touch. VIX is up 77 cents, so technically that's a 5% gain, but 1651 here. I'm looking out along the futures curve here, Jamal, and there's not really much enthusiasm otherwise. In fact, vol futures VXF, the January expiry, is off 6 cents. Can you square these two things for me? Why is the market feeling so jittery? Is this just, it's the last full trading week of the year, technically. Maybe some folks are unwinding positions ahead of non-farm payrolls, CPI over the next few days, but vol futures aren't screaming that this is something we really should be too worked up about right now.
Yeah, I don't think you should be worked up about it, honestly. Again, I will say the one thing to pay attention to is trading ranges. Those have started to creep up. When we were coming out of the Thanksgiving holiday, and particularly in the start of this month, they were fairly low. They were about, and again, I'm just looking at, I'm not looking at average true range. I'm just looking at daily ranges, but they were around in the 40s to the 50s. And then we got a big pop as of Wednesday last week when we had the Fed meeting up to 75, and they've been kind of elevated since then in the terms of a 90, 100 point ranges. Today, though, was kind of mild, 60 point range. And when I look over the last 9 days or so, it's been in a little bit more than that. So somewhat of an inside day, if you will. But like you said, it's not something to get really that worked up about. And I think you're seeing that in VIX. It's just a little bit of a risk off day.
Jamal, I'm going to ask you in a second what your volatility outlook for a bunch of different things looks like for 2026. But before we get there, it's a good time to bring up the 12 days of trading. Thanks to our friends over at Tasty Trade. Their 12 days of trading email series is a daily email with trader-ready topics. You know what today's is, Jamal? Maybe that I hinted at it. It's the volatility outlook, what it looks like for next year. Go to tastytrade.com/12 days. It runs through December 23rd. That's next week. Wow. Can't believe we're already in the second half of this month. So,
yeah.
Jamal, this year was defined by a few volatility spikes, right? We had what happened in April, and that was the big one. There was a kerfuffle in October and perhaps even at the end of November here. But that's the stock market volatility outlook. Bond vol is nowhere to be seen. Metal vol seems to track whatever the near-term directional price is in the short run. We could see that with silver here today, for example, where IVRs are ticking up to the highest levels that we've seen since mid-October, and prices are well beyond the October highs. Do you have a unified volatility outlook for next year? Everything is going to be more volatile, or do you think it's more sector or asset specific come 2026?
I think it's more sector asset specific. I feel like that's kind of been the case for the last couple of years. 2022 obviously was different in that it was all everything. I think it's going to be more sector specific. I don't know what it will be. It's easy to say it'll be the same stuff we've been paying attention to now, but I would like to hope that something different emerges. I don't know. Is it going to be healthcare, coming sometime soon? Is that going to be the thing that's really volatile? We've seen some big moves more recently from Lilly and others. It could be something along those lines, but that's the great thing about options and futures, Chris. We can play that however we want to in any way, shape, or form. So I'm looking forward to it. I'm not going to lie to you. I might be getting a little bit tired of trading the tech names. I mean, it's just been that's been the main thing. And again, I trade them because that's where the volume is. And so, I wouldn't mind seeing something else different, something more liquid outside of those, something really liquid that's different than those. It would be nice.
You mentioned the tech names today. They are among the weaker performers. The NASDAQ down by 0.45% right now, getting close to session lows. Pretty ugly range break, Jamal. Overnight, it looked like we were getting ready to return back into the area that more or less defined the entire month of December up until last Friday. And you could see here, we get to that 25,650, 670 level and immediately turned south and then set a new monthly low. Eesh, that's not great. The S&P is in a little bit better shape heading into the middle of the week as we go towards Tuesday. We haven't quite broken through 6850 yet as we turn our attention to the ESH6 contract, not the Z5 anymore. But to that point, really, it feels like we're kind of in a waiting pattern. I know there's been a lot of volume today. 1.85 million contracts traded is nothing to shake a stick at. Certainly, Frank's been sending me over some volume figures here. 2.4. Yeah, 2.4 million Teslas, almost 4 million SPX. Too bad March has such a low IVR and it's barely trading right now. But you're seeing that there is high participation as we kick off this final trading week. What's your most confident position right now as we think about this trading week? Where we're going to have to survive NFP and CPI and start to think of a diminished liquidity environment where, I don't know, I find the last 2 weeks of the trading year to be a little bit random, if anything.
Mm-hmm.
The money you made and lost still counts, but everyone's on vacation. So the market kind of just moves when it moves. How do you foresee this?
Position.
Yeah.
I don't, that's a tough question. I mean, meaning what? The one that I think I'm going to continue making the most money on. I mean, that's one of the ways to look at it.
So there are certain things, if it's close to expiration, I probably bump it to the front of my queue as something I first look at every single day. I'm kind of in that boat right now with gold because I have a position that's 8 DTE.
Okay.
But there are other things where, if I look at it once a day, fine. So I'm thinking if come Friday, you're getting ready to close out your book, right? For the weekend, maybe for the year, what's something that you would be happy to keep on through the holidays versus something that, I probably should just cut this and wait to revisit it in January?
Oh, geez. I got so many different kinds of things. I mean, it's a hard question, honestly. I don't really think in that term, but for argument's sake, I would say it's probably these Super Bowls that I have on in February and March. And I guess the only way that I can think about to answer your question is I'm not really confident about anything in the next month, honestly. I would say the things that I'm more comfortable about are in February and March. I'm not really confident about anything in the next month. And it's not like, and I don't say that to say I'm bearish per se.
Oh, yeah, for
in
sure.
the next month. I say that like, I feel like that's the biggest thing going on right now. If you're looking at this market and trying to figure out why we're down and volatility is not really that high, but still hanging in the high teens, is because there's really not a lot of confidence, I would say. I mean, I think, before most people felt like the markets were generally trending higher and, whatever issues there weren't really big issues. Even though in the absence of anything major, like we don't have tariff issues like we had earlier this year, but nevertheless, you can see the market feels heavy and there's something kind of weighing it down. And a lot of it is still sort of this angst around the spending surrounding AI. And again, there's nothing specific with Bitcoin, but the fact that it's really heavy and hasn't been able to get off the mat. Those are the type of things that, they've been hanging around here since prior to Thanksgiving. It felt like we had pushed it behind us. And then lo and behold, to end the week and start this week, it's still there. So until that changes, I don't really feel confident about any trade that I have on for the next month.
Jamal, you'd probably be a little bit more confident to trade if you had a friend to trade with. Speaking of which, this is production team. When a referred customer opens a new account and funds it with a $2,000 initial deposit using a friend's referral code, both the referrer and the referral, I have to stop saying referee apparently, they'll receive a $100 bonus. tastytrade.com/referral. Are you happy, production team?
Nice job.
That's how we transition over that.
What's your most confident trade?
Oh yeah, the metals. For sure, the metals still. I have long enough exposure in some of the positioning where I'm still 40 plus days out and have nice enough entries where I'm more than happy to ride out this week and next week and see what happens. Gold to me, maybe it's failing in its breakout here, but haven't seen nearly enough on a shorter term time frame to make that distinction or suggest that I should throw in the towel. Silver has really perked up as well in recent sessions. I know it had that brutal day to end the week last week on Friday, but that was just in the morning and it's been fighting back. And quite frankly, if you told me a week ago that'd be up at $64 already, you and I would say, oh my gosh, what? How did that happen?
Well, what do you think? Is it straight shot to 70 or is it more of a pullback before 70?
Maybe that was the pullback. The channel, you and I last Tuesday on Futures Power Hour, were looking at a ridiculous, not so ridiculous looking Fibonacci extension here coming on the breakout if this is like a cup and handle pattern. And we talked about how 6780 or so would be a potential target up there. And even chimed in that, listen, if gold did $5 or $6 over the past, 2 weeks, who's to say that it can't go another $7 over the next 2 or 3 months? And it already has done, a good chunk of that. So until this channel breaks, silver looks like it's a momentum play. That pull off on Friday was not fun, but that's where duration's our friend.
Yeah, for sure.
And that's right. And so now the position's back to, pumping neatly. I like buying dips in these. The things that are driving them higher have not changed.
Well,
and I really like the fact. Go ahead.
No, you go ahead. Finish. Sorry.
Yes, I really like the fact that again on a day like today, gold and silver vol both perking up. The IVRs in gold hitting the highest level that we've seen since December 4th. Vols up, price up, match made in heaven for the metals products.
Well, that's why my answer was more about duration as opposed to any specific thing. Because truth be told, I don't know. I don't really trade in such that like I love this thing or I'm in this because I love or I believe in it. I don't really do that much anymore. It's more about this is an idea. I feel like it could work. I don't control the forces in the market that eventually either causes that idea to work or to not, but I feel like I have a greater than 50% chance for my idea. That's why we structure things based on pop, right? And so as a result of that, I feel more confident about that a couple of months out at this point. I just feel like between now and January, I think things are going to be a little bit weird. It's shaping up to be that way. I hope I'm wrong, but I feel like we're going to just kind of trade around this 68.50 area, plus or minus, 100 points maybe over the next month or so.
You know, I was looking through the high options volume watch list on the platform, and I noticed that there was a few airlines that were up in the air today, lifting off. American Airlines up 2.4%, Delta up 2.3%. Jets, the airlines ETF, is sitting at what would be a closing high for the year. I thought consumers were weak, Jamal. Is this just a story about oil prices? Should we not get too much in the air about this?
I would love to tell you it's more, but I would say it's just oil prices. And again, oil fairly low here. I'm definitely got in a little too early. I got in at 58.80 last week, but it's been a straight drop here, and we're seeing obviously lower gas prices as well. So this is definitely an oil story more than anything. You got to wonder if this is going to hang around for a while. This is going to stay at this level, or is it going to be more like what we've seen over the last couple of months? But 3 trading days in a row. I mean, when I look back, the last time we saw that was the middle of about a month ago. It was the last time we saw 3 days in a row down, and it was another month before that. So it's just not too often that we see 3 days down in oil over the last couple of months. But here we are again.
Yeah, big day for travel and leisure. Even Carnival up 3.6% right now. Maybe the start of something new, but discretionary. Jamal, I'm trying to put together the puzzle pieces here of a market that is a bit weaker today. And then I look around and I see discretionary, which would be a new all-time high close. That's not a bad thing. I see the banks. This would be a new all-time high close. Banks, discretionary. Since when is that bearish? That can't be bearish.
And yet it is.
I don't know. This feels, again, we're getting more rotation. I know the Russell's not having the hottest of sessions, but it feels like we're getting more rotation ever so slightly. We're getting this market that's just trying to work through the seasonally weak window of December. It's OPEX week. So I'll take a breather here. Everything's fine.
Maybe that's what the market is trying to tell us. This is going to be the next trade for next year. I'm not sure. But like you said, this rotation that's happening, curiously happening towards the end of the year as people are starting to rotate out of the discretionary, out of the high tech names. Maybe that's the next thing that's coming. Again, when we ended last week, what was the main 2 things up? It was the Dow and it was the Russell. Those were the ones that benefited the most. S&P and NASDAQ were down on the week. And so you got to wonder if this is going to be something we see a little bit more of tomorrow and towards the end of the week and the end of the year. It's something to pay attention to.
Well, on last Friday's show, at the end of the show, I put on a position in Google here. I got an email over the weekend asking to explain why we put certain positions on in certain market environments. Generally speaking, when I'm doing something like long a call spread, I'm doing so because I find that the pricing of expressing a view is probably favorable. Buying an out-of-the-money option is going to be cheap. I might like the technical setup. So doing something like long a call spread, which is a risk defined, right? It's not open-ended. Doing something like a risk defined call spread that's slightly out of the money scratches the itch for me. It's low vol. You can see a market that maybe has potential for a move to the upside. If those 2 things come together and volatility starts to expand, the options price will go up, not just because of the directional price movement, but because of, well, the volatility component of the option becoming more expensive. When you look at low volatility environments and you're putting on trades, is there a particular style or strategy that you go to? And you and I have had this conversation, but for fleshing this out on air for some folks who may just be listening for the first time, you're seeing low vol in a number of things like bonds in particular, some of the single stock names that people like to trade. How do you deal with that if you can't do the typical tasty selling vol 45 in, 21 out?
Bonds is a good example. I mean, I put on a call spread on there on Friday. You see how bonds have sort of retraced to that lower end of the range. And I decided I wanted to take a stab at a possible turnaround to the upside. Now, in this case, again, it does go back to duration. I decided to go out to 67 days, that February expiration, to give my idea time. Do I know if bonds are going to bounce back? Is this too low for bonds? I can't say that. No, I have no idea. But just looking at how it's traded more recently, I do know this is the lower end of the range. And maybe there's a slight chance that eventually bonds bounce back. So that's why I decided to go with that particular position. Other times, it just really depends. I mean, one of the things I think I've tried to do more nowadays is try to collect a little bit of something while I'm heading into a directional trade, if that's possible. And so that's where a lot of these Super Bowls have come up, where I've sold put spreads to buy call spreads. in this type of environment. And again, it's not like a super crazy low vol environment in that like VIX is 14 or something like that. It's still 16, which I think again it's below the long term average. But a 16 VIX means 1% in either direction, and that's not nothing. So as a result, I'm able to try and collect a little bit. AVGO is actually one of them, even though I'm taking it on the chin on this name. But that one took. I ended up doing a Super Bowl in that one. I did it in February because part of the reason is this. I mean, even though you had a huge move on earnings to the downside, a lot of times we've seen those moves bought back up after earnings throughout this year. I decided to go out to February because I'm like, what if it doesn't happen this time? And so that's exactly what's going on here. And the fact that I'm out in February gives me the opportunity to not be freaking out over it. It's not January, right? It's one of those where I just decided to go a little bit further out. And yeah, I'm underwater on it right now. I'm short of 380, 370 put spread against a long 420, 440 call spread, right? So quite a bit of ways as of today, but it's got some time on it. And so that's the point. That's one of the things that I've just tried to be more cognizant of than previous years. You just don't know how long it's going to take for these trades to happen. My short call is the 440 call. So $20 wide, trying to spread it out a little bit more on the upside. But we got a long ways to go from here, Chris, after these couple of days of moves. But it's cool. I got time.
67 days, right? The way that I always conceptualize that is, okay, max loss of 435 divided by 67 days. Okay, this is gonna be less than, $7 a day for me to maintain the position.
Mm-hmm.
I can work with that. It's fine. So time here is your friend over the holidays, right? I think going out into the January expiry, if I'm thinking about a futures product here, if I'm looking at, I'll go over to crude as an example. So January 15th, 22nd, 38 days versus 64. I'd go out to 64. 38 days is going to creep up on you. I keep thinking about this. I said this with Thomas today. So this is the last trading week of the year because next week you have Monday, Tuesday, Wednesday's Christmas Eve, Thursday's Christmas, Friday, no one's working. Okay. Yeah. The market has to be open because by law, we can't be closed 4 days in a row. Unless it's, something terrible's happened.
That's a law.
So markets. Oh yeah. You can't be closed 4 days in a row. Friday the 26th, you're going to have a little bit of action. So then Monday, Tuesday, 29th, 30th, New Year's Eve on Wednesday. I've worked New Year's Eve in markets before when I was, a young whippersnapper.
Me too.
Nothing happens. Nothing happens. January 1st. Okay.
Wow.
Markets close January 2nd. People really doing anything? This is also the best calendar because you get the longest break. My kid has 16 days off.
Yeah. You can't beat that. There's actually a lot of potential 4-day weekends this coming year with some of the holidays and the way that they fall. It's one of the better arbs around. You can turn like 6 days off into like 23 somehow. Just so you know. But yeah, no, I remember those days working on like a New Year's Eve or, I used to have to come back to work on the day after Thanksgiving. That used to be the worst. Oh my God. That was just because we'd go to Michigan and, 2.5 hour drive away to my mother-in-law's and then I'd drive back. I remember one time driving back during this like real heavy snowstorm. That was not fun. But I was the main person who used to run this thing at our trading firm where basically you would check for dividends in the whole entire firm. I was the main one that was running it. So I got stuck with that and I used to have to come back. But you eventually got to hand those type of jobs off so you don't get stuck with that crap.
Hand them off to someone younger and with less family.
That's right.
Jamal, we're going into the close here. It's a market that is stuck. The S&P 500 has been sitting there 68.80 for the better part of the last 4 hours. And that's exactly where it's about to close. 68.79 and change. The NASDAQ off by 0.5%, 25,330. Dow off by 0.08 and the Russell off by 0.82. Bonds off the highs, gold and silver off the highs. But you know what? We're done. We're done here on Last Call, Jamal. But I have more to say. You know what? We have overtime coming up next just for that very reason.
At Tastylive, we live and breathe the markets. But when the live show's over, Are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tastylive research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tastylive core strategies.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Slow start to an important week. It is Monday, December 15th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak's in San Francisco. We're here to take you through the next 30 minutes or so as we wrap up the trading day. A trading day that had a pretty exciting start once U.S. equities started trading, and then things quieted down. S&P 500 has not really gone anywhere for the past 6 hours. We saw 68.80 or so this morning, right around 10 o'clock Eastern time, shortly after the cash equity open, and then we more or less got stuck there the rest of the day. High trading volumes don't produce that much movement, with the NASDAQ again sitting where it was, roughly speaking, 6 hours ago, but closing definitely closer to the session lows than the session highs, off by 0.5%. Your loss leader is the Russell, off by almost 0.75% here, sitting close to those session lows. Bonds, they didn't move much, but they do come off their highs over the day, as there was really a sell-off at 10 a.m. Eastern again, which impacted so many different things, including gold, including silver, which silver was able to rebound and show some resiliency. But crypto, likewise, another rough session where that 10 o'clock Eastern hour rolls around, cash equity open.
These gold's looking okay.
Everything hits sell. It is an interesting week here, though. We have options expiration coming up over the next few days, not before we get, of course, to our non-farm payrolls report tomorrow morning, a 1.5 times non-farm payrolls report, considering it's just NFP, but no unemployment rate for October. And then we do get both for November. CPI coming out on Thursday, and it's the final trading week of the year. Next week, Christmas, the week after New Year's. So this is it, folks. If you have stuff to clear off your book, now is the time to sell it. If you have positions you need to add to and window dress to tell people you were long Palantir in 2025? This is the week to do it. Ilya, what matters most this week? Is it the AI narrative? Is it CPI and NFP? Is it a war in Venezuela to distract from the president's tweet about Rob Reiner? Dealer's choice.
I mean, that's one way to perhaps explain what we're going to have to do to put a lid on this Rob Reiner thing. We'll start from the back. Thought the president had some very appropriate comments for the horrible situations in Australia and at Brown University. And then, of course, we get another piece of awful news, and the president goes the other way on that one. Not exactly market relevant, but if we do start a war with Venezuela around it, it'll become that. So I suppose we'll see. In my mind, what the markets ultimately didn't like last week and the negativity that still hangs over them here is an interesting thing to feel negative about. Because if you look at what ultimately was not liked from really Oracle and Broadcom, that was kind of, the market was kind of listless into Wednesday. Everybody was waiting for the Fed. Then the Fed happened. Fed day was kind of back and forth, let's say, kind of a seesaw where markets were saying, oh, they're not ready to cut anymore, but they'll give us these asset purchases. And yeah, we know Powell is saying it's not QE, but it's lower borrowing costs. And that's really all we care about. We just want the borrowing costs to get hemmed in. That's good. And so the market didn't quite know what to make of it right away. And it was kind of a seesaw for a while. It took about 41 hours or 1 day and 19 hours. I did the math. To really kind of settle on what this was. And of course, Friday, it resolved down. And ostensibly, it resolved down because of Broadcom and Oracle. But what did Broadcom and Oracle say? They say something so awful. It wasn't great. There were signs that momentum in the AI build-out maybe is slower than some of the more kind of frothy expectations were. Okay, fine. If this was 2 months ago, 3 months ago, would anybody have cared? Would the AI frenzy have skipped one iota of a step? Probably not. We saw it shrug off more. And yet now it doesn't. So to me, it goes back to the Fed and the cost of money. If the markets ultimately sat on what the Fed was saying and thought about it for the better part of 2 days, and then got some news to test just how resilient they are, given the new Fed baseline for the future cost of money, and therefore for risk-taking in these markets, that test was Oracle and Broadcom, and that test was failed. And so now, of course, the Fed is the most important, but what are we going to look, at least in my mind, but what are we going to learn here this week from a bunch of stale data that doesn't really change the calculus? Probably not very much, considering Powell spent all this time at the press conference saying, listen, the data might be wacky. You can't over-extrapolate any of this stuff. We'll see you back in January. But we're in a really good place to do a whole lot of nothing for a while. There's almost a kind of symmetry with Powell saying we're going to have to run these asset purchases through April, and the idea that the next Fed rate cut probably isn't coming until April. It's almost like the markets are saying, yeah, the Fed is just trying to pave the runway here for wait and see mode because they're not going to do anything for a while. And they want to make sure liquidity is ample enough because they're not giving us any more cuts, at least until we get closer in the approach to mid-year. So,
yeah, there's only a 22% chance of a January cut right now. It's
there you go.
Not like any of the data that are due out over the coming days.
Take a look at March too. It's not great.
March is up a bit. It actually
It's up a
surprised
bit.
me. 58%.
Yeah.
So
But-
not set in stone.
Not set in stone. Closer.
And as we saw in November, these
closer to
odds could swing
50-50.
wildly.
Yeah.
Yeah. But so the market's open-minded to something happening again in the first quarter is just going to need proof in the pudding. So we're going to get 2 of those pieces, or 2.5. There's no CPI report for October. That's fully canceled. So we'll get November's on Thursday. We have half of October jobs, full November jobs tomorrow. You're going to get another jobs report on Friday, January 9th, and then another CPI report on Tuesday, January 13th. So listen, the further you get away from the government shutdown, the more that you have, the true reading on the economy. You're away from the interference or whatever ripples, aftershocks that may have had in the immediate vicinity of the shutdown and then the reopening. Once you get beyond that, though, Ilya, come January, these are all live data releases again that the market puts a lot of stock in.
Yeah.
But that's not to say that what occurs over the next few days can't define the narrative over the next few weeks.
And this, I really think, is really the important point. I think you're spot on there. What I'm leaning towards, to kind of take what I was just saying and what you're saying together, is the market is waiting for this data to tell them something new, and it won't. And the thing that it won't tell them will ultimately resolve into risk aversion. Because if the market was unhappy ultimately with the signal it got from the Fed last week, as the price action might suggest, then I don't think they're going to hear anything this week, though they'll be hopeful to hear it. But I don't think they're going to see or hear anything this week that's going to change that line in the sand now that that consensus has emerged.
But think about the narrative shift that could occur by the end of the week. Let's say we probably should put together a little scenario analysis box to show on the screen. In fact, we will for tomorrow's show. What if you have a really soft jobs report and a really hot inflation report? And then the BOJ hikes. What's the
We already expect the BOJ to hike. And looking at what Powell said, he said, look, these CPI numbers for November, they might be unusually elevated because they're not good data and you should not pay attention.
They're probably going to be hot. Cleveland inflation tracker right now is sitting at 2.88% for November. No, 2.99%.
Yeah,
for November, 2.92% for December.
The real question is what
the month over month.
The core argument, right, that these guys are making is services inflation is coming down. That's the one we care about. Our baseline is that all of the inflation increase is the tariffs. And again, the April timeline starts to really make sense. All of the big tariff stuff occurs in the first quarter plus April for the most part. After that, you get the 90-day pause and then these hodgepodge deals. And after that, it's a different story. It's almost like what Powell is saying here is, here's some short-term asset purchases to make sure nobody bugs out. There's going to be credit. Everybody be cool. To his point, talked about this on First Call this week, SOFR got away from Fed funds to the tune of as much as 36 basis points in October. That was the worst in 6 years. So you get to a place here and you go, okay, they're going to pave the runway, make sure nobody freaks out about liquidity, and then they're going to wait to see what the rebasing of tariffs does for CPI numbers. Because those tariffs should rebase in the first quarter plus April. And the core argument here is now we're worried about employment because we expect goods inflation is a one-off price adjustment, not an expectations for the future type of thing. And if that's what it is, and the expectations for the future are based on services inflation, which is the sticky kind, and that's falling, we should be cutting rates. So it's almost as if the Fed is saying, yeah, We're doing nothing until April, May. When we see what all this looks like, we'll talk about all of this then. In the meantime, don't freak out about short-term lending conditions. We've got $40 billion a month for you to bridge the gap.
I'm thinking about trades going into next year, Ilya, and the volatility outlook for 2026. We're not going to put it on the screen right now, but people should go over to tastytrade.com/12 days to sign up for the 12 days of trading email series. Today's topic is the volatility outlook for next year. I'm thinking about oil a lot because it's nearing the downside of its 2025 range, and it's starting to get into the territory where not quite yet, but pretty close by. You're starting to think about what shut-in prices look like for wells. For example, Permian, $45, $35. Shale in the US, shale or non-shale, 41 to 45. We're not at a place where it's even economically feasible for firms to open up new wells in the country right now. And over the course of this year, according to the Baker Hughes rig count, we've lost, I believe, 68 rigs since its peak in January. So production's up for what it's worth. We still have record crude production despite wells closing in.
That's the thing. For the past couple of years, actually, we've had production go up even as we've closed wells because we're getting more efficient.
We're getting way more efficient. But the question is, at $56, oil, as you look out, starts to look maybe a little cheap. Because when you start to break into the lower 50s or you start to go into the 40s, the market's effectively priced for a recession.
Yeah.
Do we need to make a recession call in oil if we're going to be looking to trade this any lower from here?
Not necessarily, I would think. I think there's a lot of conversation about oversupply. And we're also at the bottom of this range. We got to see what happens here. There's also some degree of risk premium that's in here from geopolitics. For all the horrendous things happening around the world, the ceasefire in Gaza is holding. And Iran doesn't seem like it's itching to re-escalate. We have a situation in the Russia-Ukraine theater, which hasn't really been a big impact on energy prices in a lasting way, but would surely give you some kind of a downdraft, at least temporarily, if you got to some sort of a pause, at least episodically. And so there's lots of things that could happen here. But I think a worry about growth is the correct concern. For a good long time now, this is the second year, really, year and a half, 2 years. The U.S. has been the only game in town. China doesn't have very much demand to speak of whatsoever. They're basically completely reliant on dumping exports on unsuspecting markets, which is how they have a tremendous amount of exports, and yet the economy is still mired in deflation because there's no domestic demand of any kind, really, to speak of. I mean, just look at their numbers that we just saw over the weekend. Again, very weak retail sales. Everything is pointed at the export sector, and because of tensions with the West, what that is Chinese exporters finding new markets on which to dump cheap stuff. Cheap because they needed to move. And Europe is a little bit better off. They're starting to claw back to some sort of positive growth, but it's very slow and very start-stop. Things look very anemic. If the U.S. were to skip a beat here on growth, because something really is happening with the labor market, because finally the tariffs and the AI cool off are kind of coming all together, there'd be a global issue, not just a U.S. one.
Global economy doesn't look too hot.
Doesn't look terrible, though.
Yeah, it's kind of idling. I mean, the U.S. economy is really good. You look at the state of the labor market right now, layoffs are low, hiring is low. Nothing's really doing.
Yeah.
If you have a job,
everybody's waiting for something.
if you're standing in line, stay in line. Don't leave your spot. If you have a job, don't leave your job.
Yeah.
You've got one. Which is to say that Ilya and I both like what we do here very much. Energy markets today responding to a potential ceasefire with Russia, Ukraine as well. Russian officials saying we're 90% of the way there. Volatility continued to creep up in natural gas. Ilya, I still have a position on in here. You laugh whenever I tell you I'm trading natural gas because you like to keep your stress levels low, which is understandable.
I have two young children. I have all the twists and turns my day can take. I'm good.
Going into next year, right? The volatility in energy, it hasn't been consistent and outside of what we've seen in geopolitical turmoil. Oil vol has been mostly sticking at fairly low levels. And I think in terms of a particular product, and over the course of this week, we can talk about all the different products and how we see volatility shaping up on an asset by asset basis, because I don't think you could go through and say, vol is going to go up or vol is going to go down, because it's totally, as far as I'm concerned, I want more vol in gold and silver. How I'm trading it, I hope it goes up.
Yeah.
Right? But there are other things where you can't, and that's going to be totally contingent upon the directional move. But maybe we're in a low vol regime again for bonds. Didn't we do that in the 2010s? That was a nightmare when everything was at 0% interest rates, no bond vol. That made for very unique trading conditions. But for energy, I mean, this is probably the one where if I had to make a gander, what is likely to have the same vol environment in 2026 as it did in 2025, I would say crude is probably at the top of that list. Outside of geopolitical events, like what we had in April with the tariffs, potentially, world ending in terms of the economy if they went into place in that form and fashion. If you think about what happened with Israel and Iran, outside of these brief spats of turmoil, there's almost no reason for the energy market, at least as it pertains to CL and the various expiries, to have any meaningful amount of volatility baked in. So I think that would probably be my vol approach for next year with oil. If we get high vol around geopolitics, gotta fade it. Almost textbook.
I mean, that certainly seems like the kind of thing that I would be looking at as well. I mean, if you look at oil here, it does look to be some sort of a support. I got out last week when it landed on the preceding swing high or a swing low there. Of course, today it's gotten a little bit lower, but us macro folks, we're not good at those kinds of nuances. Scalpers, we are not. And so I had a nice ride down from about 61 to 50, let's call it 7-ish, 57 and change. And that's fine. Would I be a seller here now while we're testing support? No. But a buyer? No, I don't think so. This has been a structural decline since mid-year. If anything, it breaks. And if it breaks, okay, I'll sell again. Otherwise, if this is a place where we might get some kind of a reaction bounce, be it for geopolitical risk premium or anything else, my interest would be, where does that stop? And does the broader series of lower highs and lower lows from about mid-year, does that continue? Because if it does, then that'll be an interesting sell to fade vol, as you're saying.
If energy is able to pick up, given how everything else in the commodities world, at least as it pertains to two of the tracking ETFs that we've talked about a bit here on the show, Ilya, DBC and GJP, how those have been trading, commodities probably going into next year. I mean, that still looks like a really hot trade. The weekly, the monthly chart of some of these things continuing to stretch to the upside, continuing to push higher. Even silver today, a really nice bounce back session following Friday's sell-off, taking back most of the losses. Back to $64.02 here after hours. Gold prices breaking out and not having the hottest day because they do give up a bunch of the gains, and maybe we do see some meaningful supply in place near 4,400, Ilya. But in the short term, some of these things are trying to lift off. Even copper, although copper, I think it was MSN. I got fed an article today that was like, no, it was CNBC. It was how copper is the next big thing to go because of the supply. Here it is. I don't like seeing headlines this public. Copper could hit stratospheric new highs as hoarding of the metal continues. Oh, does someone have some $6 calls they want to sell us?
Yeah,
Is that what's going on here?
So you're saying I should be short, is what you're saying?
Yeah,
got it.
I saw that headline today when copper was trading at I think it was 547, and of course we're now trading lower than when that headline had come out. Ilya, though, the point that I'm making is that I think when we talk about volatility, because if folks are looking at the 12 Days as a Trader series today and they're looking at the volatility outlook for next year, I believe you had a hand in that. I would not apply a blanket to every single product, right? Equities may move in unison, but what's happening in bonds right now and metals and energy, it's all very unique. And we have to you don't treat volatility in the relationship with each of those products uniformly.
Right.
But with that, overtime is out of time here. A quick aside, I did get a question. We mentioned this on Futures Power Hour earlier.
Yeah.
A question last week about process and how we use multi-time frame analysis here. I did a little intro for the spotlight where you and I usually do the calendar for the week ahead. The Druckenmiller way, based on that 2009 conversation that he had with Citi's FX team, talking about his 8 to 20 weeks window and how I adopted that when I first started trading and used that in the similar light. So, 8 to 20 days out, if I'm looking at a daily chart, 8 to 20 weeks out on a weekly, et cetera, et cetera. I'd encourage folks to go watch the recap of that today if they're interested in. It's only about 2 minutes long, which is the perfect amount of time because in about 3 minutes time, Ilya is going to be back with macro money. So with that, for Ilya Spivak in San Francisco, I've been Chris Vecchio in New York. Good luck trading. Stick around though. Ilya's coming up soon.
See you there, everybody.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
All right, so I've got some good news, and I've got some bad news. Let's get that bad news out of the way first. You are going to have some losing trades. Like every trade you place, despite your extreme optimism that it's going to work out, it's not going to work out. That's the bad news. The good news is at Tasty Trade, man, we are ready to adjust and defend and roll our positions if that's what it takes. And that's what this entire crash course is all about. A 5-episode crash course all about rolling. So I will see you inside of episode number 1.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words.
Thank
really
you,
do
Rob.
appreciate it.
New from Tasty Trade. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits when you open and fund a new Tasty Trade account. The Money Match event starts now, exclusive to new Tasty Trade customers.
we are finally going to see some U.S. economic data. Is it going to tell us anything? Or are we going to just keep doing what we've been doing? That's what the question we're going to be asking ourselves today on Macro Money. This is Ilyas Spivak, head of Global Macro here at Tastylive. And we'll start, as we always do, with a little look at what was the last thing to happen. Take a look at last week's performance, see how that gave us some stage setting for what is likely to come next, and then see what is in store for us this week when we're finally going to get some real meat on the bones for this U.S. economic data flow that got disrupted as a consequence of the U.S. government shutdown, and see if maybe we can get some clarity beyond what we've already heard. Now, we start here with a pretty interesting week last week. Obviously, as we can tell here, ultimately, Wall Street resolved its way lower, but it was a very interesting and, for lack of a better word, a very emotional week. We did basically nothing up until Wednesday as markets sat in pins and needles waiting for the Fed to tell them what to do and what to think and how to consider what comes next. And then for the subsequent 41-ish hours, the markets were kind of wrestling with what it all meant and ultimately resolved lower as the markets came away for the week on Friday. Most of these losses that we see here, 2% for the NASDAQ was the real standout, of course, almost a full percent, 0.7 down for the S&P. That's mostly Friday. We see rates end up going a little bit higher at the long end, up 1.1%. That's a second consecutive week. Meanwhile, at the front end, they go down. We'll take a look in a moment as to why. This is the Fed we have to thank for this. Crude oil back to its multi-month lows, that creeping short that I was nursing for weeks on weeks on weeks. I finally took profit on it last week. It had something like 7 days to expiration and things were approaching support. It took forever to get there, but finally, and I haven't re-upped since. We'll see what happens now that we've returned to that support. Gold up last week, begrudgingly, and interestingly, not on the Fed, but again, with some consideration and with some time to digest. The dollar broadly lower. There was uniform conviction there. The Fed really hit the dollar and front-end borrowing costs most significantly. We'll take a look in a second as to why. And Bitcoin managed a little bit of a creep higher last week. It looked corrective. We're still very much in the range where we've been stuck for weeks on weeks on weeks here for Bitcoin. We really haven't gone very far at all recently. And with that, we're not really looking at a strong positive sentiment signal coming out of that gain last week. In fact, a 0.9% gain we have, to be sure. And of course, now, just over the course of today, we're down another 4.8%. And so we're right back in the vicinity of the lows that we hit mid-November. Not quite there all the way, but much closer to there than we are to last week's highs, which amount to the high for this range that we've carved out over the past 4 or 5 weeks or so. So not exactly the world's most risk-on signal here from this tepid Bitcoin rise. Now, why was the market agonizing over the Fed so much? Well, we can see that from the summary of economic projections, this was a letdown. The markets wanted more cuts here, and they didn't get them. We get fulfillment of this forecast here, which was September's call for 3 rate cuts in 2025. That came together. We got one cut in September, one cut in November, one cut finalized last week for December. There's your 3 cuts. The forecast as it was set in September, though, unchanged. Just one more cut from 3.6 to 3.4. That, of course, is a disappointment because the markets have long called for more than that. This is the outlook that is currently baked into benchmark Fed funds futures. And we can see one rate cut is here for this gray area, which is the 2026 outlook. And you can see we haven't been at just one rate cut basically all year long. We were about there in January, maybe going into February, but already very much into the end of the first quarter and into the start of the second, this starts to get a lot heavier in dovish expectation. We end up as low as 75 basis points or so. We can see that here. And now we've clawed our way back into about 56 basis points. So the markets see at least 2 cuts next year, and the relatively modest at this point likelihood of a third. 6 out of 25 basis points is only about a 24% chance of a third cut. But nevertheless, there's a pretty significant departure here, obviously, between 25 basis points and 56. And that's after the markets have moderated their expectations recently. You can see that here. So as we look at this then, the actual outlook on rates policy was disappointing because the markets didn't get the easing that they wanted. There was nothing particularly controversial in the statement until you got into the second half, where the Fed announced that they're going to start this short-term asset purchase effort. This is meant to run, according to Powell, who explained the details at the press conference following the meeting, through about the April tax season, which is very interesting indeed, because what it suggests is that the Fed is not on course, or seemingly is setting itself up to not act until around when tariffs should factor out of the year-on-year math on inflation. The core argument that the Fed is making here, recall, is that inflation is not a lasting thing in this particular iteration. So here's what Powell said on this as he spoke after the FOMC meeting. He said, underlying inflation shows mixed signals, evidence that service inflation is moderating. Goods inflation is entirely driven by tariffs, and if you took them away, you'd be in the low 2s. In other words, the sticky part of inflation, the part that the Fed has been agonizing about for years at this point, services inflation, that's coming down. And as long as you credibly believe that tariffs are a one-off, that what you'll have here is a single price adjustment, well, then right around March, April, going into May, year-on-year CPI calculations should rebase for that adjustment, and you should stop seeing its influence in year-on-year inflation numbers, for the most part. And at that point, perhaps, you get inflation down to the Fed's target, and everything that the Fed is doing here starts making a lot more sense because, of course, recall what the Fed is telling us, that the labor market has softened significantly, that unemployment has edged up, that job gains have slowed, that the Fed is now operating on the expectation that monthly payrolls growth is a negative 20,000 jobs. That is to say that if you take into consideration what Powell explained as the almost systemic overcount in this version of NFP data, if you're running at about a 40K a month average rise, we'll get to the significance of why 40K in just a moment, but if that's where you're running, and the overcount, according to Powell, is something like 60K a month, the net is about a 20K loss of jobs monthly at the current cadence. And so you get into this situation where the Fed goes, right, so somewhere in the first quarter going into the second, if we're right, the tariffs are going to fall out of the year-on-year CPI math and PCE math. And we got this slowing in the labor market. Yes, we should be cutting if this assumption is right. What if it's not right? Well, let's see. And in the meantime, let's make sure the market gets its liquidity so there's not a spook about financing while we sit on our hands. And that seems to be what this is all about. If you take a look, in fact, what this actually is referring to, here is the spread between overnight borrowing costs, SOFR. This is the secured overnight funds rate, financing rate, secured as in secured by treasuries, by short-term treasury collateral. And EFFR is the effective Fed funds rate. Why effective? Because the Fed obviously sets the Fed funds rate in a range. And that's the midpoint. So if you look at what the actual spread here is, you can see that from about mid-year, somewhere around July, the markets start to veer away from the Fed's target. In September, they veer about as far as 18 basis points. But then in October, they get away from the target by as much as 20 or 36 basis points. And then again, recently, as high as 23 basis points. This is in excess of a full rate cut here. So short-term borrowing costs seem to be really getting away from target and getting away in a higher direction. That is to say, markets were tighter than the Fed wanted them if policy were being adhered to. And these are some of the biggest deviations we'd seen since COVID era. So about 6 years or so. So it's not surprising that the Fed is saying, look, we're going to give you some liquidity here. And the cadence looks like it's going to be about $40 billion a month for the next 3 or 4 months. And then it should wrap up. Now, the market, nevertheless, picked up a whiff of quantitative easing here, even though Powell strenuously said that this was not it, that this is just basically a bridge liquidity effort to make sure that things don't get feisty over a low liquidity period over the holidays and then going into tax season. And probably, as we're positing here, to get them through a pause in rate cuts while they wait for tariffs to rebase and see if their assumptions actually make sense. So the markets have these two things to weigh then. On the one hand, they have a rate cut only for next year, whereas they want at minimum 2. And on the other hand, they have some bridge liquidity here. So which is the thing that ultimately sets the tone? And when you look at this, you see, so short-term borrowing costs are down, so the dollar is down because, of course, the short-term appeal of holding dollars goes down if the yield on those holdings or the potential income from lending those holdings is diminished. Short-term borrowing costs go down. You can see that here. Long-term borrowing costs don't follow, tellingly. That's the asset purchases right here and ostensibly here. But ultimately, the markets are left disappointed. And that's here. Now, obviously, people at the sort of base level of expectation are going to say, well, the reason things sold off was tech. That's why the big NASDAQ sell-off. And that's on Broadcom. That's on Oracle. Both of those earnings reports last week seem to show that the momentum behind AI build-out spending is not going to be as fast as expectations had it. But go back a few months, and those kinds of nuances were roundly ignored amid the AI frenzy. Why is the market suddenly sensitive to this now? Ostensibly because risk sentiment in large part depends on what risk-taking, that is the capital, money, what risk-taking costs. And if risk-taking is going to cost more, and the money is going to be more expensive than benchmark expectations had it, then risk-taking is going to be diminished. And it is almost as if the market's bulletproof vest of cheap money isn't as big and doesn't have as much coverage as the markets wanted it to have. So the body armor they were counting on is perhaps only just a chest plate or something like this, to torture the analogy to death. So if that's the case, well, then it makes sense that there is a degree of risk aversion here, because it's not so much that the markets are deathly worried about the AI boom slowing as such, but that in that kind of an environment, their resilience is questioned. And when that happens, you need cheap money, and the money isn't looking as cheap in the wake of the Fed. The markets seem to have concluded as they wanted it to look. That, of course, makes this week very interesting indeed, because there's going to be a bunch of back data from the government shutdown that's going to help to illustrate just what the Fed has on its hands. But perhaps the key here is it is, in fact, back data. So we're going to get non-farm payrolls for October and November. For October, it'll probably be a partial number, because the government shutdown meant that the surveys that go into this number simply were not conducted in full. For November, it is, shock of shocks, Powell's magic number, 40K, which in Powell terms means negative 20K, according to the sort of conversion math that the Fed chair gave us last week. On the inflation front, 3% headline, 3% core. We probably don't have an October CPI report ever at this point. We'll see if we even backfill it into the data. But for September, which is the inflation report we had to have because that was the annual adjustment for Social Security benefits, this lines up exactly. Both core and headline were at 3% year on year in September. The expectation is that we didn't go anywhere come November, and October at this point is a black box. Now, we also have a bunch of other things on the calendar, but of course, the first key question is, does this back data mean anything, or is it too old at this point to be any kind of relevant for the Fed's calculus? And of course, the major issue here continues to be this. The markets want more rate cuts than the Fed has owned up to, and again ignored that disparity in this last meeting, seemingly saying, okay, we can't commit to doing this because we just don't have the information or the clarity to know. But again, here's some short-term liquidity. Please don't freak out until we find out. But in actuality, what do we see? As rate cut expectations stop getting more dovish and ultimately start to anchor, stock market starts to anchor as well. We haven't had highs here since October 29th, the last Fed meeting, where ostensibly they were starting to pave the way for a pause to see what happens by ending quantitative tightening. Now they've taken a step further. Ostensibly, they learned something between October and December. In October, we can see the markets clearly didn't like that the Fed, by way of Fed Chair Powell's badgering at that press conference, was not sure whether it was going to move in December, and were clearly not mollified by the end of quantitative tightening as of December 1st that was announced in October. So ostensibly, the Fed had to take a step further and say, fine, here's your cut. Now we're going on some sort of a pause to see if, in fact, we're right or not. And we'll take a step further and actually start to expand the balance sheet again, if only by a relatively modest amount, relative to history, not relative to expectations, and for a brief period of time, a closed-end window of some sort. Nevertheless, the markets don't seem to like it. And so whether this data this week is going to move the needle on maybe getting the Fed closer to cuts will be very, very important. Now, we see from what Powell said on this subject, shutdown-affected CPI data may be distorted, requiring caution. The Fed is well positioned to wait for more clarity. Downside risks to employment have increased and upside risks to inflation remain. And the data could be unusually high, this is for the CPI, or distorted due to missing data. So it seems as though this week is not really going to give anything that's game-changing. But nevertheless, the markets will wait for it, and it will amount to event risk. So if we get to the other side of it and nothing has changed, ostensibly we revert to what happened on Friday, which is to say, disappointed selling. Now, likewise on the menu here, we have a set of rate decisions from other major central banks. Bank of England is announcing policy, so is the ECB, so is the Bank of Japan. For the ECB, we can see we're not really looking for major changes, but the shift in policy expectations has increasingly moved into some sort of a less dovish version of standstill. So if we take a look at what the expectation is here, we're looking to move maybe from around 1.93 currently. And of course, the actual rate is 2% for the deposit facility. That's the benchmark. But nevertheless, we are looking at real market rates here as implied in futures. And the expectation is a move of 3 basis points, basically going into the end of next year, from about 193, let's say now, to about 196 by October. So there's nothing going on here for the ECB. They're not really looking to change policy. And that probably helps to explain why the euro has been so buoyant, because obviously the Fed is on course to cut. Next, we have the situation that presents itself in Japan. Here, we're looking at something that starts to look a bit like the bias that we might have expected were we not to have had all of this consternation that we've recently had with the new Japanese prime minister. Of course, there's the elevation of Takaichi Sanae into the top office. She's, as we've discussed, a descendant politically from Shinzo Abe. And to the extent that she's his protege, she favors a much more dovish Bank of Japan. But it doesn't look like things have meaningfully changed course here. We're on a path for a rate hike this week. We can see the expectation is we're going to get to about 1% here over the course of next year, which doesn't account for a whole lot more hiking. We're basically sitting here at the expectation that we're going to go up to 75 basis points this week, and then that sets up for one more hike next year. So not juicy, and after this veer around the prime minister into this more dovish territory, we seem to be back to the path that was prevailing 3 months ago. So not big news here. And then for the UK, we're still looking for rate cuts. We're still looking for quite a few of them. In fact, the outlook has shifted a little bit more dovish recently, but not terribly so. And of course, we'll see what all of this is going to get contextualized in, because the other big piece of data, or big roundup of data that we're going to get this week, is going to be an update on S&P Global PMI numbers, which are actually quality surveys of economic activity that weren't disrupted by the shutdown, because they're obviously not government numbers. And we can see here for Japan, we're looking for basically standstill as ever, this is in the logic of PMIs. So 50 is neutral, above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. We can see Japan here expected to be relatively steady. Australia expected to be just a little bit cooler, but not by much. The big ones here, the Eurozone expected to hold broadly steady. The US expected to slow by a meaningful amount. And the UK, again, steady. So all the action here does not seem to be with what's going on with the BOJ, doesn't seem to be with what the ECB or the Bank of England might do. It seems to be on what the Fed is doing and U.S. expectations. We can see here from global PMI numbers here that global economic activity has been relatively steady since the middle of last year. We're sort of going to a drift right here. We can see at the beginning of this year, we had a little bit of a dip around all of this tariff back and forth, but we've since rebuilt. But much of this rebuilding has been the U.S. And the global economy still depends on the U.S. to carry it forward. Situation is still relatively anemic in both China and the Eurozone, the other two major drivers of global growth. As we've said here before, something like 48% of global growth is just three economies: the Eurozone, China, and the US. And so if you don't get all three of those engines firing, well, then you have to rely on some combination of the others to backstop. But in the current environment, it's just the U.S. that really seems to be looking relatively healthy, again, relative terms, whereas China continues to be mired in a multi-year economy-wide deflation. And the Eurozone is getting a little bit faster, a little bit better, but still very, very sluggish overall. And so really that's what we're focused on here is U.S. growth and the extent to which the Fed is prepared to do more to backstop it. And the risk seems to be that we're going to get some disappointment on that front because the Fed seems to be paving the way for inaction for a while. And judging by the way the markets liked that conclusion last Friday, probably not going to like it any better this week. With that in mind, positioning-wise, I'm a little bit long gold. I'm a little bit long currencies not named the US dollar. I've got the pound here on the long side and the euro. I also have the yen on the long side, but I'm doing that through spot markets because those 6J contracts are just way too big and there's not a clean M6J contract that's liquid enough. So I'm doing that exposure through dollar-yen spot, which I'm short. See our friends at TastyFX about that. Still have a little bit on the short side of Bitcoin, down 4.78%, as we said earlier today, which is helping matters. I peeled off half of this position that I'd been sitting in for weeks on weeks ahead of the Fed last week, and still have half of it on here via put verticals. And I've reloaded a little bit on risk on the short side. Last week's sell-off gave me a great opportunity to pull forward my exposure on the short side of stocks, both through S&P and NASDAQ. I have put verticals on both and looking for that to continue to work this week if what we're talking about here follows as we've discussed it. And that is macro money for today. As ever, we are here Monday through Thursday, right after overtime, a show that I co-host with Dylan Radigan sometimes, but Chris Vecchio all the time. And I'm also writing for the news and insights portion, as ever, of tastylive.com and commenting at Ilya Spivak on former Twitter and Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.